that's solar and why will help the company grow further. They have also given the estimation, they estimate by FY26 and 29 overall CAGR to be between 18% versus 1% in FY20 to 26. So they expect the next 4 years to be a growth year for the company. And last year also have Citi on this particular counter, they maintained the call the target price of rupees 400. They also see that the overall profit to outpace the revenue growth.
Absolutely, and thank you so much, Jasmeet, for joining us with that entire update also coming in. Let's also move on and talk about individual participation when it comes to India's equity derivatives market that declined sharply in fiscal 2026. New trader entries falling even as the pace of traders exiting the market also accelerated. So according to a SEBI study on individual traders, you do have aggregate net losses that incurred by individuals that declined during the year. The average loss per trader also increased, highlighting the persistent risks associated with derivatives trading. So SEBI's study in fact also found that losses were highly concentrated among a relatively small group of traders, you could say. So that's the update that you're looking at when you talk about SEBI's study as well. But with that, it's a wrap on this edition of Markets Today. Thank you so much for tuning in. India Market Open up next.
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
Welcome to India's biggest grassroots innovation movement.
Vande Bharatam, Bharatam, Vande Bharatam.
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
स्पंदन एक पोर्टेबल ECG मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out
and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रासरूट इनोवेटर दिखेंगे वंदे भारतम में। Coming soon on NDTV Profit.
A world of questions. Ideas that challenge the ordinary. Conversations that connect countries and cultures. Where different worlds find common ground. NDTV World brings Nepal's ideas to the world. NDTV Anviksha. Ideas across borders. The Nepal Dialogue. 27th August. Kathmandu, Nepal.
Some of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
I'll ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
"Man lo."
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, No way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
A world of questions. Ideas that challenge the ordinary. Conversations that connect countries and cultures. Where different worlds find common ground. NDTV World brings Nepal's ideas to the world. NDTV Anviksha, Ideas Across Borders. The Nepal Dialogue. 27th August, Kathmandu, Nepal.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew.
You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open.
Very good morning. You're watching India Market Open from the NDTV Profit Suzlon studios, and it looks like it will be an interesting end to a week, which has really seen not much movement but a lot of action.
Yeah.
It's strange. So nothing much has happened in the markets, but a lot has happened outside, whether it is SEBI's order on cash, their latest release on what's happening with retail investors, or even globally, where it's an attempt by the US government to rein in bond deals, which is just not working.
Yeah, it doesn't seem to be working because that's what hit the markets yesterday, right? And on top of that, Tamanna, there is the Japanese inflation. The key price gauge accelerated for a second month. The CPI index, excluding fresh food, went 1.8% higher. And this sets the cat amongst the pigeons. Everybody was thinking, will the BOJ pause? Maybe it won't. Now there's fresh ammo to think that BOJ will likely take a rate action next month. And that could be quite telling.
Yeah, so rate action in the northwards direction.
Yes.
Possibly. Yeah, I wonder, you know, the other thing that comes to mind, Neeraj, is that do crude prices deserve to be at 93? And the reason I ask this, that here you have poor Scott Bessent saying that, listen, we're saying we're going to do economic warfare. We're not going to have kinetic warfare. I don't understand why crude prices are up.
Yeah.
There's enough data and statements to show that alternate routes to the Strait of Hormuz have now been found. Why is crude still at 92, 93, trending higher? Is it an sort of an artificial bump up in that sense, is one thought that comes to mind.
Yeah, you reckon it should be lower?
It should be lower, right? Because what is happening right now, apart from an economic blockade of Iran, which was the case since ages ago, it's not even a big exporter. Is anyone really choked up anymore because of Strait of Hormuz to that extent, how they used to be? So I'm not so sure.
No,
but
that's a fair point. No, I must say that I think Brent is at 94 or thereabouts,
that's
right?
What I'm saying.
Yeah.
It's going on climbing without any real triggers. So that's the question. Can it really sustain? All right, let's take a look at some of the global cues this morning. US stocks fell sharply overnight after bond yields firmed up again. This despite the efforts by the US Treasury to say that they're going to double their bond repurchases, etc. But on closer look, no one's very excited about it. Let's pull up indices for you and show you what was happening overnight in US markets. You had the Dow Jones down over 700 points. The Nasdaq also down about 1%. US futures, very quickly, we'll take a look at whether they're in the same direction, and really nothing much has moved as far as US futures are concerned. But the story is bond yields, isn't it? Now, Treasury yields have rebounded after a day of relief following US government bond buying plan. Why have they done that? Because there's no real sign that the US Treasury is going to
print more money. On closer look, the market doesn't seem to be too excited about it. So you had the 10-year jump and land at 4.7%. The 30-year is back at record highs at 5.25%, and that's kept equity investors uneasy. Oil prices, on the other hand, are also spiking. After U.S. Treasury Secretary Scott Bessent lets out his economic sanctions plan for Iran. We showed you Brent close to 94, between 93 and $94 a barrel right now. But I just want to play out for you what Scott Bessent has said. He's saying the administration is prepared to expand efforts to buy back higher cost debt while staying focused on fiscal consolidation. Listen in.
Mr. Secretary, all bonds have erased gains after your action yesterday. Do you have further actions planned, and what's your reaction to how they've done?
Yeah, well, look, anything that happens within a 24-hour period is noise. And, I think that once the market understands that we are focusing on fiscal consolidation and that we are trying to bring the market back into equilibrium in a thinly traded market, I think I'm confident that bonds will continue declining. We've got a spike in oil prices today that I don't really understand. Our announcement is for economic action, and I think that the economic action will mean that oil prices will come down sooner.
All right, let's pull up Asian markets for you this morning as well. All over the place, high bond yields is not something emerging markets like in any case, or Asian markets like. Nikkei down 0.75%. The BOJ action also waits, as Neeraj was describing. Kospi, for a change, is at a very sedate 0.54% after usually used to seeing north of 4 to 5% moves in any direction. The implied open in India is also showing a bit of a quiet start today, about 28 points up in the green. But I want to go across to Cameron Brandt right now. He's Director of Research, EPFR Global, joining us in. Cameron, from an Indian perspective, the big question has been for a while now that forget about global flows coming back in, at least could they stop exiting? What is your view on how India is placed right now?
Not terribly well from a foreign perspective. Investors continue to recognize India's strengths, but there's a degree of uncertainty, which is definitely manifesting itself in how the AI story is playing out over here. And the narrative is very much that India is going to take a back seat until it becomes clearer where the value add in AI is, at which point India may be able to play to its strengths in terms of how to apply it and how to support businesses in applying it. But obviously, high oil prices are not particularly positive for India, and the rising U.S. interest rates, bond yields, is another strike. So, overall, there's not really a catalyst other than, valuations and a defensive domestic story that would really pull investors back into India. And even though there's a great deal of angst at the moment about whether the vast investments in AI will pay off, certainly from the mutual fund perspective, we're still seeing a pattern that when the market balks and begins to retreat, investors see that as an entry point rather than a signal to run for the hills.
Okay, yeah, well, that's well put. But Cameron, yesterday or day before yesterday, the Bank of America Fund Manager Survey put out India as the least preferred market for foreign investors, right? Net negative 32%, which is the least favorite amongst the Asia or the GEMs. Now, when the foreign positioning itself is at record underweight, and if you are the least preferred, and most things that can go wrong have gone wrong, is that a time from where usually markets could do well over the next 12 to 24 months, because crude prices won't stay at these elevated levels for posterity, right?
Right. Everything changes. And, 2 years ago when we were having this conversation, it was how long this relentless stream of foreign inflows would persist. We now had a pretty lengthy period where certainly the foreign investors have pulled back from India. So, the tide will turn. But quite when, certainly if oil prices resume moving down, that will be very helpful. But I would also caution you, August is is a month where, because a lot of investors are on holiday, signals often get magnified. A few investors can send a signal about an asset class that maybe it doesn't quite deserve. So I think the more real signals will come next month as we move into the next round of central bank meetings, and people start looking ahead to the US midterm elections. And hopefully there'll be a little more clarity about where the US-Iranian conflict is headed.
Just want to get a sense from you, Cameron, on why so little faith on the US Treasury action plan on bond purchases. The relief lasted just about a day. What is the underlying concern there?
I think the underlying concern is that there is no discernible political will on either side of the aisle to actually meaningfully address spending. Certainly the betting is that there's a fairly good chance that control of the U.S. legislature will return to the Democrats in November. But they are certainly not talking fiscal consolidation. They're rolling out more spending plans. So until there's sort of a real reality check, until the bond markets give that, people are going to treat any plan with some degree of skepticism. I mean, I will say, to expect clarity 1 day, 1 or 2 days after the plan's unveiled, I think is, not realistic. But the counterpoint is that though there's definitely angst about the U.S. Fiscal position and demand for higher returns to lend the U.S. money, there's still, I'm seeing in the mutual fund, almost kind of a yield hangover from all the years.
Fair enough. Cameron Brand, thank you so much for joining us from New York this morning on your view on global flows. I mean, that big takeaway, the picture's not looking so rosy from a foreign investor perspective when it comes to India yet. A quick recap of what markets were like yesterday. Nifty saw a spike of 20 points post the CAS in the closing session. The Bank Nifty has seen a spike of about 51 points. Sensex was up 52 points and Nifty closed in the green, snapping a 7-day losing streak. So that was a relief. Just up over 0.6%. Eternal and Shriram Finance were top gainers in the Nifty 50. And you saw Eternal up over 2.5%, Shriram about 2%. Broad market indices were the ones that underperformed, frankly. Nifty Midcap 150 closed in the green, about 0.5% uptick, while MCX and Glenmark were top gainers in this index. For the small cap, also about 0.5% uptick. Sugar stocks were in focus, will probably be in focus today as well, frankly. Balrampur Chini and MMTC were top gainers in the Nifty small cap. Balrampur Chini with a scorching 18% uptick. Imports are now being allowed, so you might see a bit of a receding in the sugar stock rally. All sectors closed in the green except the Nifty PSU Bank yesterday. So it was, I would say, at least we sustained those leads. You're showing a flat kind of a move on the index today. But my question, Neeraj, is that this retracing of bond yields and, the bump up once again or retracing of the relief might have a bit of a negative start for us as well.
Spot on, Tamanna. And frankly, I mean, that is we had two reasons you could argue on hindsight. That one, that the Nifty found floor at 24,000, but also the fact that risk appetite possibly improved on the US Treasury intervention, cooling the yields a bit further. But because that hasn't lasted, does that come off as well? You would argue possibly yes. Difficult to call it per se, but yeah, I mean, the Indian markets haven't really rallied quite significantly. We are at circa 24,000, not at 24,800. So if there are downsides, maybe those two are limited. In fact, there was some broader buying seen in private banks, real estate, select financials as well yesterday, which was very interesting. So that's to be kept in mind. Did some channel checks with chemical dealers yesterday, and apparently solvent prices are rising as well back in China as well as on export parity, and therefore select chemical companies which are present out there in that cohort might actually benefit positively. End users might not benefit positively, so bear that in mind. I think the key argument out there is that if there are maybe 50 chemical companies or 40 chemical companies listed, for 25 or 30 of them, there might be a continuation of what's happened in Q4 and Q1 into Q2 and beyond. But there is a set of chemical companies which will get hit badly because of this uptick in input costs because of China. So you got to very carefully choose, if you are indeed betting on the chemical space, where to bet on, where to avoid, because within this cohort, quite unlike banks, you will have a set of companies which will do very well, but a set of companies which will get hit very badly, and you'll be mindful of that. Maybe at some point of time, we'll try and do some research on the ones which will get impacted negatively because of all that's happening in the chemical space, also in China. So bear that in mind too. Tamanna, I also wonder if one of the other reasons why crude might be elevated aside of everything else that's happening is that China has resumed some bit of buying on crude. Hitherto, they were drawing down on their inventories. Now that that big fish has come into the market, is the market also pricing that in addition to Iran?
Very possible, very possible. This whole thing with, I suppose the concern also is that Iran is not going to sit quietly with all of these economic sanctions coming its way. So no one knows what they're going to do next. The fact that Dubai has shut the gates as its key trading partner, and will others also follow suit? So I suppose there's an uneasiness to wait and watch. And yes, the Chinese purchases getting bumped up could maybe have panned in as well.
Because it is impacting the chemical prices, end chemical prices as well. So therefore, just trying to put two and two together.
Yeah. It's a murky picture, frankly, globally, and all input prices are going up. We've talked about sugar, 40% uptick in sugar prices. Rice prices have gone up. So you are going to have a double whammy with food and crude inflation coming in. Yeah, but as of today, I mean, those are of course bigger fish to fry. But as of today, the fact that the Nifty broke its 7-day losing streak might have some relief. So 24,300 to 24,400 is the decisive zone. The Nifty has shifted from bearish to cautiously positive, but it has not yet confirmed a trend reversal. So today becomes very important, and the first hour of trade becomes very important. Market is essentially saying 24,000 is the floor and 24,500 is the ceiling, until proven otherwise. Immediate support rests in the 24,150 to 24,000 zone. Upside resistance sits tightly at 24,300 to 24,375. A sustained breakout above 24,375 is required to negate the short-term downtrend and open up 24,500. For the Bank Nifty, key resistance locked at 57,800 to 57,900. 57,100 to 57,000 acts as a critical support. So before we get to some of the top stocks this morning, let me go across to Sharad, who's got the F&O setup for us. Good morning, Sharad.
Good morning. The F&O setup actually looks a bit steady. Of course, globally we have seen the yields rebounding and the markets are giving mixed cues, but nevertheless it's still showing a positive opening here. And also the FIs, the buying in the cash market, that seems to be becoming mixed, and a lot of block deals are also happening. The number has actually, you could say, shrink. If you could just show us the FI cash numbers also, that That's a sell-off happening here, but a concern coming in the shorts. Now that's in the highest in the series at almost 91%. But look at the up move in the PCR. Yesterday we had that ratio of 1.07, but that big move of 1.24 has come in the PCR numbers as well. That's important to track. But looking at the stocks itself, how much things are moving. Of course, we have a lot of soft commodity theme related stocks which will be in action. And looking at the overall congestion, this is at 24,200, 300 levels. But yesterday markets actually defended important technical levels. So it will be pretty interesting to understand what happens in the opening session. But let's look at the stocks. What's happening there? Open interest gainers. Where's the action looking like? Largely, you could say there could be a mixed, moves coming in across the sectors, or maybe a churn can be there. But definitely the one which is exposed to commodity risks or the pricing risk, that's where the action would be. And certain realty stocks are also seeing a good short covering as well. So today also sectoral moves is likely to be possible in the F&O space as well.
Okay, let's talk about stocks. We have a lot to cover this morning. I'm starting with Manipal Health Enterprises. In my watch list, recently listed, has as a result of this posted its numbers after its listing for Q1, and I would say not a great set on the face of it. Patient-led growth and specialty care momentum was one of the key highlights. Inpatient and outpatient volumes grew 38.8% and 26% respectively. EBITDA margin impact was led by higher other expenses. We saw a PAT degrowth led by an 89 crore rupee post-tax interest on the NCDs that they raised for the Sahyadri acquisition. Here are the core numbers. Revenues were up 38%, 3,091 crores. EBITDA was up 25.6%. Margin saw a bit of a squeeze from 26.2 to 23.8%, and net profit was down 7.5%. Like we said, there was a one-time cost of 15 odd crores in Q1. KIMS is the other one on my radar, so two hospital companies. They've expanded their Hyderabad presence and signed operations and management agreement with Orivia Hospitals. It's a multi-speciality hospital in Hyderabad, and the agreement tenure is 5 years, extendable by another 5. KIMS will exclusively run, manage and operate these hospitals and will receive 9% of the hospital revenues as fees. Hospital has an installed capacity of around 250 beds. I thought this was an interesting model that KIMS has in place, and we'll see how the stock reacts today. Jeffries on Titagarh has an interesting view. So Titagarh is the third stock I'm looking at on my watch list, and Titagarh has been in the news for various reasons. They have maintained a buy, and the target price they've set is at 990 rupees. They're saying they're going brick by brick up the value chain. They've been included in the approved vendor category for Indian Railways for the supply of traction motors for locomotives. They estimate 4 to 5% annual revenue accretion, that means increase, from that order. They believe the order paves the way for the company's plans to move up the technology value chain through backward integration. And we had the management on a few days ago, and this is what they were talking about, where they're diversifying and they're building up the value chain.
Yeah, quite something. I read that note as well with interest. I mean, pretty cool, really. Let's see how this one does in the session today. The three ones on my list, actually, you could make it 4 because Indo-Borax and Cronox both are listed, and both the stocks were up and active in trade yesterday. Now, what's the news? The news is that Indo-Borax is going to acquire 64.26% stake from Cronox promoters at about 103 rupees per share. The stock was up 20%, Cronox, yesterday, and I think the price is at probably 187 or thereabouts. There is a mandatory open offer that follows for about 25.79% stake at 157.27 per share. For Cronox, that is, and therefore the required implied valuation about 3.8 times FY26 sales, 13 to 14 times annualized PAT. So not that Indo-Borax has gotten it very expensive, Cronox that I'm talking about. It is still 13-14 times PAT, which is fine. I think the thing is, for Indo-Borax, the acquisition is a step towards higher margin specialty chemicals, and therefore they have bought a good asset at a good price. If they get in more in the tender offer, then any which ways the financials are consolidated, there is further consolidation for them. I think the near-term stock performance for Indo-Borax now obviously depends on the acceptance levels of the open offer, how well they integrate the assets, so on and so forth. And we invite the management at some point of time to come and talk about it. For Cronox, which is also listed, like I said, at the current, and we can pull up the stock price of Cronox, for a current price of 187 or thereabouts, or 186, was up 20% yesterday. The fact that the open offer price is at 157, you could call it maybe a bit of a dampener, but if it's not too successful, that you know that the base is set at about 157, 158 versus the current price of 187, and then if Indo-Borax manages to amp up the performance of Cronox, if it stays listed, then well, that could be a shot in the arm. So difficult to say, but Indo-Borax certainly has reacted 14%, maybe positive for it, so maybe it could do more. Crompton Consumer is the second one, has guided, they did an investor day, very quick takeaways, they've guided to 13 to 14% revenue CAGR through FY29, so keep an eye out for that particular piece of performance for Crompton Consumer. The exit EBITDA margin is targeted at about 11 to 12% by FY29 is what they have said. They've also said revenues will double by FY31, margins will exceed 12% at that year, and the 350 crore greenfield plant construction begins in Q4, which will effectively help expand margins. City, many have written, the City note on Crompton Consumer maintains a buy with a target price of 400. They say it's less seasonal now, more scalable. The weather dependent categories have declined from 45% to 20% of the total addressable market, and the successful de-risking of the business model, turnaround of Butterfly, etc., might provide better visibility. Last but not the least, Jefferies on Anthem Bio. They've initiated a buy, the target price of 1050. They say it's a high growth Indian CRDMO with industry leading manufacturing capabilities and a technocrat led management team. It boasts the highest EBITDA margins and ROC amongst Indian CRDMOs, which is contract research and development manufacturing companies. You know, you heard of CDMO, this is CRDMO, which includes the research piece as well. Jefferies expects Anthem to deliver an FY26 to 29 revenue PAT CAGR of 18 to 20%. So keep an eye out for this one. But Tamanna, two stocks that we should, that both of us haven't quite covered, but very interesting. One of them, Wellspin, this massive 17,000 crore order in the US for pipe supply, quite something for that one. And HDFC Bank for raising that $1.75 billion via debt issuance. Quite a large fundraise for HDFC Bank on the debt side, of course, and after so many years.
Yeah.
Two big things.
I think even the initiate coverage on Adani Green. So quite a few others that are on our list. In fact, I believe Mahima is standing by with more stocks that are on her radar. Mahima.
Right, Tamanna, so I'll start with Adani Green itself. Morgan Stanley has gone ahead and initiated coverage on this one, and initiated coverage, of course, with an overweight with a target price of 1525 on Adani Green. What they're saying is that it's powering intelligence cleanly. This is the tagline that they've given. What they're saying is that Adani Green is India's leading clean energy platform. It's combining strong execution at scale across clean technologies. It's improving portfolio quality that supports better cash flow. They are seeing return visibility on a very strong footing with one of the strongest capacity and earning growth profile in the sector. What they're also saying is that they're leveraging scale in a rapidly growing market, especially for future of energy. And lastly, what they're saying is that the Adani ecosystem as a whole is positioned to win. So this is the first one on my list. The second one and the third one are two order wins. RailTel has secured a 164 crore order win, which is for from the Western Coast fields, basically is to establish MPLS VPN network on a 60-month basis, on a rental basis, what they've said. The other one is Satwik Green, which has received a 190 crore order. The order is for supply of solar PV modules and will be executed by March 2027. And the last one is Power Grid. It's proposed to kind of enhance its borrowing limits to 40,000 crore, overall limit to 2.2 lakh crore, and domestic debt limit to be around 35,000 crore. So all of these, will also be on the radar on the back of news flow coming in.
Okay. We'll take a very, very short break here, but we're coming back and talking about all the top stocks of the day. We'll also have Vipul Mathur of Wellspun Corp with more information and detailing of that mega deal. Don't go away.
Some of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
I'll ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
"Man lo."
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
A new Nepal, new possibilities. And
All right, welcome back. You're watching India Market Open. Kush Bora, Parag Thakkar in our studios, and there is so much that we are unpacking today. Welcome. Kush, I'm going to start with you because the week has been really quite blah, to say the least. Do you expect a better close, or are we setting the stage for maybe some kind of a move next week?
Delicately placed. That's how I would put it, and I'll give you reasons for that as well. But again, I have a question on a serious note. See, bonds I don't understand at all. Barely technical समझ में आता है, ठीक है? What happened yesterday? Was it like a band-aid on a fracture kind of a thing? Because the effect didn't last for too long, did it?
Yeah, I think Parag Bhai should be well placed to come in on it, because you were talking about how this was a big relief. The relief was so momentary and fleeting.
Yes.
Because
so
the core issue is not getting solved.
Yeah,
right?
correct. The debt remains high. But the point is that Besant has also said that he is planning to do something over the weekend or early next week to cool down the treasury market. So let's hope that US 10-year comes down. Not only it is good for them, it is good for global equities and everything.
Yeah, and I think the other part also is that unfortunately it's not just restricted to the US. I mean, Japanese inflation has gone higher, and therefore there is talk of that happening. And across European markets, you are seeing yields move up. You know, in some sense, India is an exception to the rule right now, but maybe food inflation hits us as well, and therefore we might also have those issues of a slightly higher inflationary problem. But for now, US, Japan, and most of the other European markets, all of them are facing this debt issue.
Fair point. So, I just wanted to understand this piece better, because now we're so interconnected with all of this, right? And that could well be the next big trigger. Now, from a technical standpoint, what happened on Nifty was that 24,000 support level was respected. The 12-day lower high formation, streak was broken yesterday. But look at something very interesting. The open and the close on Nifty weren't too far apart. I think 6-7 points or thereabouts, right? So remember yesterday we spoke. Gap up to mil sakta hai, but the follow through could well be missing. This is the same view that I have even now. There are some silver linings, right, which is the fact that the 24,200 put has garnered quite a bit of open interest. So there is that support that will kick in. But I think the immediate upside will require some trigger. There is the 20-day moving average near 24,350, 300. That needs to be taken out for this to turn into any kind of trend. Perhaps even 24,500 if I'm being a little greedy, right? So that's the view on the Nifty, where the upsides could be capped. But how you talk about SOTP valuations from the fundamental side, something similar might just play out on Nifty, right? Which is, if you look at the constituents, Reliance, HDFC, ICICI, SBI, most of these heavyweight stocks are very close to their long-term support zones. And by the way, in turn, Nifty also, the 23,800, 24,000 support zone is a strong one on these, right? If something were to break and, if we were to fall from here, things could get ugly. But if there is a positive trigger, a lot of these stocks could take support at these levels and rebound. So hence I said, the index right now and the markets per se are slightly delicately placed. I wouldn't take a long bet on Nifty just yet. My preferred index to go long is Bank Nifty, which is respecting the convergence of the 20, 50 and the 200-day moving average at 57,500. Here too, momentum is an issue, consolidation on. So 56,800, 900, that's your stop loss. You could stay long on this one.
And what about stocks this morning?
I'm going with all three long positions, SAIL, Ipca Labs and Jaiswal Nico.
these three on the long side. Yesterday we did see some traction in the metal names. So sale for targets of 179, 185 with a stop loss at 171 is a long call. Ipca Labs also had a very good run in the last few sessions. Yesterday was a mild consolidation on the back of very thin volume. So nothing to worry about there. 1960, 2030, these are your targets. 1850 is where you keep that stop loss. And Jaiswal Nico after a while makes it on the list with good momentum, positive up moves from price and volume action. So 9600, these are your targets. 90.5 is where you keep that stop loss. Two quick updates. Gokul Agro hit the first target of 253, 5%, 4.5%, 5% thereabouts, but gave away quickly. And the second one, PNB Housing also hit the first target of 1200. Guys, as a matter of practice, I would suggest when the call hits the target one, book partial profits. It's up to you whether you book 25%, 50%, whatever, but book some profits. This is the kind of markets that we are in where you want to keep taking money off the table every time we go towards resistances or targets.
Before we talk about more stocks, I just want to spend a second talking about the SEBI study on derivatives traders and their actions which came out yesterday, and we can just play whatever details we have right now. There's some looks being exchanged between Parag Thakkar and Kush Bora. Did I miss something?
No. My knowledge is very limited on this topic, so I looked at Kush that he will cover.
So, okay, now participation has dropped. Mota moti headlines. Participation has dropped. Loss ratios have as a result also dropped. We had 95% losses. Now 87.7% of active traders are booking losses. Out of them, 23% are making 90% of the losses odd. What is the picture? Has everything that regulators tried to do to cool participation worked?
Okay, so the reason we exchanged looks or I smile is because this topic is very close to my heart.
Yeah.
Warren Buffett rightly called derivatives options as weapons of mass financial destruction, and they're playing out that way, and there cannot be, sadly, a more clearer depiction than what's happening in the Indian markets right now. My suggestion, agar mujhse pucho, to I will tell all retail investors either to not participate in derivatives at all, or participate in a very limited capacity that even if you lose that money, it doesn't change your lifestyle. Or if you're a professional trader, derivatives trading, there are a lot of strategies in derivatives that make money, but for that you need to make this practically your full-time job, right? So unless one of those things happen, you're better off staying away from these. Do we have the number? Yeah, look at the number of, or look at the amount of losses. It's still staggering. I am so happy that SEBI did what it did because it's now reducing the participants. Of course, it's having a contra effect as well, where the prop trading is also being affected, which is perhaps a bit of a worry from my perspective, but
why
very happy. No, because the overall participation goes down, and you've got retail desks. There are people who dedicated their lives to derivatives trading, and they are also kind of facing the brunt. From what I hear, the participation from the prop side on the weekly derivatives is actually not all that great because the returns, the yields are not as high. So that is a bit of a concern, but very happy that the retail participation is going down, the retail losses are going down, and I hope this trend continues.
I actually think that amongst the casualties of that could well be the BSE stock today. Option volumes are down, and that impacts earnings. So therefore, keep an eye out from this perspective on the stock of BSE as well. That could well be an issue.
Yeah. Parag Bhai has that, I knew this was not a good idea, so anyway I stayed away from it kind of look. But it is, I think, an issue that matters to market participants. So important to have your comment on it.
No, I completely agree with Kush that it is very dangerous for retail investors to start trading in derivatives market and to take leverage positions. And I think that has increased significantly post-COVID. So I think that warrants a look, definitely. And that's why sometimes I'm not very bullish on this stocks also related to
your capital market stocks.
Which benefit from this derivative trading, especially.
And you can see the policy direction on it, which is to not really encourage, if not actively discourage, at least to reduce the encouragement for it.
Just one very quick statistic. If I'm not mistaken, India's per capita income is I think about 2 lakhs per annum, right? यहाँ पे अगर आप देखो तो एक बंदा 1.25 लाख रुपए का लॉस कर रहा है. You're practically losing
No, but that's a very
That's a
skewed way
number.
of looking at.
I know it is
Look
the
at
number
the
of
size of
participants.
the population, the number of people in equities, at the cohort who watches channels like us. उसमें से आप derivative traders निकाल रहे हो.
उसमें से भी आप ये देखो, the number of guys who are making losses are under 30. That chunk is also quite meaningful now. So at the start of your career, losing this kind of money.
Yeah. So per capita income is not a
maybe not the best metric,
is not
but
an example. It's not even apples to oranges. It's apples to a forest. There's no comparison there. I want to talk to you very quickly about this HDFC Bank story, Parag Bhai, because this is something that you track, and there's an attempt, of course, to show this as a big move for HDFC Bank, that we've raised these massive bond amounts right now. How do you look at it when equity participation is a little dull and investors are figuring out what's happening?
Yeah. So basically, one thing is very clear in my mind. There is no problem in HDFC Bank in terms of lending practices, right? The lending practices are prudent, and that is what makes a bank a successful. Deposit franchise should be strong and lending should be prudent. So on both that fronts, basic fronts, HDFC Bank has no issue. The only issue is that whether the CEO gets extension and all those board related things. And I would say that this is a good accumulation opportunity from long-term perspective.
But why do they need to raise so much money?
No, because they have to lend, right? And they are at a CD ratio which is 96%, and deposit market is tight in India. So they are taking advantage of.
So would you see this as a positive move or a negative move?
So basically, it actually changes nothing.
Oh, so
it's a neutral event. It's kind of, you are funding your loan book through various sources. This is one of the source.
Okay, so it's really not a big moving point one way or the other as far as HDFC Bank is concerned. All right, let's talk a bit about Naveen Fluorine. It's reiterated its 20 to 25% FY30 growth target. Margin outlook remains stable despite input cost pressures. Varsha, there was an analyst meet, I believe. What is the key highlight from that analyst meet?
Well, yes, absolutely. So there was an analyst meet, and hence management has reiterated diversified growth outlook. Growth visibility remains strong across all the segments. Advanced materials, CDMO and specialty chemicals, if you see, are all expected to contribute to growth, and hence have reiterated long-term guidance of around 20 to 25% CAGR till FY30. And balance sheet discipline remains a key focus. But talking about segment wise, so advanced material will be the key growth driver for the company. Well, 10 to 15% of revenue growth is expected over here, or rather they'll also contribute 10 to 15% of FY30 revenue. Focus is on semiconductor, electronics, defense and data center application. CDMO is expected to augur well for the company. They're expecting $100 million CDMO revenue target maintained for FY27. They are seeing healthy visibility when it comes to Fermion contract also, and expect 3 to 4 molecules approvals over the next 12 months. Onto the margin outlook, if we see raw material inflation remains elevated, higher freight costs is impacting exports, especially US. Around 80% of cost inflation has been passed on to customer, and so in Q1, if you see, Naveen Fluorine did around 32 to 34% of EBITDA margin. They are expecting this to maintain for Q2 as well. But yes, raw material inflation is one of the risks that management also sees. But overall, they are expecting good growth. Advanced material will lead that growth, and CDMO and specialty will also do well in coming years.
Okay, Naveen Fluorine. The management has painted a positive picture on their analyst meet, but on the entire space, Parag Thakkar, any views over there?
So Naveen Fluorine has continued great momentum. I think stock has also given phenomenal returns within the chemical space. And their CDMO business is, again, this is a business which has a long-term contracts. So when that shows traction, you actually get a good multiple also. So nothing wrong in it, only that their cyclical part of the business, that particular chemical business, refrigerant business, that might see a cyclical headwind also. But I think stock has done really well,
It has done really well. You have to admit, I think you take almost any cohort or time, Naveen Fluorine has actually performed very well. Trades at about 54, 55 times trailing earnings. forward earnings circa 40 times. So it's not cheap per se. In fact, speaking of chemicals stocks or CDMO stocks, just watch out for that Anthem Bio note by Jefferies as well. We spoke about it earlier in the day, but that's the other interesting one, and who knows what that stock ends up doing as well. Parag bhai, by the way, since we are speaking of chemicals, did you get a chance to look at this Indo-Borax acquisition of Cronox?
No, that I have not looked at.
Okay, let's leave it there. But anyways, both the stocks did really well. No point in asking Kush about the charts, because when a stock is up 20%, my presumption is that it will look well. So Cronox was up 20, Indo-Borax was up 14%. So, well, interesting. The other one, which I want both of you to focus on, and Kush, I'll start with you on this, is Crompton Consumer, a stock which is fairly, a lot of people like trading this one as well. There is a analyst day that they did, and while we get Parag bhai's view on that, how is it for a trade?
Actually, it's not such a great setup in terms of trade, because there has been a selling pressure. The stock did rebound, from its April lows. Then again, you're seeing selling pressure. There has been the volume also has been pretty ordinary. So I would say yes, while there is an attempt to find support at about 240 thereabouts, not enough momentum, not enough volume action to say that this could perhaps head higher. So on the upside, if 265 is taken out, then perhaps. If not, then I think the stock could just consolidate between this band of 240 to 265.
Did you like what they said though, Parag?
Yes,
13-14% revenue CAGR, exit EBITDA margin.
So that translates to around 20% EPS growth, whatever they said. And currently it is trading at 24 times FY28 earnings. So very rarely right now you are getting a stock where PEG is 1. This is one of those stocks. Plus another good thing.
Just for reference, sorry, PEG is price earnings to growth. So therefore you look at the P multiple divided by the growth rate, and if it comes to 1, which means that the company is being valued at 20 times and the growth is also 20 times. I think that's
so it is 20, here it is 24 times 24, and 20 yeah. And the other thing is they have reduced seasonality in their business. Which has come down from 45% to 20%, which is a very big positive, and that would actually logically that should translate into multiple re-rating also, in my view. That's a good point which they have done. And plus it is a debt-free company and a good 18% ROCE company, and stock has not done anything, actually anything.
I was actually going to come to you on that.
So basically that is the thing which I love the most.
Kuch to precedent hona chahiye. Let's pull up 1 year, 5 year.
That is the thing which I love the most.
Crompton. Okay, so but
plus this point, addressable opportunity has also increased. The Butterfly brand is doing well.
43% down over 5 years.
Fantastic, na? Superb data point.
No, I have to ask you about this, because you don't know if it's going to have. There are stocks which have not performed for 7 years, 8 years, 10 years.
Yeah, but I like it.
Why do I want to be stuck in the middle of that cycle?
No, because I don't see. I see value. 16,000 crore market cap में मुझे आज company मिल रही है, which is doing a EBITDA of 750 crores, and there is no debt. Okay, and this is going to grow at 15, whatever. If actually what they can deliver, what they have promised, it is 18 to 20% growth. From last 4-5 years, if you see, the growth was hardly anything. So the growth trajectory is changing, and I am getting the stock at the same price.
So the basis of, or the thesis of this is confidence in what the management is claiming.
Yes.
That the growth trajectory will change.
And anyway, I am not going to lose much, right? Because stock has not done anything. It is nobody is in profit in that stock.
Okay, what an advertisement for a stock. Okay.
So बेच के करेंगे क्या?
That's true. But खरीदना चाहिए कि नहीं is also the question.
So that is different, and basically I don't own the stock up till now. I am just thinking. That's
also telling. Okay, Samit Sarkar joining in with what he's heard on the street. What's the chatter this morning, Samit?
Quiet.
The first stock on the list is Unimec. Now, dealers are indicating that there could be a potential fundraise via QIP that could be announced very soon. So, keep an eye out for Unimec. The second stock on the list is Central Mining and Planning. Now, there was a selling pressure here on this counter. DI was a seller here is what dealing rooms are indicating, but that selling is largely over, and the stock could bounce from the current levels is what dealing rooms believe for this counter. For Zydus Life, there are buy flows on the FI desk. Delivery volumes are seen on the higher side. For DCB Bank, there are some buy flows on the PMS desk. Dealers believe that there could be some P investor that could come in into DCB Bank, could pick up stake in the bank in the near future. So there could be some fundraise and a private equity investor might infuse funds into DCB Bank is what dealing rooms are indicating. A couple of other stocks that we did indicate earlier, yesterday in fact, KFin Tech, there was a block deal. We did mention that Invesco and Mirai were the large buyers in the block deal, and that has come out to be true in the bulk deal data. And Amrutanjan was part of our segment yesterday where we did say that DSP was a seller, and if you look at the bulk and block deal data, DSP was the major seller for Amrutanjan, a big block deal that took place yesterday in this counter.
Okay, thank you for that, Somit. So those are the list of companies that are doing the rounds or have buzz in the dealing rooms. Any of these that are on your radar, Parag bhai?
So DCB is under my radar. DCB is a stock which I own also in the portfolio. It is a very, very cheap stock. I would say 6p, 0.9x, very cheap, although it has gone up. Like last mover day we were discussing at 135, today it is 188. So it has gone.
This is from last Diwali Muhurat.
Yeah.
So okay, so 1 year chart, if you look at
so stock has done well because numbers are absolutely great. They are doing very well on margin front, on cost efficiency front. And it still remains a very cheap stock. I think logically it should go to 250 very soon.
Okay, logically it should go to 250. But it's also, if you have that BFSI sort of a leaning, isn't it? So DCB comes into that picture as well.
Actually, that leaning is mainly because of the fact that in lending space, I would say not all. I would say that the valuations are very attractive.
Okay.
One of the point is valuation, and you have a compounding story over there. Till asset quality is good, and asset quality up till now is holding on very well.
That's fair enough. That's fair enough. DCB on charts, are you looking at, Kush?
ठीक है, near term momentum बन रहा है, it's consolidating, maybe above 200, 205 we'll see, but I have better picks in the space, right? I've got Karnataka Bank which is doing fabulously well, Bank of Maharashtra which is consolidating, so I would rather bet on some of these names. DCB Bank also has shown decent uptick in the recent times, so more of a hold rather than a fresh buy for me, and if I do have a position then I would keep my stop losses at about 160, 165 support zones.
Okay, in a bit we'll also talk about sugar, of course, so we'll save that conversation for then. The other small development that happened, Parag Thakkar, is that IRDA has barred many firms, but Niva Bupa is one amongst them, from opening new offices for next 6 months over expense limit breach. So the regulatory action on select pockets, including health insurance, right, is fairly stringent. It's not a very large firm, but can this impact the sentiment negatively?
Yeah. So I think this space is actually going through a lot of disruption. If you see ICICI Lombard's results, also claim ratio went up significantly. So I would like to stay away from this space as of now.
As an investor, any of the health insurance or the
general insurance, I would say.
General insurance. Okay. Fair call. Okay, let's focus on sugar. The players have actually yesterday not some sweet gains. Maybe you could argue this week as well. But there could be some further developments that could make the space even more interesting. Remember, higher sugar prices could also mean that FMCG companies could actually not have a sweet outcome because global supplies are tightening. Higher sugar costs could squeeze margins as well, especially for companies with greater sugar exposure. Somit Johnson with more details firstly on this. Somit.
Yes, if you look at the sugar prices in the Indian market, they have increased by around 20% so far. What we have seen, the increase in the sugar prices, if you look at, and there are multiple reasons behind this. Firstly is the Europe output, which is expected to fall. In fact, lowest in a decade is what analysts are estimating. Apart from that, there is the El Nino impact, which will have an impact on India and Thailand production. And also, if you look at the Brazil production, that has been much lower compared to what it was earlier. So because of largely these three factors, we are seeing a rise in global sugar prices, and the Indian market also, the sugar prices are up as much as around 20% so far. So yes, FMCG companies will see a big impact of this, and Varun Beverages will see the biggest impact because sugar as a percentage of raw material for Varun Beverage stands at around 20 to 22%. For Britannia, it's around 7 to 9%, Nestle around 4 to 6%, ITC and Dabur anywhere between 3 to 6 odd %. Apart from that, the other companies that are there is Tata Consumer, 1 to 2% impact, just HUL less than 1%, Marico again less than 1%, and for Godrej Consumer and Colgate, it's a negligible impact that would come in because of higher sugar prices. But because of this higher percentage of raw material cost, what would be the impact on margins and EPS? We have tried to get this data for you. For Varun Beverages, the margin impact would be as much as 97 basis points, and that is nearly the EPS impact would be around 5 to 2%. For Britannia, around 34 to 44 basis points would be the margin impact. EPS impact around 2 to 2.4%. For Nestle, 17 to 25 basis point will be the margin impact. EPS around 0.8 to 1.2. For Dabur and ITC in fact it's largely negligible on a consolidated basis. The EPS impact would be less than 0.2%, and for Dabur the EPS impact would be close to around 1 odd % because of the increase in sugar prices. But we need to note few things here. Firstly, FMCG companies do carry inventories, so the impact would not come in at this point of time. Also, they have forward future contracts which have been tied up with their suppliers, and apart from this, so because of these two factors, largely the impact would not be visible right now on their financial, but going forward we could see this impact if this higher sugar prices continue to remain in the market. Then it would start impacting their EPS, and but right now there won't be any impact because of the inventory and the forward contracts that they have.
Yeah, good point, Samit, and excellent data on the impact on companies. But just on inventory, to add that the government has put out a notification on inventory limits for bulk users who use more than 10 metric tons of sugar. That means they can't hold more than 15 days. This is effective September 1st onwards. So there are stock limits already coming into place. Amit Purohit, Senior Vice President of Elara Securities, joins us on the phone line for more on this. Amit, a very good morning to you. What is the kind of impact you expect for confectionery makers, FMCG companies in the listed space largely because of a tightening of sugar prices and availability?
Yeah, hi, good morning. I think we have seen such cycles in the past as well. What we've noticed is that the impact may not be that significant as I feel that most of these companies, even for Varun Beverages, much of the season is actually now behind, because first half is almost like 60-65% of its revenue. And the second half is slightly lesser in terms of the overall contribution. And the seasonality does play a role. Plus, I think there will be some bit of inventory. I agree that from September onwards, things would have some changes. But having said that, the season for Varun Beverages would probably already be behind. And in earlier cycles also, they've been able to manage it a bit better. On the other names, basically, if you notice that most of the FMCG companies do have good pricing power in general to kind of pass on the impact of these input cost inflation. There has been recently crude-based inflation, which was far more steeper than the sugar part, which we have seen recently. And hence, I would say that this would be they will be able to handle it a bit better.
No, I'm sure they'll be able to handle it a bit better, but just coming to that point of stock limits that have come in, right, and possibly could even get tighter if the global sugar output becomes lower. What then would be the impact? And look at it cumulatively. Sugar prices at one end, high crude prices at the other end is going to impact packaging costs. Are we looking at a hit on margins for FMCG companies in the next couple of quarters?
So, there is a one important point is that while there could be some gross margin impact over the next couple of quarters, these companies have some levers to play on, whether it is advertising spend or some other expenditures, cost optimization. While this Q1 quarter, if you see, they've been able to manage it well despite the higher crude price. Q2 is when you would see the impact on the gross margins per se. Having said that, most of the companies' commentaries have been indicating that this year they will be able to manage the margins given by driven by one, price increases. Some bit of impact will be there on the gross margins, but the other cost and ad spend that could help them to actually kind of restrict any sharper fall in the gross EBITDA margins performance.
Okay, okay.
Amit, just the other aspect is that while the last 3 or 4 years, this whole story had shifted from them being, the earnings being pure sugar dependent to being ethanol companies literally, and sugar being an ancillary, if you will, in terms of an earnings contribution. Is the picture slightly different now because of the beta that sugar could provide, or not really? I'm talking specifically about FY27.
Sugar, I mean, historically also, barring Varun beverages, which we have, but there also there is a concentrate which is provided by Pepsi, where the arrangement is slightly different, and hence at an aggregate level, I don't see a significantly negative impact to be worried on. What I'm saying is that it's all relative, right? So when you look at something like a crude going up versus a sugar going up, I think probably they will be better placed to manage it, this inflation.
FMCG companies better placed to manage the sugar inflation, I presume, is what Amit is trying to say. Amit, we'll have to call it a day here though, but thank you so much for joining in for that very quick update. Talk to you in person soon. We have to take a very, very quick break. Come back with a pre-open session.
Some of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
I'll ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
Man lo.
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
A new Nepal, new possibilities, a new opportunity for regional cooperation. NDTV World brings together the voices defining the next chapter of India-Nepal relations. Nepal's Foreign Minister, Shishir Khanal, Finance Minister, Dr. Swarnim Vad.
All right, Tamanna, why don't you start?
Okay, welcome back. We have just about 20 seconds, I think, to the pre-market opening. And while we wait for that, I just want to look at what are the areas where we could have some kind of relief. IT has been one of them, where you have some respite for the last couple of days. In the picture of bond yields gyrating like this, how do you think IT companies are going to stack up?
So basically, see, IT companies simultaneously opposite is this AI semiconductor trade. One day one thing is up, the other day the other thing is up. So I think the market is confused, and so is everyone. But I would like to say that in IT companies, at least some of the meetings which I have done recently, I think emphasis was constructive one. Where they are confident of 9 to 10% CC growth, which is decent in this environment, with 14.75 to 15.75 EBIT margin, which is also decent in my view. So at least about 10-12% EPS growth is what is looking at. But IT remains a tactical buy on dip, and then might be a trim on the rise. That kind of play for me.
Okay. Pre-open rates starting off, and let's just mark what the markets are showing this morning. Remember, yesterday there was a bit of green on the screen, What do we do today? Is it a flattish start or maybe with a bit of a downward bias? A lot of stocks will be in focus today. Welspun Corp, first off the block. Let's just see what that one is doing in the session today. Well, won't be surprised if it is 20%. It could well be 10% as well. It could well be 13% as well. It's a very large order. 17,000 crores is large for any firm, even for Larsen & Toubro, by the way. So therefore, Welspun Corp getting it is a big shot in the arm for that one. So we'll probably have that do well. Indo-Borax and Cronox, both stocks in news. Indo-Borax going to acquire Cronox at a lower price though. So Indo-Borax had rallied 14% yesterday. Cronox, where the open offer price is 157 by the way, after going up 20% yesterday, for now seems to be showing a bit of green on the screen. Crompton Consumer and Investor Day takeaways positive. Wonder if that stock is reacting. HDFC Bank has raised $1.75 billion in the biggest overseas fundraise that the bank has done. I don't know if it brings about a bit of a trigger in the stock or no. Sugar will be in focus, and Niva Bupa has got IRDA has barred Niva Bupa from new offices. That stock is down 7%. And Tamanna, you were right. Sugar is starting off on a weak footing. At least seems that. Balrampur is down 7%. I wonder what the other sugar names. Let's pull up Triveni. Let's pull up Dhampur. Let's pull up Renuka. Maybe all of those could also be facing some bit of stick. Actually flattish for now.
Yeah, so they've allowed some extent of sugar imports. So those import restrictions have been lifted. That's really the news trigger, and which is why you might see a bit of a slide back in some of those sugar names. But yeah, Welspun Corp is the exciting one today. Advent Hotels taking a bit of a push down, and Railtel. I just want to mark Railtel because quite a few announcements coming in on Railtel for the last few days, and a fresh order was announced overnight as well. So that's stock about 3% up, and we'll come to that. But we should look at gold prices. Now, gold prices have jumped 12% from June lows, boosting collateral values and loan eligibility for gold financiers. You know, let's just talk a bit about what this means for gold financiers who are listed. Sharad, joining in for more.
Yes, the gold financing stocks are buzzing in trade, especially on the positive side because of the jump coming in the gold prices. We have seen that, of course, that impetus coming in after the bond buyback announcement coming in, almost 12% up from June lows as well. Looking at the key details about how things are moving is especially after the Treasury announcement which was there, and we had seen that up move already in the last 2 to 3 odd sessions. But what does it actually mean? How is it beneficial? There are these 3 reasons: higher collateral value, larger loan eligibility comes, and the loan to value risk that comes down, and that augurs well for the gold financing companies. But let's just look at the key numbers, how things pan out between the loan AUM, gold loan AUM and the total loan AUM. Of course, we'll be focusing much more on Manappuram and Muthoot Finance, but the question arises if these stocks have already run up a lot. Are the valuations comfortable or not? That's the big question everybody is talking about. Let's look at the other key details about these stocks. Largely the return potential is also not so much. So analyst community is not that bullish going ahead for the next 12 months because the run up has already happened in these counters. But yes, for the short term basis there is a good move happening. This is the valuations which I'm talking about, and at times some questions are definitely there. It's not at its highest levels, but nevertheless it is at a premium to its long term average numbers. Key factors to watch out will definitely be volatility in the gold prices, and tighter regulations are also there from RBI. So it's not all full, rosy picture for the gold financing companies, and maybe a technical up move can be there.
Okay, just want to get a sense of how to ride this, apart from if you went back in time and bought gold and if you had actually watched NDTV Profit. By the way, we had a lot of experts coming on about a month and a half, 2-3 months ago, and saying go out and buy gold because prices are going to bounce back. But how would you look at a Manappuram and a Muthoot?
So my view is that because gold prices are on the up move and dollar index is falling, and now it is below 99. And I would say that whenever dollar index falls, gold has to go up. So from that perspective, as he pointed out, that security perspective, the chance to give more gold loan to a same person increases, and so Muthoot and Manappuram can do well. But one longer term structural problem in this sector, gold loan financing, is that every NBFC is entering into this. Yesterday AB Capital also announced, right? So I would say that any sector, this is a common problem, any sector which does well it becomes, everybody wants to enter in that space, and then it becomes cluttered, and then there is I would say, pressure on margins.
Yeah. Also viewers, I think Parag Bhai yesterday pointed out a good thing, which is that when competition increases, even if the TAM is very high, if not earnings, then multiples tend to cool off a little bit when there is higher competition. So companies may continue to do decent on the earnings front as well, maybe. But if the multiples come off, then even if the earnings are rising, the stock prices may come off. So please bear that at the back of your mind. So Parag Bhai, you're not constructive buying, investing into any of the gold loan finance companies?
No. Because I feel that it is the as you rightly said, there are so many players wanting to come. We saw Piramal Finance announcing entry into gold loan. Now AB Capital, everybody will come in gold loan.
Yeah, and banks might also do that.
And
right?
plus, on one hand, you have SBI offering gold loan at 9%.
Exactly.
So higher ticket size gold loans anyway is having a competition because banks want to lend there, and high yield gold loans, which is low ticket size, 50,000 rupees and so on, there many players are going to come. So I would say in near term you will have a good bounce because gold prices are going to go up. But long term structurally, I would avoid this sector.
Just that small behavioral trade is slightly personal financials, but so many people have gold and yet take a personal loan at 15-16%. Whereas you can actually go out, mortgage gold and get loan at a lower price. So that cohort is still to be tapped.
SBI chairman has clearly said, right, that some of their personal loan customers are now taking gold loan because it is 300 bips cheaper.
Yeah, exactly. Which they should.
Yeah,
because somehow in India, people take personal loans without realizing that there is a whole market out there. Now, loan against mutual funds as well is available at 9%, right? Versus taking personal loans at some 16-17%.
I want to just talk a bit about Colgate-Palmolive very quickly.
Again, resignation.
Okay,
right?
I love this. We finish each other's sentences on this table and thoughts. Okay, so there is a change in the corner office. Manish Anandani has come in. There's no resignation. There's no resignation.
Prabha
has been moved to an APAC, Vice President APAC position. So there's no resignation at all. She's been moved. Now you can look at it as a promotion. You could look at it, in corporate terms, sometimes they say kicked upstairs. So you can look at it whichever way you want. Manish Anandani has come in as MD and CEO. He was with Kenvue. 30 years experience, etc.
I think J&J also, right?
J&J also, Pepsi also, and I think has had a previous stint with Colgate. So he comes in. So there's a change in the corner office. The numbers this quarter was okay. And Prabhav has had a relatively shorter stint in this position.
Yeah. So numbers were okay. I think the analysts meet disappointed investors and analysts where they spoke about more focus on volume, so margins will be compromised and so on and so forth. But I think the valuations have corrected a lot. There's little to lose in. You might have to wait patiently, but valuation at 33 times for business which does 90% ROC and. Of course, right now market has become very brutal in the sense that market only rewards growth. There is no importance given to the intrinsic value of the business. Right now, everybody wants just delta. And Colgate with delta kahan se aayega? It is fully penetrated category in urban India at least. So I would say that premiumization se hi whatever earning growth can come. So I would say that it will not rise too much, but I think it has fallen significantly already.
So no big move because of the change in the corner office due to the size and nature of the company?
Correct, yeah. Hardly you can move the needle in this kind of company, which is fully penetrated.
Yeah. Maybe get people to brush more times a day at the most.
Or increase the diameter of the hole from where the nozzle comes in nozzle.
It's a case study. Squeeze
but this was such a big management case study, right?
To get people to use more paste. Okay, let's talk about the big brokerage call of the day. Sharad standing by with an interesting company on his radar. Sharad.
Well, the stock is Urban Company and UBS has come out with a report. It's an initiate buy rating and the target price, if you look at it, it's at 180 rupees per share. Now, they have stated that they are India's largest online home services platform and this market is entering its Blinkit moment, and that's the term which has been used by UBS. They believe the company is at forefront of this evolution and the right product market fit is something where the bullishness is coming in this counter. Overall, looking at the balance sheet, it is strong and the execution track record shows that more unit economics improvement can happen going ahead as well. Now they believe that the market is not fully appreciating the India home services growth acceleration right now. So there is a mismatch here, and that's why the bullishness is coming for this counter.
Urban Company, interesting story. Interesting
Very.
story, and especially the commentary there, they're saying this is their Blinkit moment.
Are you a user?
I think most people are in one way or the other. My only question is that a lot of their verticals have now individual competition coming in. So for domestic help, for example, there is competition coming in. For their beauty services, there is competition. There's a Yes Madam service, which clearly Neeraj is like, what are you talking about? But so each of their verticals have competitors coming in. So we have to see how that pans out.
I love that about India. Just the TAM is so high, it allows smaller players with niches within a small company as well to come out and build a business of their own. Quite something. Okay, the other piece that we spoke about was that 13% of F&O traders make money, the rest lose money. Amit Goel of Blue Oak Wealth is probably in that 13%. He joins in right now to talk about his thoughts on the markets and specific stocks. Amit, good morning. Thanks for joining in. And yes, you can say that compliments accepted, but give us a trade on the Nifty on specific stocks.
Yeah, hi, good morning, Neeraj, and thanks for having me here. It's great to be here as always. If I have to speak about straight away, if I have to dive into the stock picks, I would say Grow, Acme Solar, Cohance, and Cartrade are my top picks for the day. If you look at Grow, decent enough volumes yesterday. There have been some relatively strong volume upticks, and the price has also, taken support at the moving averages. And yesterday's strong up move points towards a possible up move towards 220 levels, keeping a stop loss of 188. Now, coming to Acme Solar, there is some bit of a RSI negative divergence on the daily time frame. However, the price action is fairly positive, and once it starts moving above 400, 406 levels, one could possibly take a punt here for targets of about 430, 435. Then we have Cohance. Cohance is a stock which has been in a sideways trajectory for a fair bit of time for the last couple of months. So here, what I'm looking at is yesterday's strong price up move along with strong volumes gives me some bit of confidence that there is some momentum building up in the stock. So there could be a possible breakout from this congestion area for targets of about 533, keeping a stop at 438. Finally, it is Cartrade. On Cartrade, there has been this is a repeat recommendation for some time now. We have been bullish in the stock from 1800 levels, which it has seen a very strong run up. After this recent congestion, it is again looking at building up some momentum. So keeping a stop at 2690, one could look at targets of about 3200 levels.
Out of the four, which is the one that you have the highest conviction on?
I think most of the charts are all looking good, but Acme Solar would possibly be my top pick.
And Kush Bora, your top call for this morning, Kush?
Yeah, I'm going to go with Jaiswal Nico. Good price action, healthy volume action, relative outperformance apparent. So Jaiswal Nico is something that you can focus on for today. To reiterate the targets and stop loss, 96 and 100, and the stop loss at 90.5.
Okay, one topic, Kush, before we get in, apart from in the let's look at the Nifty topics, because I think the Nifty doesn't get that much action. What is one large cap topic?
L&T is starting to make all the right noises. So this is something that you can definitely keep on your radar. 4100 is acting as a technical and a derivative resistance. So keep an eye out on L&T.
Okay, so a lot of ideas for you this morning, viewers. This Friday morning, we'll start off flattish maybe. The question is, what does IT do for the third or the fourth day on a trot? Does it kind of give some strength? The market breadth is positive. The index is starting off flat. Bank Nifty is flat. Mid cap index is flat. Are the small caps doing well? Let's bring them up. About 1/3%. Not bad going. And can I pull up Nifty IT once before we move on to the whole grid? Well, about 1/4% lower for Nifty IT. So this one is kind of cooling off after 2 or 3 days of gains. Let's get the heat map up on the screen. Even Stevens, no, actually more green than red. Let's look at the greens first. Eicher Motors in the green. Kotak Bank, second time in the last 5 days or last 3 days it's coming up amongst the top 5 gainers or top 10 gainers. Shriram Finance in the green. Eternal in the green. Nothing dramatic really. It's kind of a very flattish. The top gainer and the top loser, less than 1% each on the upside and the downside. HDFC Bank about 0.4% higher, so that's not bad. Mahindra and Mahindra is about 0.8% higher. So autos, Tata Motors PV, M&M and iShares being in the top 10 means autos are doing well. Select financials are doing well. What is not doing well? Grasim lower, JSW Steel, some bit of stick for TCS and Infi, and that explains why IT is down, and Reliance is in the red as well marginally, so that probably balances out the gainers in the banking space, but nothing too dramatic in the large caps, Tamanna.
Yeah. Eternal showing action once again, and action in relative terms. India VIX slightly elevated, but that's okay, still muted really under the level of 11. So nothing much happening there either. The advanced decline ratio is positive, which is a good sign when you have US markets really roiling under bond attacks, so to speak, and emerging markets also mixed. Our advanced decline ratio is good. Let me pull up for you the mid cap and the small cap, because the mid cap is completely flat. So you have truly the broader markets that are participating, 0.25% up on the Nifty small cap 250s, individual stocks, and the breadth is looking decent. Clearly, investors are going hunting right now for better ideas. I want to pull up the sectoral heat map if we can, and just take a look at what's working there. Nifty Realty showing interesting signs, 0.75% up. Metal stocks are doing okay, second consecutive day that metals is showing some action. Nifty IT taking a bit of a knock, and that could be that bond resurgence impact in the US. FMCG stocks also looking weak, but nothing major. I mean, just less than 1% up on the Nifty Realty and just about 0.5% down on Nifty IT. So it's not a very active and participative market more than anything else, is what I would say. Should we look at individual stocks where there would be some action maybe coming in? And I want to start off with a Welspun Corp. Welspun Corp, simply because of that mega order, and right after this, in about a couple of minutes, we're going to be speaking with the management. You're seeing a 7% uptick, and we'll be getting a sense of exactly what is contributing to these orders and what the outlook is. Stay tuned for that. Crompton Greaves is a stock in focus. We've been talking about it. There's positive commentary coming in from the management, just 0.5% up. More order wins coming in. RailTel will be the next one that we look at, about 3% up right now. I want to look at some sugar stocks. Balrampur, Sri Renuka and Triveni. Imports are now being allowed. Look at Triveni Engineering, 4% down. Balrampur Chini about 4% down as well. There's been IRDA action, that's the regulator action on Niva Bupa. That stock has seen about 2.5% cuts, but nothing major. And BSE, just want to see if there's any impact of that SEBI note, which talks about F&O participation dropping, derivatives participation dropping by about 18%, lower volumes that are coming in there, about 0.25% down. Let's see what's happening with Colgate Palmolive. Shuffle in the corner office. Prabha Narasimhan has resigned. Parag Thakur is right from her position, but will be continuing with the company in an APAC position, about 0.5% down. So nothing too much which we're seeing dramatically over there. Neeraj, anything exciting that you were spotting right now?
No, largely that, Tamanna. I mean, most of these are the newsmakers of the day today, which are doing rather well or otherwise for themselves. And just before we get in Welspun Corp, good to get in opening thoughts from all of our experts. Amit, 4 minutes into trade. I know it's very short, but anything that stands out in terms of a trade, either on the index or on specific stocks?
I mean, Acme Solar that I have given is kind of sulking a little, but if you look at the other four, out of the other four, Carted has picked up steam, and I would continue to be bullish on this counter, keeping a stop at 26904 targets of 3200, and then probably trail from there.
Okay. Opening thoughts, Kushbora?
A very interesting setup on the derivatives front, where 24,300 call base is starting to act up and build on more base, but so is the 24,200 put. So I think this is perhaps going to be the range, perhaps closer to 24,200. So you could see the markets perhaps consolidate around this level. So no trade on the indices for now. Jaspal Nico, the stock that we discussed for targets of 96 and 100, doing well, gaining some ground at open. So this is something that I would be constructive on for the day.
Okay, Parag bhai, for the longest time, I mean, there has been a fair degree of change that is happening in the ecosystem for these platform companies? I know you typically not too much of a fan, at least of Swiggy, I know, but maybe you like Earn a little bit. Not that the stock price has done too much except for rebounding from the lows, but it consistently comes in this list of the top gainers as well. Is it a good investment candidate?
I think, see, market cap is my only problem in this company. Market cap is too high. Otherwise, within this pack, I think this company is a leader, clear leader. Like I keep saying, like, various sectors has their own leaders now, very clear. And this is one of the company which is leading the pack, right? They have been able to turn around Blinkit the fastest, even in the middle of intense competition. So this is a company whose execution is phenomenal. The only thing is that market cap is too high for the current EBITDA what it generates or current PAT it generates.
Got it. Okay. And Welspun Corp should be pulled up on the screen as well on account of that 17,000 crore order. Not quite that 20% uptick that we had, but 7% is not bad. Also keep in mind, Welspun Corp has had a phenomenal run in the last 12 months as well. So bear that in mind. But, well, if one thought that that order book, which was high and scorching, might see some bit of tempering, it's gotten added with nearly northwards of close to 1.8, 1.9 billion dollars, right? That's a large number, Parag. What does this mean for Welspun Corp, you reckon?
So I think that this company was in a very right space. After Mr. Trump has come, there's a huge focus on this oil and gas drill baby drill. Plus, there is a huge amount of data center capex which is happening in US, which will require a lot of power. I remember last time when Welspun Corp the big order, the stock price was 1,000 rupees, and that time that order was linked to data center thing. So you can ask to management when they come that this 17,000 crore is oil and gas related or power related, which is likely to be consumed for data center. So, but anyway, they are in US, sitting right there where the action is, and so they are benefiting from it. And plus,
it's supply of pipes for the manufacturing facility in the US.
Okay, so this might be for oil and gas.
Very likely.
Yeah.
Okay, but therefore, is it now already fairly valued, or do you reckon this order adds a bit of zing to it?
I don't think the stock is very expensive yet, but the stock has rallied a lot. That's a problem, that's a stumbling block. You cannot buy after stock has doubled.
But if the valuations are not too expensive,
but I agree with you. It is not some.
No, I'm asking.
No, I'm saying it is not crazy valuation.
Okay.
Still, it is not crazily valued.
Okay.
And the prospects are getting brighter and brighter.
Okay, actually, the only thing that is moving directionally very sharply is sugar, and that is downward. JBM Auto is another one that's looking interesting. Amit Goyal, JBM Auto, Electra, Greentech, and Railtel. Can you give us a quick chart check on these three?
Yeah, JBM Auto is actually doing well amongst the Nifty 500 stocks. It's the top pick with a decent amount of volumes, from a price perspective, it looks like it is a bullish engulf sort of a formation happening. So keeping a stop at 610, 615 levels, one could possibly enter into the stock for targets of about 750 or 800 levels.
Okay. And any of these that is on your radar, Kush?
Electra Greentech is starting to shape up well, although it does have some pressure, but the supports near the 1275, 1280 zones kicking in, the stock starting to pick up momentum. Maybe above 1350, it becomes an interesting trade from a momentum perspective. So if you have a position, you can hold with 1275, 1280 as your stop loss.
Okay, Electra Greentech is the other one that is in favor. Now, an interesting story that we're setting up this morning as we look at a deep dive on HDFC Bank. We talked a bit of a while ago about their bond plans and their fundraise plans coming in. But let's talk a bit about how large investors have been behaving. Your favorite mutual fund may be underperforming because of one stock, which is HDFC Bank. The biggest drag on the Nifty this year is also one of the largest holdings across mutual fund portfolios. So is the street missing a value opportunity, or are there concerns around growth, margins and governance keeping investors away? Mahima has the special report.
Right, Tamanna, so as you rightly mentioned, HDFC Bank could be one of the reasons as to why you've seen underperformance in your mutual funds in the last 1 odd year. If you take a look at how it's done year to date as well, it's fallen around 26 odd percent and has been the worst performer on the bank Nifty as well. It's also pulling the Nifty lower, because if you take a look at the weightage, it has around 10.3% weight in terms of where Nifty goes. And in the if since January 1st of this year, we've seen that the Nifty has fallen around 1915 odd points, of which the HDFC fall contributes to around that 900 odd points, and the stock is also trading below all its key moving averages, plus the RSI is also trading below 40. So technically also it is not looking very strong. In terms of who owns HDFC Bank now, 100% it's owned by public, and there are around 45.3 lakh shareholders, of which around 44.4 lakhs are individual. Mutual funds own around 37% stake in HDFC Bank, and 59 mutual funds own shares via various schemes. Now, the value of holding stands at close to around 4.1 lakh crore, and of this, around 10.6% of total equity oriented AUM, and 4.7% of this is around the total industry mutual fund AUM that I'm talking about. Now, in terms of mutual funds with highest exposure in HDFC Bank, for example, something like a Nippon large cap has almost 10% stake, Mirai large cap has around 9.4% stake, your Parag Parikh Flexi Cap, which is almost every other person's part of portfolio, has around 8.3% of their total AUM, of course, in HDFC Bank. In terms of how things have changed in terms of FI holding and DI holding on a year-to-date basis, FIs have sold out, right? So from 47.7% in December 25, it's come down to around 41.8%, but that's been bought into, right? So DIs were holding around 37% in December 25, which has gone up to around 41.8% as of the June numbers. Now, in terms of what mutual funds have bought and sold in terms of year-to-date basis, in December 25, around 51 mutual funds were holding HDFC Bank, and that has increased to 59 mutual funds as of July. So even the schemes holding HDFC as a number has gone up, and on a year-to-date basis, mutual funds have bought around 55.4 crore, that is 3.6% of stake in HDFC Bank. In terms of top mutual funds that have bought and sold it on a year-to-date basis, Invesco Mutual Fund has been a big seller, followed by something like an Axis Mutual Fund and Sundaram Mutual Fund. But mutual funds that have also bought into, let's try to pull that list up, and there's SBI Mutual Funds with around 379.9 lakh shares. Then there's Parag Parikh, which is also bought into the selling that we've seen. There's also DSP Mutual Fund, Nippon India, as well as ICICI Pru Mutual Fund. Now, what has led to this, underperformance in HDFC Bank? We've talked about this. There's governance concerns. There's delay in clarity in terms of new CEO. There's also moderation in terms of loan growth, slowdown in profitability, and there's also range-bound margins and continuous decline in low-cost deposits that we've continuously seen. But just a flip side of this, right? Despite of this underperformance and concerns around governance, etc., there are analysts that still remain bullish on this one. You have a 12-month consensus target price of 1025, which is a 41% upside from the price that it's trading at right now, and 48 of 49 analysts are still maintaining a buy call on this one. And HDFC Bank, by the way, offers the highest return potential amongst the entire list of bank Nifty right now, as per Bloomberg consensus estimate. Lastly, in terms of where valuations go, the fall that we've seen makes the valuation much more attractive. 1 year ago, it was at 2.8 times price to book, 5-year averages of 2.9 times, but currently it's trading at around 1.8 times, and 1 year forward is also at around 1.7 times. So despite of everything, analysts are remaining bullish and valuations are looking attractive.
Okay, interesting piece. I'd really like to know Parag Thakur's view on the piece we put together, because you can look at it from the point of view is that do large investors and institutional investors know something that maybe retail investors don't? Are they looking at an opportunity? You saw LIC upping its stake yesterday, and they've got it at a great price. Or is this just inertia in a sense? It's a no-brainer to have a large blue chip bank in your portfolio.
Okay. So basically, my view is very simple. Out of the concerns highlighted by Mahima, 2 concerns are valid. One is NIM, margins are under pressure, and in last quarter even I was surprised to see such low margins. So that they need to do real serious work on, which I think will take 2 to 3 quarters, considering what is happening at the management level right now. So it is a patience game on margins. One thing, I don't see any governance issue, that is for sure. And CEO extension, that clarity can come now within next 10 to 15 days max. It is already getting delayed a lot. So I think once you have that CEO extension thing out of the way, you might see a little bit of a rebound in the stock at that time. And then, of course, people will wait for margin to rebound. So, but valuation, as Mahima highlighted, it is 1.6, 1.7x next year on 1 year forward basis. And HDFC Bank has never been so cheap. So, typically, if you ask me, HDFC Bank, ITC are the kind of stocks which are completely fallen off the cliff. So only a patient long-term investors should buy, keep buying in a staggered manner in these stocks.
Okay. Thank you so much, Parag Bhai, Kushpora, as well as Amit for speaking with us today. And let's turn our attention to an interesting story on BSE. BSE is looking to expand its product suite through a tie-up with MSCI, potentially paving the way for futures and options linked to globally tracked indices. Before we speak with the company, and we have the MD and CEO with us today, Parth joins in with a quick setup.
Well, BSE is exploring the launch of derivatives in India linked to the MSCI indexes. They have already entered into an agreement with MSCI for a number of their indexes, and they will be exploring the launch of future and options contracts in India that will be linked to those globally traded MSCI indexes. This is a big thing because these indexes have more than $21 trillion worth of AUM as of December 2025. So it will not only add another revenue stream for BSE, but it will also help fund managers manage their equity and also hedge their exposure towards the Indian markets.
Okay, Sundara Ramamurthy, MD and CEO of BSE, joining us this morning. Mr. Ramamurthy, very good morning to you, and thank you so much for speaking with us this morning on NDTV Profit. Let's talk about this new product, which is the derivatives of MSCI. What is the thought behind it? What's the rationale, and how will you take it forward?
First of all, namaskar for having me in your show. If you recall, just 3 years before, somewhere in May 2023, our derivatives journey at BSE started meaningfully with Sensex 30 derivatives. Once it caught up, there had been demand from the market for adding more products. We have added the BankX and focused IT, and we have 2 more other indices which are sectoral for us to add. One important demand from the market participants was to have a very broad-based index, which not only the Indian investors but also foreigners and institutional investors could relate to. So we thought, right, as pointed out by you also, MSCI is one of the biggest index creators in the world, and they have more than around 21 trillion AUM. And if you look at it, the index-based investings and ETFs are also gaining a lot of traction and momentum. And so to have a broad-based index in India, where so many foreign investors are investing in MSCI India stocks, if they were to hedge and if they have an index in India itself in rupee base, it will be helpful for them. And for such of those people in India who want to take a broad-based index exposure, it will be better if we use an index like MSCI India, where there could be good amount of activity because of the foreign participation. If we could think about today, foreigners, if they want to take exposure to MSCI indices, they have to use foreign exchanges like Eurex or Hong Kong or Singapore or whatever it is. So why don't we provide it in India, where they have Indian rupee based exposures? Was the thought process, and that's why we have done it. The launch of derivatives will be subject to which index and the regulatory approvals, of course.
Sir, good morning. Neeraj here. And is this been done, Mr. Ramamurthy, on the back of feedback from large institutions who wanted an option like this, and therefore it's a feedback-based ushering in of something like this, or is this an experiment per se?
No, honestly, we don't do anything based on our own wisdom, because we feel that It is the user who will decide what is useful for them. Before doing anything, we generally consult the marketplace in varied ways. In some areas, we take the name of the index and discuss. In some areas like this, where without a licensing agreement, we will have no locus standi to discuss the name of the index. With the basic features and functionalities and the concept of the index, we of course go to the market, went to the market, and we have taken feedback. There is a good amount of positive feedback for having a product like this from our customers. That's why we had gone ahead with this.
Okay. And is there some sense of what's the extent of participation that comes in from institutions in terms of volumes in year 1 or year 2, let's say the first 18 months of its launch, therefore for FY 27-28? Could it also entail foreign participation, or would these largely be domestic institutions whose feedback would have helped you do this? So two questions really. One, the extent of volumes for the first 18 months, which is the current year and the next year, and whether it will be largely domestic insti-led, or could it also have foreign participation?
Now, first we have to get a regulatory approval. We should have the index which is going to get the regulatory approval. Before that, talking about volumes is not a fair thing. And secondly, if you have observed, never we have talked about volumes or market share at all with regard to derivatives. Our point has always been deepening and broadening of markets. That is the reply for the first question. As far as the participation, it comes from the first reply itself. We want to deepen and broaden the market base, where we feel multiple types of investors will come into this. All the foreign participants who want to hedge their exposures in India, who typically follow MSCI based indices for investing in the stocks in India, create a sort of either a passive one or an active one which is benchmarked to MSCI indices. They will find this product very useful if they want to hedge their exposures. They don't have to hedge their exposures in a foreign currency. They can do it in Indian rupee itself. So the hedge can be 1:1 and can be very effective. So that is the first object. So we feel many of the foreign participants who have expressed just interest in this type of a product will be participating. Even for domestic institutional investors, it could be a useful product, because there could be funds today which can start tracking this index, and there are many funds already tracking this index. So for them as well, it could be very useful as a product, to the extent that they are permitted to trade in derivatives. And all the HFTs and QIPs will also find it very useful, because these indexes are well known, less manipulable by many standards, broad based, and represent a very big portion of the Indian market, has lesser concentration risk in it. Therefore, we feel it will be a very attractive product for one and all, not only the normal participants who we have in the domestic market, but also the HFTs and the FPIs who have exposures in India.
Mr. Ramamurthy, I'm going to just ask your view on this SEBI data which came in, and if you're not comfortable talking about it, please feel free. But since we have the opportunity to talk about it here, and this is something which is important to market participants, I think your view will be very valuable. So the latest derivatives trading data shows that there has been a dip, I think about 18-20% in volumes on F&O trading. As a result, the percentage of active retail traders who are making losses have also come down. Do you think that this is a direction that you are seeing as well and will continue?
See, the volumes in the derivative volumes in BSE has also come down. It could be because of multiple factors. The regulators took very positive decisions in the last year, so as to educate investors so that they don't make unnecessary losses. So that could have helped in some of the retail investors thinking more about mutual funds than about derivatives. As you could see, the number of mutual fund participants has increased. The AUM under mutual funds have increased. The SIPs are steady and going. So that is one outcome. And secondly, also the global uncertainties still prevail. The oil concerns, rupee depreciation against dollars, all this continue. So there could be, this also would have had impact on it. Also currently, if you look at it in the financial year, there is a significant cost increase for the participants. SGT has gone up from April 1 onwards, and the proprietary traders getting leverage has come down because of RBI circulars. All this put together, I think, is leading to rationalization in volumes of derivatives market.
How do you see it as an exchange? Is this, say, a headwind for you going forward, or the general participation is more than making up?
See, if you look at it, we are exchanges or platform providers, and we are MIIs. Our goal is to provide a platform and work as per the regulatory requirement, providing services. From that perspective, the law of the land and the regulation shape up as to what we should expect as an outcome in terms of commercial interest, but that cannot be the guiding factor. As a listed entity, we are of course bound to be taking care of commercial interests. So we should not waste money. We should invest it very well. And wherever we can get an opportunity to market ourselves within the regulatory framework, we should do it and get revenue. But revenue maximization cannot be the goal of a MII. It has to be balanced with the regulatory approach, social contribution, and economic development.
Fair answer, and a very prudent one as well. I'm going to make the attempt to ask you one more question with the same caveat, sir, that if you do not want to answer it, you do not see it fit, please say it very clearly, but it's my job to ask. There's a report yesterday of another exchange that is due to go public as well, who would look at options to list on its own platform. It will have to also list on your platform. Any thoughts over there at all?
I may not know what to have as a thought now. I also saw in CNBC yesterday lot of reports getting flashed about. I didn't see any report on listing. It was about trading themselves.
Yes, on trading. Yes.
Yeah, on trading. It was permitting to trade is what
you're right. It's a Bloomberg report actually, which everyone picked up. Just your thoughts on that, if you have any, or a view or a comment.
So I have only some facts in front of me. I have no comments in front of me as of now. The fact is that the first exchange to get listed was BSE somewhere in 2017. At the time, clearly the SEBI rules is that permitting one person to list on oneself was not there. So you cannot list yourself on yourself. That was prohibited by the SEBI regulation. Permitting other stocks in your exchange, that has been happening, and recently also some exchange tried to put some 250 stocks. Some of them don't even meet their own listing criteria, but they have brought it in. But that's a separate issue. But listing oneself on oneself, this is first time we are seeing it. All along it has not happened. BSE, I am told, in 2017 wanted to do it when they listed. At NSE, they wanted to trade on themselves. At the time, the regulatory thought process was not to permit it. That's what I see from the files. Because yesterday I saw this report, I was also looking at all the previous files, whether BSE has tried anything like that when they got listed. What I found was at the time the regulatory thought process was that they should not be doing it. But regulatory thought process also changes with changing time. So, and the report said it is subject to regulatory approvals. So without any regulatory thought process coming out in public domain, it will not be fair on me to have a comment or opinion on it.
Okay. If a move like that could be made, would there be any options that BSE itself would look at, legal options, or to challenge this kind of a move, considering that there is no precedent as the facts that you mentioned?
It's a very hypothetical question. And I don't know what to react on it because it's too hypothetical at this stage. The report comes yesterday and the regulators have not come out with any views on it till now. And there is a question of legal action in this. It is a question of what the regulators' thought process is, and then accordingly we making a plan out of it as to how we should position ourselves. That's it. I don't think beyond that, no, we cannot talk anything at this stage because where is the regulatory diktat coming out at this time?
That's
fair
true.
Enough. Fair enough.
Mr. Ramamurthy, I have one final follow-up question to the point that we were making earlier on options trading, right? For BSE, and the financials have done very well, remarkably well under your stewardship. But one of the aspects of the growth in BSE's numbers has also been the uptick in options trading volume and the resultant income uptick for BSE as well. Correct me if I'm wrong. But from FY24 to 25 to 26, there has nearly been a 9x jump in the in the premium value and therefore the fees that BSE derived from options trading. If indeed there's this concerted move towards trying and reducing options trading by at least retail, do you reckon it could hamper earnings growth, or do you think institutional options activity could make up for it in the years to come? Again, hypothetical, but I would love for you to hypothesize.
No problem. I will give you a reply for this in a very simple way. As I said, the profit maximization could not be one of the goals of MIS. It is here to serve an economic and social purpose. And also it's a listed entity, so it has commercial interest. So let us see how to combine this and put it across here.
Right.
So when in a single product, if you have concentration in revenue, you always think of broad basing yourself, because nobody likes a single product to command a very big market share of your profit, because then it is no big risk for you. Unfortunately, in India, there are no other sources of revenues that are possible in a big way for exchanges. Everywhere else in the world, people sell data, people sell technology. These two become a very, very big source of revenue. Therefore, when you look at their balance sheet, the income coming from transactions get reduced to almost nothing. That is not, and there are a lot of dark pools everywhere else in the world, and there are alternate trading platforms. People aggregate orders and put it across to the exchange. It is order-based revenue, not the ad valorem revenue. There are a lot of reasons why India looks very different in terms of the distribution of profit in a balance sheet and a profit and loss. Notwithstanding all this, concentration even within this therefore always makes us feel that we should improve other areas of growth. So we are working towards doing whatever best we can. It is not only true for BSE, for every exchange in India, it is concentration on transaction revenue for the reasons I explained to you. What we do is we are looking at how we can deepen equities market. That is also transaction revenue, how to make it counter-cyclical. If you were to go for increasing mutual fund presence across the country, if you only sell enhanced data, because normal data we don't sell, we give it free. And if we were to increase the number of listings, you will be raising capital as well for the country. So all these areas we are looking at.
Well, we wish you all the best for all of success in all of those areas. That would probably only mean that the market deepens meaningfully. Thank you so much, Mr. Ramamurthy, for joining in today. Really appreciate your time. All right, that's BSE, and they spoke about how having more listings could help. Well, speaking of listings, an IPO on right now of Gaja Alternative Asset Management in focus. It's the last day for subscription today. Already subscribed fully. Before we get in the management, and Gopal Jain, the company's managing director and CEO, is in our studios. But before we get him in on the show, let's get in my colleague Parth to set up the conversation for us. Parth.
Well, Gaja Capital is definitely one of the most interesting IPOs, because for the first time an independent pure play private equity and an alternative asset management company will be going public in India. If you talk about the total issue size of the IPO, it stands at 550 crores with the fresh issue component at 450 crores and offer for sale component at 100 crores. Now Gaja, as I said, is an independent homegrown alternative asset management company. They focus on alternative investments across sectors like education, energy, environment, financial services, consumer and digital technology as well. The strength about them is that they are able to earn higher management fees versus the mutual fund players, and they also plan to pursue secondary market opportunities in private equity, public markets and mid markets. So that's the initial introduction about Gaja Capital, and definitely one of the most interesting IPOs in 2026 so far.
Okay, well, thanks Parth for that. Let's get in Gopal Jain, MD and CEO of Gaja Alternative Asset Management Company on the show. Gopal, great having you. Thanks for taking the time out.
Thank you. Good morning.
And you must be happy, man, because the issue is subscribed. Not that there were any doubts, I'm sure, but just the uniqueness of it. And Tamanna and we were discussing on the opening day of your issue that in some sense this gives a further leg up to the Indian capital market story in the listed space, because we've had mutual funds, wealth management outfits, brokers. Now we have the first of possibly the many alternative asset managers which will get listed. So in some sense, you're setting the bar, if you will. Tell our viewers a bit about Gaja and how do you see the next few years?
Sure, absolutely. I am pleased that the message has gone well with retail and HNI investors. In some ways, this is for retail investors. retail investors cannot participate in AIFs. And globally, the way they participate in the category is through AIF managers. So we are a fund manager. The fund management entity is going public. The fund manager manages AIF funds. AIF funds are rapidly growing. They've been growing at 29% a year. They are expected by CRISIL to grow at 26% a year. So the industry is in a good place. And if done well, this business, as you can see, historically, it's a 22-year-old business. There is a lot of data. There are multiple income streams. And it's a profitable business. Last year, we earned 82 crores in profit. The year before that, we earned 62. And the year before that, it was 44.7. So we've been growing profits at a CAGR of 35% historically. And this is an invitation for public market investors because the stage is set for institutionalization of this sector. And the institutionalization of this sector is at two ends: the participation of institutional investors in our funds, but the institutionalization of managers as well. This is a global playbook, and we are now following a global playbook.
You know, I've just, while you were speaking, Gopal, the thought crossed my mind. How has the experience been for you personally in this capacity to go out and speak to retail investors, to a broader market, and try and raise funds in this manner? Oftentimes, I'm sure you're on the other end of the table, right?
Yes.
Where people are coming and pitching to you or telling you why their businesses or ideas are good to invest in. How has that been for you?
You're right. As far as the business is concerned, we have so far been a B2B business, right?
Yeah.
Most of our money has come from institutional investors.
Yeah.
But our companies have gone public.
Yeah.
And we've taken companies public over the past 2 decades.
Give me a few examples just for resonance with our viewers right now, because as they're trying to understand what Gaja is, some, relatable facets that we can put out for them.
I will. It's important, but it's also important for me not to create confusion. That the fund is not going public. The fund manager is going public. Okay. And I'll just share a couple of things which are in public domain, which is our last disclosed investment was in a AI foundational company, very well-known AI foundational company. And before that, we invested in a healthy cookware company, which basically sells digitally. So we've been investing in the mid-market in high-growth sectors from the funds. We have been raising money from institutional investors, not just in India, but for most part from around the world. We've investors from 20 countries. And you're right, there was some novelty in going out ourselves to retail investors and taking this message. But I'm pleased that the message has been received well.
Yeah. No, so from a retail investor perspective, and just drilling down on what Neeraj said as well, does it give me, as a retail investor, exposure to a space which is way above my bracket, where I perhaps would not have been able to? Is it, in a sense, by association, also giving me an insight and an opportunity into very exciting companies which are very far away from getting listed and being available to me at all?
20, 30 years ago, new, fresh companies used to come to the IPO market to get funded. That is no longer the case. They now first come to private markets.
Correct.
So the arena has shifted. Private markets are feed the startup economy of the country. It sounds exciting, but there is a fundamental need here. People are living longer and people are saving. People are saving through equity. People need alternatives as well. But globally around the world, alternatives have an access problem. You need alternatives, but you can't invest in funds. So listed alternatives, REITs, InvITs, alternative AMCs, plug that gap. And yes, in every economy, including India, and we have an exciting economy here, this is an opportunity to plan for your future through participation in what is the frontier aspect of the economy.
Gopal, so you're trying to make that distinction that it's not the funds which are going public, but the fund manager is going public. How does the income stream typically accrue for a business like Gaja? So when an investor is investing through the IPO, what does she or he get access to in terms of earnings? The carry from the fund, the other management fees, what all?
Let me simplify it.
Sure.
So we get management fee from the funds. The manager earns management fee, but also earns performance fee, right? It's paid for the performance of the funds. This is how it's different from mutual funds. And the performance fee is in two parts. One is what you've called carried interest. Let's simplify that. It's a share of profits, right? The second is the manager is required that before you solicit any money from third-party investors, you have to invest your own capital. alignment of interest. We have written a full chapter on it called skin in the game. That skin in the game also can appreciate or depreciate. Now, if it's a good manager, it appreciates. So this means it creates 3 streams of income. And then there are expenses. Intuitively, team expenses, but not so intuitively, fundraising expenses, because in this industry, fundraising expenses are paid for by the manager, not by the scheme. Right? So if you have, it's very important to have low cost of fundraising so that the profit transmits to the bottom line. In our case, our profit margins have grown to nearly 52%. So our profit margins have been growing because so far, and historical performance is no guarantor of the future. We should caution investors. These things have been in the right place.
Gopal, so I've heard you, in tandem with some of the companies that you've taken public in the past, talk about how IPO is the first step and not the big large step for capital raise, right? So while going IPO may still be an expensive exercise for fundraise, because I believe you're raising the capital to also fill in your share of the fund kitty, right, per se. Are we to expect more equity issuances from Gaja Capital, and does that become a less expensive capital raise exercise for you to earn even better margins?
For the foreseeable future, we are well funded. We are already a cash-rich company. We today have 600 crores of net worth. So our price to book pre-money is merely 3 times. I use the word merely. Ignore that. It's for investors to judge whether it's high or low. Our price to book is 3 times our net worth. 200 crores of that is cash. We have ample cash. We'll supplement that cash with this 450 crores. We will continue to raise funds. Funds are to us what factories are to a manufacturing company.
Your lifeblood.
We will keep on setting up, may I say, if you allow me this leeway, factories. For those factories, we'll keep on raising capital. Fund management businesses, our fund management business is 22 years old. The entity is 27 years old. I mean, I'm hoping you'll read between the lines that here is a profitable dividend-paying company with a substantial balance sheet, and therefore it should temper our expectations of future issuances.
Okay. Why are you raising funds right now? You said you're cash rich. What do you need this 450 crores for?
What we need is institutionalization. Institutionalization is a win-win for us. It'll help us expand our business. And we have been institutionalizing for 22 years, and this is a very important step, taking the business public. How do you take the business public? You can either sell all your shares through OFS or you can raise fresh capital. 80% of what we're doing is fresh capital. It'll help into growing the business further. We've been growing at a certain trajectory, and now we are raising capital. Only 20% of the capital that's being raised, 100 crores out of 550, is OFS. And so that's the way we're looking at it. For us, the imperative is institutionalization.
Do you have any core investors who are going to be exiting through this OFS at all?
So our institutional journey started with our pre-IPO. None of the pre-IPO investors are exiting. But there are investors. This business was team-owned for the past 25 years. And there are many who have owned shares for over 20 years. So some of our earlier team members, some of our earlier shareholders are partly exiting. The total OFS is about between 5 and 6% of the cap table prior to the IPO.
Okay. I have just one question on growth. That is, so if you have a follow-up on the...
No, please go ahead.
Okay, just this. You mentioned that the industry has been growing at an X%. I believe 29 is what you said. And CRISIL expects it to grow at 26%. What does that industry growth rate mean for a growth for an asset manager like you? Do you grow at a particular percentage above those numbers? How does it work?
It's so important not to conflate the industry's growth. There's nothing automatic about it.
Okay.
It's an opportunity for us to leverage this growth. We've been growing in a certain way. The industry is growing in a certain way. It's good news. There is, may I say, a huge demand for capital from India's entrepreneurs. The AIF industry is essentially growing on the back of that demand for capital. There's appetite from investors. The AIF industry is growing on the back of that. As a manager, as a 27-year-old entity, 22-year-old manager, we are in a certain place, I don't want to use qualitative statements, to leverage this growth.
No, the question that had come to my mind is, once you list, I think, would it be fair to say one of the important metrics to track your company and how it's doing is your attrition rate and the quality of talent that you have on board?
It's the most important, may I say, intangible asset on our balance sheet. The three intangible assets on our balance sheet, which you do not see, are our people, our intellectual property as to how we work with our companies, and our investor base, not just our investors, but our prospects. The three co-founders have been together for 22 years. It's an exceptional metric. The average tenure in the partnership is 17 years. So far, we've had stability. Past is not a guarantor of the future. But yes, the quality of our talent is, our plant and machinery is our people. If our factories are our funds, our plant and machinery is our people.
Okay. Thank you so much for speaking with us today and coming in and answering all our questions. Best of luck for the listing. I think you know better than a lot of new founders that that's going to be a difficult and a different kind of a ride once you list.
A lot of responsibility.
Yeah.
Not just for us, but for the industry.
Well, we hope to see you more often then and speak to you once you list as well.
Look forward to that. Thank you.
Thank you.
All right. The focus continues on the primary market because let's be honest, that's where things are more exciting right now. Augment Enterprises IPO opens today for subscription. Mahima joining in with a SWOT analysis. Mahima.
Very interesting company for sure in terms of where, Augment stands, and in terms of where, the SWOT analysis goes for this one. Overall, it has a very strong financial performance. If we take a look at the numbers and CAGR growth since the past 3 years, it's been a good CAGR. But in terms of where the margins go, that's where something the pressure lies. So overall, in terms of the strength, it has definitely performed well in terms of where the financial grows. But in terms of where the weakness stands, it is the margins where the pressure lies. But considering the customer concentration also, that's one of the things that needs to be kind of taken care into, and because it runs on very thin margins and high working capital, that's something that could pose a threat on this one. Plus gold silver prices volatility is also something that determines their overall exchanges. So the top line is driven a lot in terms of where the gold and silver price volatility stands. So this could be one of the reasons as to why what could pose threat to this one, and that's why at the end of the day, gold price volatility is something that will determine the top line, and that could be one of the threats as well. In terms of where the competition goes, we've seen a lot of competition in the space, plus there is high working capital risk as well that could pose further threat on the margins as well. So this is the entire SWOT analysis for as far as Augment goes.
Okay. We'll take a very short break. We're coming back with a lot more. Manish Sonthalia of MK Investment Managers will be speaking with us, and we'll be talking about all of the trending stocks right now. Stay tuned.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
A new Nepal, new possibilities, a new opportunity for regional cooperation. NDTV World brings together the voices defining the next chapter of India-Nepal relations. Nepal's Foreign Minister, Shishir Khanal, Finance Minister, Dr. Swarnim Wagle, Dr. Shashi Tharoor, actor Manisha Koirala, and Dr. Ram Madhav. Diplomacy, commerce, security, infrastructure, tourism, soft power, NDTV Anviksha, ideas across borders. The Nepal Dialogue, 27th August, Kathmandu, Nepal. New rules of engagement. Ambitions crossing borders.
Back with India Market Open right here on NDTV Profit. Pull up the markets briefly for you, just show you where we are right now, because remember we started off absolutely flat. For now, staying flat. I believe IT is sulking a little bit, but some of the others, especially the banks and the auto names, might be doing okay. Yes, IT is down 0.5% yet, but banks are thwarting that pressure a little bit. Okay. Let's move on to more stories. SEBI's latest derivative study shows a sharp decline in retail participation after regulatory curbs. Options trading also remained, well, you could argue while it was dominant in FY26, it's come off a little bit off late. Nimit is here with more details of the report. Nimit.
Absolutely. So what's happened here is that the story that SEBI's put out is one clearly of losses of traders exiting and where those traders are exiting from. Now, the big numbers here are that in the equity derivatives segment, the total number of traders declined for the first time since FY16. It fell 18% from 106 lakh crore in FY25 to 87.5 lakh in FY26. New derivative traders dropped 40% and traders exited at a surge of 76%, a story of how active participation is declining. Now, why is this decline happening? Mounting losses. Retail net losses, while fell from last year's to about 18% to 91,685 crore, the retail loss accumulation over the last 4 years has gone to 3.85 lakh crore. The average loss per retail trader has risen to 1.17 lakh. And now this is a lonely place to be, because the individual retail category was the only space to post net losses in FY26. Prop traders earned close to 45,000 crores, while FPIs booked 13,800 crores in gross profits in FY 2026. Now we understood the volume. Let's also understand the value. Notional turnover growth has also slowed sharply, and this is probably the sharpest slowdown, to 4.2% from 20.4% in FY25. Now this decision making has moved from futures to options. Futures has declined 15% in turnover, while options has still increased 7%. That's where your dominant number comes from. But 93% of retail traders were options buyers versus sellers. So they were buyers. Now options buyers, these 93%, faced 90% loss incidents in FY 2026. The average loss for an options buyer was 1.28 lakh. Now while option sellers had a lower loss rate at 43.8%, they still face sharp tail risks for the loss-making option sellers. The average loss was 51.7 lakh. Lastly, before I let you, an interesting piece of information here is the age and the geography demographic. 43% of traders were below 30 years of age, and the under 30 traders recorded an 88.5% loss rate. 73% of these traders earned below 5 lakh annually. Now, where is this coming from? Actually, derivative activity has shifted away from metro cities as per the data. The B30 cities, which is beyond the top 30 cities in India, which goes into tier 2, tier 3 and rural markets, account for 67% of these retail traders in the derivatives market. These contributed to 58% of retail losses, and Maharashtra, Gujarat and UP alone, 3 states, accounted for 41% of those losses.
Okay. Well, these are also some of the states which have the highest number of demat accounts and the most active ones. Interesting to see UP in that list. Thank you for that, Nimit. All right. Dividend yield stocks are gaining traction amidst market uncertainty, with investors favoring stable income in defensive sectors like FMCG, utilities and PSUs. Sharad Dubey joining in to throw a light on the list of companies that investors shift. Sharad.
Well, there is a lot of volatility in the markets. Also, there is inflation, and when this happens, dividend yield stocks become very attractive, and this is also an important asset class when we bring in. Remember, this is a stable income for investors, and defensives are at play here. Going ahead, there are other key reasons also why you should be looking at the dividend yield theme. This of course includes sectors which are utilities like FMCG, PSUs and even select metals, where the dividend payout is on the higher side. So we did a little bit of research also. Of course, this includes infra trusts also. Between 8 to 13% of yields come in over the last 1 year itself. But let's decode the entire picture of how things actually pan out. And I've taken the largest dividend payout stocks over the last 3 years, FY24, 25, 26, and show you the dividend payout, how it has happened, or the dividend yield which is coming as per the current market price. All cargo logistics tops this list. Also, we have stocks in the mid-cap, small-cap space like D-Link, Axelia Solutions from the IT space. Moving on, if you look at the other key numbers also, especially FY26, these numbers we see decent returns are coming when it comes to dividend yield. We have JSW Dulux, Radiant Cash, PTC India, which we have spoke a lot about on the execution. And from the PSU space, we also have Coal India and MSTC giving a decent dividend setup. But what are these stocks and what are the key triggers also? There must be some growth triggers also, right? So I'm going to get you those numbers. The upcoming festive seasons may aid numbers for the logistics stocks, and keep an eye on for all cargo logistics. Also, the next stock in focus should be your Indo-Borax chemical, which we have spoken about. Their strong demand is coming, especially from the boron segment as well. Important corporate actions are there. Jagran Prakashan interestingly makes it to the list. The newsprint prices are stable right now. They might go up as the state elections come in next year. Axelia Solutions, a beneficiary of travel and airline recovery if and when that happens. Also, another stock which should be in your radar is D-Link. Strong government incentives is aiding the sentiment in this counter. Up next, we also have JSW Dulux. More distribution growth announcements is likely to be here. So that's an important trigger you should be watching out for. Radiant Cash Management, the price hikes is expected for the second quarter. So we'll be looking at this counter as well. But it's definitely big beaten down. PTC India strong execution likely to continue in the second quarter as well. The numbers are very strong in the first quarter. And MSTC, the beneficiary of coal linkage auctions, that is what the street is looking out for. And the last stock is, of course, Coal India. Mixed commentaries coming for brokerages for FY27 numbers. So these are the dividend yield stocks and their growth triggers going ahead.
Okay. Thanks a lot for that, Sharad. Now, let's take across the conversation to our market expert for the day, Manish Suntalia, Director and Chief Investment Officer at MK Investment Managers, with us on the show. Manish, great having you as always. Thanks for taking the time out. Crude back to 93. The BOFA fund manager survey suggests that India is the least preferred market, and therefore maybe FI flows may stay away. Is it a good time to be constructive for India, or would you be cautious, especially given the fact that there are other factors at play even as the earnings were strong?
So $90 on the crude is the Lakshman Rekha, so on the right hand side of $90, which is 93 and beyond, tends to be slightly a headwind for India into the long term. That being said, I think the numbers are pretty strong. The Q1 numbers which have come out, it's been the best in the last 2 years. And this is not just Nifty or mid cap or small cap. I'm talking all the listed companies basically in NSE. And the median EPS growth is 20% plus. So you can say that it is basically a low base effect. And as we progress into the second half of this year, the base last year would tend to become higher. So the growth rates are going to be slightly lesser. But even otherwise, I think long-term averages on benchmark Nifty 50, like 10-year averages would be 23.5. Today we are 19.5. So everything said and done, the numbers don't suggest a bearishness. So, even if, let's say, the BOFA fund managers say that there is no AI play in India, I mean, it's the best scenario when one should play the contrarian. So I am not bearish at all on the Indian markets. I would, as has always been the case, that numbers do justify themselves over a period of time. And I think this is one such opportunity when numbers and markets are behaving in opposite directions. So I would go with the numbers.
Manish, good morning. Tamanna here. Do you think the newfound or return of enthusiasm for the primary market is also contributing to some of the lack of excitement that we're seeing in secondary markets right now? Because the only place where there seems to be action is in the primary markets. And what are you making of the current crop of listings and companies on offer?
So yeah, I mean, that is a worrisome point, and what is to be monitored is the leverage in the system, particularly in the secondary market. So your margin funding book, is now approaching 2 lakh crores. That's a red flag. And because you don't have an option of shorting, etc., primary markets are abuzz with activity, plethora of IPOs. Not that the IPOs are bad, there is enough value in them, but to see a listing gain of 50-100% on day one, I mean, that has something to do with a lot of overdoing. So as to say, as far as the fundamentals of companies are concerned, either you price them properly at the time of IPO only, and even after the IPO, if it goes up by 50-100%, then obviously you are discounting the next 2 years of growth. So I totally agree with you. There is a lot of speculation bubble that is happening, but not to say that the companies are bad. Most of the companies have decent fundamentals, but yeah, this pricing action on day one, and there's only that much of liquidity available in the secondary markets. So secondary markets, in spite of very strong numbers, are that money is rotating into the primary market. But all these things do adjust over a period of time. It's not that this is the final word. Over a period of time, fundamentals will take shape, whether for the primary markets or the secondary markets. Listing gains 2, 3, 4 days, 10 days, and then it comes back to normal. So I think, yes, currently there's a bunching of IPO. The pipeline looks very good. And that is something which we are seeing on an ongoing basis. One has to live with that. But that's one of the reasons where there's a lackluster movement. But otherwise, the numbers pretty strong.
Okay. Manish, couple of pockets which have, on the back of conversations with your brethren, seem to be coming out. One of them seems to be chemicals, and the recent crude drawdown leading to China import not just crude but also raise the prices of certain basic chemicals, and the opinion on what the impact of that could be on global chemical companies, ones which have the product as an output, two which might be using some of those products as inputs, seems to be different. But there is a belief that a select set of chemical names will actually have continued profit, EBITDA, revenue growth, which they have started showing in the last couple of quarters. One, would you agree with that assessment? Why or why not? And if you agree, what are those pockets within chemicals which you believe will have a slightly longer earnings term trajectory in the near term?
So, this Strait of Hormuz disruption being one of the factors, and the second is that manufacturing on an overall basis, ballpark in the Western world, particularly Europe, because of very high costs, is dead. So it's very headwinded. Manufacturing in Europe is very headwinded, and China appreciation of the currency is also a headwind as far as manufacturing cost in China is concerned. And India is getting the benefit of both Europe +1 plus China +1. That is one. But having said that, it's not a blanket rule that all the chemical companies would see a benefit. There would be some segments which are likely to see a benefit. So, like, for example, the phenol derivatives, are seeing a massive tailwind. But that is not applicable for all the companies with all the segments. It's a pick and choose. And there are some companies which are seeing a glut. There are some companies which are seeing a shortage. All of this due to supply chain bottlenecks and stocking, destocking, so on and so forth. So for one, agrochemicals is not seeing any major pull. There's not too much of pull that we are seeing in agrochemicals, or let's say pharma, CDMO, APIs, KSMs, their solvent. These are seeing pushes and pulls. Bulk chemicals, phenol derivatives, etc., seeing a massive pull, and ammonia and all of that. So it's I agree with you that the Strait of Hormuz has created supply chain bottlenecks, but it's specific, it's company specific.
Manish, where are you seeing the pull? That's a very honest question, and one I think that a lot of people are asking right now. What really is moving in any fashion which is showing some excitement? We were having just to add on to it, we were having a conversation earlier in the show today where our analyst was talking about how Indian investors now want delta. They're not satisfied with core fundamentals of a company just chugging along. Are you seeing delta anywhere?
So for one, in terms of segment, the mid and the small cap segment is more euphoric than, let's say, the large cap, whereas there is core value, but core value becomes deeper core value as we speak on an ongoing basis. Having said that, the all pervasive themes have not changed at all. So it's the same enthusiasm regarding your platforms, your capital market stocks, your high tech, defense, aerospace, precision engineering, semiconductors, robotics, and energy transition. These are some of the ongoing pervasive themes, and even in the primary segment, you are seeing many companies coming out, nuances, and we are also learning on a day-to-day basis. Acha, this sort of a company also existed. Okay, this is the growth rate. So I think the only piece which is seeing heightened activity is the industrial space, and to do with the investment space where a lot of growth is visible over the next 4 or 5 years. So energy transition, high tech, semiconductor, PLI, and all of these spaces are very buzzing with activity. Pick and choose logistics, a dark horse, discretionary spend, a dark horse. If you want to believe that, yeah, consumption will go through a hyper boom in the next 2 3 years, it's high time that this sort of inactivity in the discretionary consumption space likely to play out. So these are contra plays, but yeah, the momentum, the push is basically these 4 5 sectors that I alluded to.
Okay, Manish, the other thing is the ordering activity of late, right? L&T getting large orders overnight. Welspun Corp, of course, it's a very unique thing that it's in the US, but it's a 17,000 crore order, which is large for them. But I'm just saying the ordering activity even from India, Titagarh getting some orders, qualifying for some. There's a lot of ordering activity there, right? Where within this, how do I say, government infra or private capex focused ordering beneficiaries do you find favor? Is it infra players? Is it select capital goods? Is there merit in chasing them?
So yeah, I mean, see, the private capital expenditure has been pretty decent in India. And if you look at even the high frequency indicators, all the high frequency indicators, that is what I'm alluding to, Neeraj. The data which is coming out as far as the high frequency indicators, the corporate earning, seem to not suggest any sort of bearishness.
Agree.
But so in that backdrop, I mean, I'll just give you an example. The total market cap of all the road builders in the country, is anemic at 35,000-40,000 crores or thereabouts.
But Manish, always been that way, right? I mean, somehow road builders haven't created wealth, na?
No. So basically, NHAI, debt problems, so on and so forth, last 2 3 years. So, now that the leverage factor on the road builders have come down on NHAI as a whole, would you see ordering activity? Yes. If you're alluding to pipe players, the Middle East itself has created such a big, humongous opportunity. You're seeing all these pipe players, get orders from the Middle East per se, oil and gas per se, the build out. And even domestically, the infra capex that is coming through on the energy transition, they are all full of orders. So I would believe that government capex, private capex, in any case, on the energy side, the energy security portion is seeing heightened activity. But I will also allude to the fact that some of the areas like irrigation, or let's say roads, etc. The activities are pretty strong. It's not to say that these should be trading at some anemic multiples. All the pipe companies are trading at ridiculous multiples. So there's a total disconnect between the high frequency indicators, the data set, and what valuations are. So that is why you're seeing all these catch up trades that are playing out. Always naysayers that these valuations will remain low. But what about the earnings growth? Even if you give the same multiples, the earnings growth is coming through. So that is what you're seeing in the marketplace.
Reckon, Manish, that the AI trade will cool going forward? It already is showing signs of cooling off a bit. At least that extent of frenzy has cooled off. Do you see that cooling further, and that could be an advantage for India?
No. AI trade is not going to die down anytime soon. This whole build out AI frenzy. I mean, India has just not even scratched the surface, whether in terms of the energy requirement. Even if you talk about 2 gigawatts going to 6 gigawatts, I mean, that's a very doable number. Between now and 2030, you will require some 2-3 lakh crores in terms of only energy requirements. And given that where US is in terms of AI build out, I really don't see. You're talking about some $200 billion of anthropic turnover coming through 2930. So does that justify the upfront investment? I would tend to believe there could be a bit of hiccups here and there, but it's not going to die down anytime soon. The AI build out is real. And, there could be pushes and pulls because of interest rates and all of that, but it's here to stay. I wouldn't believe that this capex is going to come down anytime soon.
Okay, Manish, lovely talking to you as always. Thanks so much for taking the time out and being with us. Look forward to talking to you soon.
Pleasure, as always, Neeraj. Thanks.
Thank you. Well, a bit of a stick for the markets, though. I think, if I'm not wrong, I saw the index at the low point of the day as we are wrapping up the show. No, not really. It's just flat. Eyes were deceptive. Maybe some other index.
Most exciting story for me today
is
apart from everything that's happening in the markets, is that Mark Zuckerberg has bought a castle in Ireland.
Care to talk about the price at which the value rather?
The story's on the NDTV Profit website, by the way, and our producer has helpfully said that he has the footage. So let's run it as well. I think $440 million. To be fair, it's close to the Meta headquarters, so he can walk to work if he needs to. So even while this company goes through this giant landmark trial in the United States, 29 states are suing Meta, saying that they have jigged their algo in a way which harms kids. So that trial is going on, but it's a good life. That's Mark Zuckerberg's castle. So that's one thought to leave you on the show with. Have a great day, but we'll be back with Ask Profit, where you can figure out what's happening with your portfolio.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
Welcome to India's biggest grassroots innovation movement.
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
स्पंदन एक पोर्टेबल ECG मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रासरूट इनोवेटर दिखेंगे वंदे भारतम में। Coming soon on NDTV Profit.
Some of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
Man lo.
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
A new Nepal, new possibilities, a new opportunity for regional cooperation. NDTV World brings together the voices defining the next chapter of India-Nepal relations. Nepal's Foreign Minister, Shishir Khanal, Finance Minister, Dr. Swarnim Wagle, Dr. Sashi Tharoor, actor Manisha Koirala, and Dr. Ram Madhav. Diplomacy, commerce, security, infrastructure, tourism, soft power, NDTV Anviksha, ideas across borders. The Nepal Dialogue, 27th August, Kathmandu, Nepal. 3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV when it really matters.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate.
Hello and welcome to NDTV Profit. You are tuned in to Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Bitcoin crosses the $75,000 mark, continues strong momentum. CFTC Chair Michael Selig says to explore new crypto market rules. Franklin Templeton gets SEC nod for tokenized funds. And lastly, for crypto markets, this is the 7th largest liquidation event in the history. Well, Bitcoin, it's a red letter day for it, and it continues its strong momentum, crossing the $75,000 level marks for the first time in 3 months. Of course, there is regulatory optimism, strong ETF flows, and liquidations at play. The market is pricing in reduced regulatory risk, and remember, this is a momentum-driven rally that needs a concrete catalyst to sustain from these current levels. Well, the head of Commodity Futures Trading Commission, CFTC as we call it, Michael Selig, has stated to move swiftly on establishing rules for the crypto market if Congress fails to pass the legislation on the matter this year. He said that the agency stands ready to begin immediately implementing the Digital Asset Market Clarity Act. The CFTC is exploring rules that would let crypto exchanges offer leverage and margin trading. The major global investment company Franklin Templeton has received Securities Exchange Commission (SEC's) approval, allowing its conventional mutual funds and ETFs to invest in its blockchain-based money market funds. Now, this regulatory first enables traditional portfolios to use digitally native tokenized shares for cash management and collaterals. And lastly, crypto markets have officially posted their 7th largest liquidation event in the history, with almost $3.5 billion in levered positions, which was liquidated in the last 24 hours. And in these 24 hours, the crypto market had added more than $280 billion in market cap. Now, this suggests a big short covering rally which is taking place for the last 2 days. And before we wrap, here's a quick check on the changes to the crypto prices over the last 24 hours. Massive momentum gains coming in for both Bitcoin and Ethereum, and most of the coins, XRP, Solana also going up between 5 to 16%. Now, there's a bigger change happening in the support and resistance bands for all of these coins. Time now to take a look at the crypto strategy for the day. Here's what's there to keep in mind. Remember, the market outlook, the bullish momentum comes in, but now there's a high event risk attached to it. significant institutional capital inflows are happening and the market is technically overbought. Move now is tightly linked to just a single binary political outcome. That's Clarity Act. That's what we'll be watching out for till September 15. Now, as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved, whether it's about crypto, regulations, taxation, or the broader industry. The team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
Welcome. You're watching Ask Profit here at NDTV Profit. I'm Mahima Vachajani and with me is Soumit Sarkar. And of course, this is a show that gets all your stock-related queries answered while you send us your queries on the numbers that are flashing on your screen up there. We'll take a quick look as to how the markets are doing at this hour. The Nifty 50 not doing much, just up by about 0.07%, around the 24,200 levels is what we're seeing, and a narrow range of trade is what is being witnessed on the Nifty 50. If you can see the heat map as well, some stock-specific action in terms of where Power Grid goes. It's seeing an uptick of around 2%. You have BEL, which is also seeing gains of about 1.4%, followed by Kotak Mahindra Bank and NTPC, both seeing gains of about 2%, but slightly more red on the screen than green for the Nifty 50. You have something like a Max Health that continues to be under pressure, and Indigo also down by about 1%. Bajaj Auto, Cipla, JSW and Titan are some of the other names that are trading in red at the moment. Let's also quickly pull up the Bank Nifty, because that is slightly doing better as compared to where the benchmarks go, because it's hovering around the 57,600 levels, up by about 0.3%. And the overall sectoral heat map also, if you can see, there is action in terms of where defense goes. The last 2 days is where we saw profit taking coming in for the defense pack, but today it's seeing gains of about 0.8%, followed by metals, yet another day of them shining in trade, but FMCG is where the real pressure is, down by about 0.9%, followed by auto consumption. So, defensive as a pack, even pharma is down by about 0.4%. Let's also quickly pull up the mid cap 150 and the small cap 250. The mid cap 150 is trading almost flat, but the small cap 250 is doing better than both the benchmarks as well as the mid cap 150, because it's seeing gains about 0.6%. And some specific names from the BSE 500. Let's try to pull up that list. Welspun Corp, of course, topping that chart, up 14%, followed by something like a JBM Auto. Data Patterns doing fairly well, but on the flip side, you have some profit taking coming in the sugar names. Balrampur, Praj, Sri Renuka, all of them seeing profit taking coming in. You also have something like a Britannia that continues to be under pressure. So that's with regards to where the markets go. But let's start taking all your stock related questions, and to answer them, we're now joined by Saumil Mehta, Head Alternate Research at Mirae Asset, and Nandish Shah, AVP from PCG Research Advisory Wealth Management. Motilal Oswal joining us now. Thank you so much, gentlemen, for taking out the time. I'll take up the first question that's coming on Bosch, and this is from Rakesh Gupta. He says that he's sold 40 shares of Bosch, that he'd bought it around 42,800 and he sold it at 48,600, and says that he's just retained one share out of it. Wants to know whether this is the right entry price to kind of make an entry into. So he's booked the profits that's being seen already, and wants to know if this is the right time to maybe make a re-entry into this one. Saumil, seeing the charts, would you recommend that?
See, first of all, good morning to everyone. My view is still positive. I don't think so. This is the right time to re-enter now, because it's already run up a lot. In the last couple of months, it's been having a very good run up. My targets on the upside right now would be at least 51,000 plus. If you want to do a short-term trading, probably keep a stop loss around 47,800 and can re-enter. But I think short-term trading is not suggested. Medium-term trading, definitely medium terms, investing is okay. For that, you can keep a stop loss around 46,750. So that these are the two levels. But I don't suggest to re-enter right now.
Right, next is a caller query coming in from Bangalore. Shiva, you can go ahead and ask your query.
Yes, so hi all. So I have a query about Nykaa Fashion, where I'm holding 165 shares at 331 rupees. I'm looking for a short-term view, probably 2 to 3 weeks from here.
Right, so I'll check that query with the technical guest. With the technical guest, Somil, you can give any view on Nykaa on charts?
See, I'll be positive on Nykaa. Nykaa has been consolidating for a little while now, from last couple of months, just between 315 and 335. So narrow range. I'll be expecting this range to break on the upside. My view is positive. Keep a stop loss of around 315, probably 312, and keep a target of around 350, 360. So these are my short to medium term targets. But the trend is positive. You can buy on declines as well.
So that's the view coming in on Nykaa. Buy on declines is the view that Soman has given on with regards to where technicals go. But the next question that we have is coming in from the banking space. Ashwini from Chennai says that she wants to know which is a better pick between the three. Talking about SBI Bank, Indian Bank and Karnataka Bank. Nandish, very good morning to you. I'll come to you on this one. Which one is a preferred bet? If not the three of these, anything specific that you like in the banking side?
So we have been very positive on SBI and Indian Bank out of the three which she has asked for. And both have a quite decent upside of almost 25-30% even from these levels.
Okay, all right. So that's the view coming in from the banking space. The next one that we have is from Padma, who's writing us from Bengaluru. She wants to know between KPIT, Tata Tech and Tata Elxsi, which one is a better bet and a good price to enter any one of these. And she's saying that she's contra on IT and can invest with 2 years time frame is what she's saying. Nandish, I'll stick with you for this one. What is your recommendation to her?
So currently we have a sell rating on both Tata Elxsi and Tata Technologies both. So I won't recommend, even a longer term buy at these levels.
Right, the next query is on Fujiyama Power. The viewer Christopher from Chandigarh has around 1700 shares, bought a price of 341. He wants a view for the next 5 years. Nandish, your view on Fujiyama Power?
So on Fujiyama Power, we have a buy rating, and what you say, even at these levels, it is a good hold and can be added up with a price target of around 550.
Okay, so that's the view coming on Fujiyama Power. The next one that we have is on Vadi Energy. Suresh from Kerala wants to know that from a slightly long-term perspective, is this the right price to kind of make an entry into this one? Somil, what would you recommend him?
See, Vadi Energy is in the downtrend, and I do not expect it to bounce back from here or reverse in the long term or the medium term. So I'll stay away for now. Wait for the confirmation on the upside. Wait for the breakout above probably 2,900, 2,950 levels. On the downside, I'll be expecting the stock to go down till at least 2430, 2400.
Okay, all right. The next one that we have is on Persistent Systems. Shiva from Amravati wants to know if this is a good time to buy the counter, and if yes, what is the rationale behind it? Nandish, any view on Persistent Systems?
So we have a buy rating on Persistent System with a price target of 6,400. So looking at the earnings growth for next at least 2 years, it is likely to grow by about 20% plus, and currently available at around 35 times FY28. FY27 earnings.
The next query is on E. Venkatraman from Bangalore. He wants to know whether it is the right time to buy CESC and PTC India. Any view on this, Somil?
PTC, I don't have any view at this point of time, but CESC, I'll be negative on the stock. It's been in the downtrend. So I'll be expecting the stock to go down till at least 145, 147 levels. So bearish on this, stay away.
Okay, all right. CESC, a bearish view is what Saumil carries. But I think we've got the next question from Kiran Kumar, who's writing us from Hyderabad, asking about J&K Bank. He's holding around 1,637 odd shares at the levels of 182. Sitting on a loss of around 54,000 odd rupees. Wants to know whether to continue to hold or book losses. Nandesh, what would you recommend?
So on J&K Bank specifically, we don't have a coverage. It is better to stick to a big private sector bank or a big PSU bank like SBI. So it is better to book a loss and shift to a large bank.
All right, so that's okay. So that's the view coming in on J&K Bank. The next one that we have is on Acutaas Chemicals. Viraj from Vijayawada has bought it at the levels of 3,500 from a time horizon of 1 year. Wants to know whether to continue to hold this one or exit considering the charts. So what would you recommend, Saumil?
Sorry, just give me a second.
Sure. Acutaas Chemicals is what I'm talking about. If you can try to pull up as to what it's done in the last 3 months and then 6 months as well. Today, of course, it's trading with cuts about 0.8 odd percent. 3 months, it's seen a gain of around 6 odd percent. So not much, but 6 months, it's gained by about 51 odd percent. So in the last 3 months, of course, not much of a move, has been consolidating. But Saumil, do you think that this consolidation could be now over and could see further upside from here on?
It has had a very good run up in the last couple of years, actually. Now it has been consolidating. We've seen low top, low bottom, the high degree time frame. I'll be expecting this correction to continue. Time-wise correction, probably price-wise correction as well. However, my view still remains positive in the medium to long term. Probably look at it around 2,700, 2,600 levels to buy again. But definitely buy on decline should be the strategy.
Right. The next one is the viewer hasn't mentioned his name, but he wants to know whether can he buy Jyoti CNC? Can he make a fresh entry into Jyoti CNC? Any view on this, Nandesh, from long-term perspective?
We don't have a coverage on Jyoti CNC. I wouldn't be able to comment anything on this. Sorry.
Saumil, anything on charts?
It's good to me. I think it has just broken out of an inverted head and shoulder pattern. The next target in the very short term would be 1050. But I think I do not, suggest in the trading in the very short term. Medium term targets would be around 1300 levels. So I think keep a stop loss of around 720 or probably 790, and you can hold on to the stock for a target of 1300.
Okay, all right. So that's the view coming on Jyoti CNC. I think we've got Ramu who's calling us from Gujarat. Ramu, a very good morning to you. Go ahead, ask your question.
Hey, hi all. Good morning. I have a query regarding Shedamac. Holding 10 stocks at the price of 1524. Can I book a profit, or is there any still have a growth on this stock?
Okay, and what's the time horizon that you're looking at, Ramu?
Sorry?
What's the time horizon that you're looking at to hold this counter?
I can hold it a long term if there is a good growth on this stock.
Okay, okay, got your question. I'll take this up with Nandesh then. Any view on Shedamac, Nandesh?
So Shedamac can be held if the investor has a target of almost more than 2 years plus. In terms of ROC, about 30-35%, ROE about more than 27-28%. Consistently, in terms of quarterly numbers, it has been beating most of the street expectations. It can be a hold, yes.
All right, so that's the view coming in on Shedamac. The next one that we have is coming in on HCL Tech. Vinay from Bengaluru says that he's holding 70 shares at the price of 1428 and wants to know the right exit levels for this one and maybe average at the current levels from a 1 month perspective. The stock is currently trading at 1313, Saumil. Do you think averaging is the right strategy, or should have your book losses?
So see, I think hold on to this position. My view in the medium term is still positive. I'll be expecting a little bit of more correction because it's already had a very good rally in the last 1 month. Now I'll be expecting the stock to retrace this rally towards 1250 or probably a little lower. But overall, in the medium term, I still remain positive and for a target of 1500 levels.
Okay, all right. The next one that we have is coming in on Kitex Garments. Our viewer wants to know the 3 months target coming in for this one. Soumya, I'll stick with you for Kitex Garment as well. What are the charts indicating? Let's try to pull the chart up till then and see as to what it's done so far in terms of Kitex Garments and see as to what the 3 months performance and 6 months performance has been like. Today, of course, it's not moving much of a needle, but in terms of where the 3 months performance goes and 6 months, in fact, all of these textile companies have been volatile because of US tariffs is what we've seen, but 6 months it's down 32%. So not much of movement coming in on this one, and this year also it's fallen by about 31%. So, Amit, what do you make of the charts?
Yes, absolutely. So it's a little negative at this point of time. The trend is negative in the medium term. I'll be expecting the stock to continue the downtrend towards probably to 105, 110 levels. So stay away from the stock at this point of time. If you have it in your portfolio, probably exit. You can again re-enter around probably 170, 180 levels when you have the confirmation. For now, view is bearish.
Okay, all right. View is bearish with regards to where this counter goes. Let's take the next query that's coming in, and this is coming in on NCC. Our viewer has bought it at an average price of 200. Total number of shares that he or she has been holding is around 370. From a long-term perspective, is this a good hold is what our viewer wants to know. Nandish, your view on NCC?
So looking at the last 2 years, ordering activity, especially on the road segment, has been very subdued. And that is the large order book coming for NCC from that segment. So at least for next 1 year, it doesn't look so much positive.
All right. The next one that we have is coming in from Balwant, who's writing us from Rajkot, asking about Style Bazaar. He says that he's been holding this since the IPO price, and what is the future prospect for this one? Nandish, from these tier 2, tier 3 retailers, which one would your pick be? And Bazaar Style, what is the view?
So specifically Star Bazaar, on that script, we don't have a coverage, but we have been very positive on V2 Mart and V-Mart especially, given their large presence into the tier 2 markets.
Okay, all right. I think we've got our next caller. Arun is calling us from Chennai. Arun, very good morning to you. Go ahead, ask your question.
Good morning, Mahima. So my query is regarding the sugar stocks. So I'm not holding any sugar stocks, but would like to know if it is the right time to enter into any of the sugar stocks till the festival season, considering all the news that is coming on the sugar sector.
Right, got it, Arun. I got your question. I'll take this up with Soumya. Soumya, probably anybody who's been watching the markets for the last 2 to 3, 4 odd days, in fact, have seen a significant rally in all of these sugar names. And we've seen this on the back of, rising sugar prices, etc. And a lot of news flow has also come in. So it is valid that, for somebody who's not been a part of that rally to feel that FOMO. But do you think that considering the profit taking that's coming in a lot of these names today, any of these still look attractive enough to kind of give further potential upside?
See, Balrampur Chini has already done really well, and I think it will continue to do well. The risk reward ratio, if you are trying to trade this in the short to medium term outlook, I think you've already missed the rally. But if you are trying to invest for medium to long term, then I think Bajaj Hindustan has a very good risk reward ratio. So it has just broken out of a huge consolidation. It has had a very good correction since 2024. Started making high tops, high bottom now on the monthly, weekly charts, so which is a very good sign. Now the stop losses would be very steep, very deep, around 17 rupees for Bajaj Hindustan. I will be expecting the stock to go up till at least 28, 29 levels in the medium term outlook. So this is the one stock which I think there is a lot of risk reward.
All right, so that's the view coming on sugar names, but it's time for a rapid fire round. Somil and Nandish, try to keep your answers as short as possible to maybe buy, sell and hold so that we can try taking as many queries as possible. The first one that we have, Nandish, is for you. In terms of hospital stocks, which one is a better bet right now from a slightly long-term perspective, or at least 2 years, where there's, proper valuation also taking into picture? What would you recommend?
Apollo Hospital.
Right, the next query is coming in from on Tata Steel, and it's for you, Nandish. Subrata Mukherjee from Kolkata wants to know whether should he buy Tata Steel from medium-term perspective.
Yes, he can buy for a medium-term perspective.
Okay, LG Electronics, from a slightly long-term perspective, what is the target that you can expect on the charts, Somil?
Positive on the stock for a target of at least 1750, 1800.
The next query is on Sundaram Fastener. It's for you, Somil. Jayesh from Mumbai is holding a few shares bought at a price of 1,250. Should he continue to hold this counter?
Hold, definitely hold, positive.
Okay, HDFC Bank bought at an average price of 761. Continue to hold is what our viewer Brahma wants to know. Nandish?
Hold.
The next query is on PNB. It's for you, Somil. Kalpesh is holding 1,000 shares of PNB bought at a price of 116. Should he hold this for the next 1 month?
Absolutely hold on to it.
Okay, the next one is on JK Tires. Raghava from Hyderabad has bought 100 shares at the levels of 420. Sitting on a loss currently. From long-term perspective, continue to hold, Nandish?
Yes, continue to hold.
The next query is on DLF. It's for you, Somil. Zakir from Delhi is holding 250 shares of DLF bought at a price of 630. Should he continue to hold, sell or average?
See, for short term, definitely book profits, but for medium term, keep a stop loss of around 630 and hold on for a target of 730. So my view is positive.
Okay, the next one is coming in on BEL. Jerry from Pune wants to know if this is the right time to enter the counter for the next 2 years. Nandish?
100%, it's a good time to enter Bharat Electronics.
The next query is on Sterling Wilson Solar. Dipti Shah wants to know whether should she buy this counter from short-term perspective, Somil?
Absolutely positive.
Okay, the next one is on Balu Forge. Raghunath from Bengaluru is holding 100 shares bought at the level of 440. From a 6 months perspective, a good hold, Somil?
Positive.
The next query is on SJVN. Rags wants to know whether should he continue to hold the 2,500 shares that is bought at a price of 23. Nandish?
No close on SJVN.
Okay, any view on the chart, Somil?
Avoid the stock right now.
Radhiko Khaitan is the other one. Dhruv from Mumbai is holding at the levels of 4,625 shares is what he's holding. From a 2 to 3 months perspective, continue to hold, Somil?
Absolutely hold.
The next query is on Marksans Pharma. It's for you, Somil. Kishore from Hyderabad is holding 500 shares bought at a price of 270.4 rupees. Should he hold for some more time?
Hold on to it.
Okay, Shakti Pumps is the other one. Satyan wants to know if this is the right time to make a fresh long on this one. Somil?
Shakti Pumps, I will avoid at this point of time.
The next is on Aditya Infotech. It's for you, Nandish. The viewer wants to know whether should he buy Aditya Infotech for the next 1 year.
Yes.
The BSC is the other one.
Okay.
Srinivas from Chennai is holding 100 shares at the levels of 3658. Wants to know from a 1 year perspective, continue to hold, Somil?
Continue to hold, but my short-term view is negative.
The next query is on MCX. It's for you, Nandish. Sabita from Hyderabad is holding 30 shares of MCX bought at a price of 2,500. Should she continue to hold or book profits and get out?
It is better to hold.
Okay, the next one is on IRCTC. Suresh from Ludhiana has bought 250 odd shares at the levels of 804. Continue to hold for the next 6 odd months, Somil, or exit?
Hold.
Okay, all right. That brings us to the end of this rapid fire round, as well as it's time to slip into a very short break. Somil and Nandish, thank you so much for taking out the time and helping us answer all those queries that we did in the last half an hour. Viewers, like I said, time to slip into a very, very short break, but on the other side, we'll be definitely taking more queries, so do stay tuned in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
Welcome to India's biggest grassroots innovation movement.
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
स्पंदन एक पोर्टेबल ECG मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रास रूट इनोवेटर दिखेंगे वंदे भारतम में। Coming soon on NDTV Profit.
A world of questions. Ideas that challenge the ordinary. Conversations that connect countries and cultures. Where different worlds find common ground. NDTV World brings Nepal's ideas to the world. NDTV Anviksha, Ideas Across Borders. The Nepal Dialogue. 27th August, Kathmandu, Nepal. New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means.
Welcome back. You're watching Ask Profit, show that gets, of course, all your stock-related queries answered on this site. To answer all your stock-related questions, we're now joined by Vatsal Khemka, who's the research analyst at VK Wealthwise, joining us now. And we're also joined by Devan Mehta, Manager, Technical and Derivative Analyst at IDBI Capital, joining us now. Welcome to both of you, gentlemen, and a very good morning to the both of you. I'll take up the first question, which is coming in on Gillette. Niket is holding since the last 6 months at the levels of 7895. Wants to know for the next one more year if we can continue to hold this and whether this is looking attractive fundamentally or not. Vatsal, very good morning to you and welcome to Ask Profit. I'll take this question up with you. What do you think of Gillette? Vatsal, I think you're on mute.
Hello, am I audible? Yeah, so greetings of the day, Mahima. And it's been a fortunation for me to be on NDTV. So, can I get your question back?
Yeah. So it's on Gillette, basically, Vatsal. Our viewer, Niket, has been holding it since the levels of 7895 for the last 6 months. And he wants to know if he can continue to hold this for one more year or not, and whether this is looking fundamentally attractive or not. It's fallen to 7530 as per the current market price. So should he continue to hold is the question.
Yes, Mahima. So I think the valuations are decent. Even if I talk about from the ROE perspective, ROCE perspective, or the profit growth perspective, Gillette is a good bet. And if the tenure is for 1 year, I can surely say that 9,000 levels can easily be reached by Gillette.
Okay. The next query is Okay. The next query is on G Varnova. Okay. The viewer hasn't mentioned his name but wants to know whether can he buy G Varnova at the current levels or should he wait for some more correction on this. Devin, any view on this?
I think the stock is taking a good support near its 200 day exponential moving average. 3975 is the good level where it has the support. So I think if the view is very short term, then I think that should be avoided. But if the view is slightly positional, then it can be accumulated at this level. And on the higher side, 4500 can be the target.
Okay, all right. So that's the view coming on G Varnova TND. The next one that we have is on Pine Labs. Our viewer Karthik is saying that he can continue to hold this for the next 3 months. His buying price is around 144. The stock is currently trading at 159. For the next 3 months, Devin, do you think he can continue to hold for further upside?
Yes, hold with a stop loss of 155. The overall structure has improved from last 3 or 4 weeks. We have seen some kind of a profit booking from higher levels, but again, the stock is holding above its 20 and 50-day exponential moving average. So I think one can hold with a stop loss of 155, and this can again go towards 170 level.
Okay. The next query is coming in on Alchem Labs. Mandip Singh is holding around 10 shares bought at a price of 5,600. He wants to know whether can he hold this counter for the next 3 years. What's your view on Alchem Labs?
So if we talk about from a perspective of 3 year, I am sure that pharma sector can outperform any other sector. And considering its valuations, Alchem Laboratories valuations and its ROE and other fundamentals and how big investors are playing in this theme, I am sure that Alchem Labs can be good bet with a tenure of 3 years. And if for now, technically the chart structure looks weak, but once the Alchem Labs crosses 5700 levels, we can surely see a good rally unlocking in the counter.
Okay, all right. So that's the view coming on Alchem Laboratories. The next one that we have is, I think we've got a caller waiting by. Murli is calling us from Hyderabad. Murli, a very good morning to you. Go ahead, ask your question.
Yeah, very good morning. Good morning to everyone on the panel and the guests. So my question is on quality walls. After this demerger of HUL, I have accumulated around 100 shares at an average of 27. The result seems to be good. So should I add on more or should I hold on for some more time for a dip?
Okay, got your question. Since you got it in demerger and the stock price has moved up since then, you're sitting on mild profits because the quantity is less. But overall, in terms of where the Q1 numbers go, like you mentioned, it's been a good quarter for the company. Vatsal, do you think he should continue to hold further to see some upside or should he book out?
So for now, I think the quality balls gave a good run up. And if we book profits at the levels of 45, 46, I think that won't be a bad decision. From adding point of view, I think the investor should wait. And in case near January or near Feb, if the stock trades near 30, 35 levels, he can again accumulate and play for the again upside rally.
Okay. The next query is on Lemon Tree. Vinod from Gurgaon is holding 500 shares, bought a price of 109. He wants to add 500 more from long-term perspective. Should he do that, Vatsal?
Yeah, Lemon Tree is currently trading its near-term base, and a quantity can be added. We are covering this counter from a very large time, and currently the stock at near the levels of 110 is a good counter. And once the stock crosses above 120, we can see a good rally unlocking in the Lemon Tree hotels, because I'm somewhat bullish on major Indian hotels, luxury hotels, the way Indian crowd is moving into spending and after COVID. So I think this stock can give a run up somewhere around 10 to 20% from the current prices. Yeah.
Okay, all right. So that's the view coming on Lemon Tree. I think we've got Venkat calling us from Bengaluru. Venkat, a very good morning to you. Go ahead, ask your question.
Yes, good morning. Thank you for connecting me. I have 500 shares of Vishal Mega Mart at 94 rupees. So recently the stock is facing some downward movement. So can I expect upward movement shortly?
Okay. What is the time horizon that you're looking at, Venkat?
Yeah, 1 year.
Okay. Okay, got your question. I'll take this up with Devin. Devin, what do you think of the charts for Vishal Mega Mart? Do you think the charts could move up from here or should he book out?
I think the buying price is very much attractive. So he should hold with a trailing stop loss of 101. If it breaches 101, then he should try to exit. But as far as levels are concerned, there is a strong support near 101 levels. So hold with a stop loss of 101. Wait for a bounce back. Overall structure is weak, but again we can witness some bounce back towards 111 levels. So at that particular time, he can try to exit and book profits.
Okay. The next query is on Aditya Birla Real Estate. Angad from Indore wants to know whether it's the right time to buy this counter from medium-term perspective. Deven, your view on this?
Yes, I think overall reality space is doing really well, and even Aditya Birla Real Estate is consolidating largely in a range. On the higher side, 1475, 1480 is the resistance, whereas on the lower side, 1375 is the strong support, and we have seen a sideways consolidation in this counter. So there is a conditional buy. If the stock surpasses above 1475 levels and holds above that, which is also 200-day exponential moving average. So if it holds above that, then that is a good buy. We will see a good breakout in this counter. So for short term, he can buy after this breakout. On the higher side, 1600 can be the first target. After that, we can see around a move towards 1710. So above 1475, we can buy with a stop loss of 1375 for the target of 1600 and 1710 levels.
Okay, all right. So that's the view coming in on Aditya Birla Real Estate. The next one, David, is on Paytm. Our viewer Kantiba has bought 50 stocks. I think at the current market price is what he's saying. So he's just probably bought it and wants to know if he can continue to hold this from a short-term perspective and whether he can see some profits from here on. What do you see on the charts?
I think the stock has rallied well from last 4 consecutive weeks. We can see the high top, high bottom structure. The overall structure is definitely positive, but the buying price is at high levels. I think we can hold, but there should be a strict stop loss as far as short-term view is concerned. So 1550 is the stop loss levels. You can hold with a stop loss of 1550. Once the stock surpasses 1660, we can see some further move towards 1700. But again, you need to book profits as the stock is already moved up and slightly showing a sign of overbought at on daily charts.
The next query is on LIC. Kalpesh has bought LIC's call option, 425 rupees call option at a price of 3.4 for August expiry. What should he do now? Should he continue to hold or exit this one? Any view on this, Devin?
I think it's a August expiry, so I think one should try to exit on small bounce. The overall structure is good. It's trying to the stock is trying to get a reversal, but as it is August expiry, we have just 2 days left for the expiry, and the option is out of the money. I would prefer that you should try to exit and shift to September month series. So that will be good, and I'll give the spot level. So on the low side, 413 is the support levels. So until and unless stock is holding above 413, I think the structure is positive. We can see some move towards 435 levels. So one can shift to the September series.
All right. The next one that we have is coming in on Brigade Enterprises. Sai from Hyderabad has bought this at the levels of 635 and wants to know from a 3 months perspective if he can continue to hold this one or not. The stock is currently trading at 631, so very near to the price that he's bought it at. 3 months view on the charts, David, what would you recommend?
I think the overall structure is positive. The way stock has given a breakout above 585 levels, the structure is positive. I think one should hold this counter. In fact, he can add on dips if possible near 615 levels with a stop loss of 588 for the target of 680 and 700 levels.
Okay, all right. The next one that we have is coming in on PCBL. This is from Murugappan, who's writing us from Chennai. He's bought PCBL at the levels of 385, 120 shares is what he's been holding. He says the result has been good and says that he's a long-term investor and whether he can continue to hold this one or not. Vatsal, what would you recommend him?
See, the profits have been decent for the quarter. But talking from a chemical sector space, I think because of the recent, even I talk about the recent disruption because of the Iran-US conflict or the energy prices, I think for now, chemical sector should go into a consolidation, continuous consolidation. So I correct my statement. And from a valuation point of view, also, I don't think PCBL is a good bet for now. and I'm not expecting much in the stock. And I think once it breaks at consolidation near the range of 320, we can see rally till 400, but it should be sell on rise. I don't think the way stock is performing and the way management is coming out with the statements, I think it is a sell on rise stock.
The next one is on Ola Electric. Mohit from Kerala has around 3,300 shares bought at a price of 45 rupees. He wants to know whether there's a chance that this stock could swing on the upside in the next 6 to 8 months. Devin, any view on Ola Electric?
I think 35 is the strong support. If it holds above 35, we can expect a bounce back on the higher side towards 42 odd levels. But again, the structure is weak. It is trading below all the important moving averages. So one can hold with a stop loss of 35 and try to exit on bounce.
Next one is on Bellrise. Murli from Hyderabad has bought 30 odd shares at the levels of 99, I believe. Let's try to pull the stock up and see as to what it's trading at right now. So very attractive pricing. From the next 2 years perspective, he wants to know whether he can continue to hold this one or not. What's your view on Bellrise?
So basically, we were bullish on auto sector and especially from auto components part. And I think Bellrise is in a good uptrend. And from a valuation point of view, or from the ROI point of view, or from the way management is developing, or the way management is expecting to increase its manufacturing capacity, I think Bellrise would gain in this increase. And keeping a stop loss of recent lows somewhere around 230, we can hold the stock for the levels of 280 at most. So once 280 achieves, we can go for 300, but it is a good bet, and the one can continue to hold because we are very bullish on automotive sectors. Yeah.
Okay. The next query is on Yes Bank. Shraddha from Indore is holding 100 shares bought at okay, she hasn't mentioned the buying price, but she's been holding this counter for the last 7 years. Should she continue to hold or exit? Any view on this, Vatsal?
So we do not track Yes Bank specifically, but from a valuation point of view, I think even she holds it for 1 or 2 another years, I don't see much new potential. Although we have seen institutional buyings in Yes Bank, and from the lower levels, it has gave a good run up. But I think it needs more than just an investment. I think it needs to unlock other sectors along with simple banking sector. So I think Yes Bank would be a normal bet. Go for other players in this sector only.
Okay, all right. The next one that we have is coming in from Zeenat Kausar, who's writing us from Ranchi, asking about Anantraj. 100 shares is what she's bought at the levels of 608 and wants to know if she can see further upside in this one or not. Devin, what would you recommend on the charts for her?
I think the buying price is really attractive. One can hold with a stop loss of 620, just a 10 rupee stop loss from current market price, but one can hold. We can see some further up move towards 655 levels, so one should try to book profit at that levels.
Okay, the next one that we have is coming in from Satish Kumar, who's asking about Ashok Leyland. He's bought 25,000 shares of Ashok Leyland at the levels of 67 is what he's saying, and wants to know whether to continue to hold this or not. Very attractive levels, Devin, is what he's entered at. The stock is currently trading at 173 and large quantity, right? So he's sitting on a very good amount of profit. What would you recommend him?
Hold. I think the overall structure is positive, and the way the buying price is very much attractive. So one should hold definitely. Once stock process 180 levels, we can see a good up move towards 210. Definitely hold this counter. Safe stop loss could be 147. If it breaches that, then only one should try to book profits. But the way the attractive pricing is, I think one should hold definitely.
The next query is on Vedanta. Sanjeev Jain from Kota, Rajasthan is holding few shares, bought 2,000 shares, bought at a price of 313 rupees. He can hold the counter for the next 2 years, but should he do that, Vatsal?
Yeah, we are bullish on Vedanta. We have covered Vedanta for a very long period, and before demerger ever happened in Vedanta, we were bullish, and so now also we are kind of bullish. Reason being the valuations and the valuation unlock which it has given to the investors also, and the way government has come up with the Samundar Manthan theme. I think oil and gas sector would be a major beneficiary, and Vedanta surely would play a good role in that theme.
The next one that we have is on Syngene International. The Ramana Murthy from Hyderabad has got around 150 odd shares at the levels of 1374. Sitting on a 13% of loss is what he's saying, and wants to know whether he can continue to hold this. The time horizon is not mentioned, but overall, are the charts constructive enough, Devin? What do you make of the charts?
No, I think this overall structure is weak. One should try to exit on bounce near 430 odd levels.
The next query is on RVNL. Ashwin from Bangalore is holding 2,000 shares, bought at a price of 44. He's a long-term investor. Should he continue to hold this counter, Vatsal?
See, for the last 2 years, if we talk about the railway sector, last 2 years it has been a disaster for the railway sector. But for now, there has been seen a recent buying at lower levels, and the way railway stocks are getting support at recent levels. I think for railway sector, the bottom has been made, kind of bottom. We can't be sure for that. But yeah, RVNL can be a good counter in this rally. And even if the investor wants to add at current levels, he or she can add the stock. And from valuation perspective, I think it is a bit of a worry from profit perspective. But once railway sector gets a support from the government, we can surely see a kind of support rally in the RVNL.
So that's the view coming in on RVNL. The next one, Devin, that we have is between two stocks, that is M&M Finance and L&T Finance. Which one is a better bet right now to kind of enter into for the next 1 odd year? What do you see on the charts? Which one is a better placed?
I think both the counters, in fact, M&M Finance and L&T Finance, both the counters are looking good on the charts. But if anyone wants to enter at current levels, I think L&T Finance is a good bet. The way the chart has shown a consolidation, I think the structure is positive. I think on the weekly chart, it has given a breakout of a falling trend line. After that, we have seen a good consolidation. So L&T Finance is a good bet with a stop loss of 298. One should accumulate this at current levels. On the higher side, once it crosses 340, I think the next target will be around 380 and then 395. So yes, L&T Finance is a good bet for now.
Okay, all right. That's the view coming on both M&M as well as L&T Finance. It's time for our rapid fire round now. Vatsal and Devin, the drill is to try to keep your answers as short as possible so that we can try taking as many questions as possible. So keep your answers to buy, sell and hold. The first one that we have is from Zakir, who's writing us from Dubai, asking about Colgate Palmolive, and he's got around 50 odd shares at an average price of 2125. Of course, we did hear the management resignation coming in from Prabha Narasimhan. That's probably weighing on the stock right now. But Devin, what do you make of the charts?
Exit.
The next query is on sale. Santhi from Bangalore wants to know whether should she buy this counter. Any view on this, Devin?
No, I think avoid this counter.
Okay, the next one that we have is coming in on Polycab. Is this a right time to enter into this one for the next 3 odd years, Vatsal?
Yeah, Polycab, I think the way Polycab has shown the results, and in comparison to KEI, I think Polycab is a bit of undervaluation, trading at undervaluations. Although from a perspective of 3 years, I would say 8,500 would be a good level for Polycab.
Right. The next query is on Balrampur Chini. Vatsal, it's for you. I would request you to keep your answers short. Asma from Bangalore is holding 50 shares at a price of 680. Should she hold or exit?
It should be an exit.
Okay, the next one is on EID Parry. Devin, what do you think? This is the right time to enter the counter?
No, I think avoid.
Next query is on Quality Power. It's for you, Devin. 26 shares is what the viewer is holding. Bought at a price of 425. Should he continue to hold this counter or exit?
I think hold with a stop loss of 1300.
Okay, REC, the viewer's average buying price is 360. Continue to hold, Vatsal?
For now, it is technically it is trading in a weak zone, so avoid.
The next query is on HDFC Bank. Lakshmi from Telangana is holding 200 shares, bought at a price of 780. Should she hold this counter for the next 3 to 5 years? Vatsal?
Sorry, can you repeat? Yeah.
HDFC Bank.
Yeah, it is on hold.
Okay, the next one is on Bharat Dynamics. 70 shares bought at the levels of 428. Kameshwara Rao from Kakinada wants to know whether he can continue to hold this one or not. Devin?
Hold with a stop loss of 1300 levels.
Next query is on GE Shipping. It's for you, Vatsal. Ram from Hyderabad is holding 300 shares, bought at a price of 1,560. Should he hold or book losses?
No, hold it for the long term.
Okay, the next one is on data patterns. Priyanka Ashar has got 50 shares at the levels of 3917. Good time to book profits, Devin?
Yes, I think good time to book profits.
The next query is on Delta Corp. It's for you, Vatsal. Kishore from Hyderabad is holding 1,000 shares, bought at an average price of 86.56. Should he continue to hold or exit?
It can be on hold, but do not add more quantity.
Okay, Railtail is the other one, Devin. Our viewers bought it at the levels of 179. Venkatramani wants to know from a 12-month perspective, should she continue to hold?
Hold with a stop loss of 275.
The next query is on Haikal. It's for you, Vatsal. Virupaksh is from Bangalore, is holding around 500 shares, bought at a price of 210. Should he hold this counter for long term, Vatsal?
Sorry, we are not tracking that counter.
Okay.
Okay, Devin, Urban Company, is this the right time to make an entry? And what levels should we watch out for?
I think one can enter at current market price. Again, one should try to enter on dips as well for medium to long term purpose.
The next query is on Schneider Electric. It's for you, Vatsal. Mahalakshmi from Hyderabad is holding 135 shares, bought at a price of 1,364. Should she hold this for next one more year?
Sorry, but we are not tracking this idea.
Devin, anything on charts?
No, I think one should avoid. If it is there, then try to exit on bounce.
Devin, what about MCX? Srinivas has bought 500 shares at the levels of 2,900. From a 6 to 10 month perspective, what are the charts indicating?
Hold. I think the structure is positive. One should definitely hold for the target of 3340. Stop loss can be 3030.
Okay, all right. That brings us to the end of this rapid fire round as well as Ask Profit. Vatsal and Devin, thank you so much for taking out the time and helping us, solve all those queries that we tried to answer today in Ask Profit, which by the way has turned to that number of 80. But like I said, completely out of time on this edition of Ask Profit. But viewers, do stay tuned in because KYC is coming up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
A new Nepal, new possibilities, a new opportunity for regional cooperation. NDTV World brings together the voices defining the next chapter of India-Nepal relations. Nepal's Foreign Minister, Shishir Khanal, Finance Minister, Dr. Swarnim Wagle, Dr. Shashi Tharoor, actor Manisha Koirala, and Dr. Ram Madhav. Diplomacy, commerce, security, infrastructure, tourism, soft power. NDTV Anviksha, ideas across borders. The Nepal Dialogue, 27th August, Kathmandu, Nepal.
Welcome to India's biggest grassroots innovation movement.
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
स्पंदन एक पोर्टेबल ECG मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रास रूट इनोवेटर दिखेंगे वंदे भारतम में। Coming soon on NDTV Profit.
3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV, when it really matters.
Some of my friends and many of my critics called me arrogant. My philosophy is very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
"Man lo."
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where...
Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey. This is the show where we get you the hottest companies, good stories, and maybe alpha for your portfolio. The company today is a very interesting one. Try to guess it. And of course, you will guess it, especially if you are from Bengaluru. It's a Bengaluru-based realty player. I know 3-4 larger names are there, but let's understand a little bit more. The FY27 sales guidance is 1,200 crore rupees. If you have been listening to the con calls, you'll try to guess this company by now. It's a mid-cap company. Stock is up 33% from March lows. And the presence is not only in Bengaluru, but Mumbai as well, also Pune and Chennai. The company which I'm talking about is Puravankara. This is the company which we'll talk about. But why are we calling this company? The question is, why now? The company, of course, has come out with its numbers also in the Q1 segment. And the demand trends and the retail trends is something which I really want to know, especially how things are coming in the sub 1 crore segment. This is that segment, that 1 to 2 crore, 1 crore below segment, which the company majorly operates in. The launch pipeline in Bengaluru markets is something we'd like to understand. They also have redevelopment projects in Mumbai. Pre-sales collection trends and realization, those operational numbers seem to be strong. The plotted development business, this is a new dhanda which is there in tier 2 or tier 3 places where the plotted developments are there and it is selling like hotcakes. I can say you that much. Are the construction costs on the rise? We have seen that in the first half of calendar year 26. That sales guidance and the debt reduction plans. Debt seems to be on the higher side. What is the company doing to deleverage the balance sheet? And also the growth outlook for the commercial projects. That's the potential also we'll try to understand. And there's something very interesting. Senior living segment. Everybody's talking about it. Are the company doing anything about it or not? That's the big question to be asked. But let's understand the company layer by layer, what it means. Let's analyze and make sure we give you the 360-degree picture of where this company stands. It's a realty player from Bengaluru with a pan-India presence. Largely southern and western markets is something to look at, especially in Bengaluru and Mumbai. This is where the majority of the projects are there. The developing grade A commercial real estate as well. That's around 3 million square feet coming in from Puravankara. Also, if you look at it, its arm Starworth offers technology-led construction solutions. They also have a lot of interior fitting arm as well. They have completed 97 projects totaling 59 million square feet. Also, if you look at it, they have a total land bank of 38 million square foot and ongoing projects which add up to roughly 35 million square feet. 22,000 plus homes are under the development. That means the revenue potential is higher. 1 to 2 crore segment, they had a 41% sales coming in the first quarter of FY25. That was an interesting data. The total area sold is roughly, you could say, in the first quarter was up 9% on a year-on-year basis. And looking at the numbers, the sales value interestingly went up 28%. So you can see the pricing has gone up.
in the markets, especially in Bengaluru. Also, the average sales realization that also went up by 18% on a year-on-year basis, coming in at 10,589 rupees per square feet. But how's the debt picture looking like? Everybody's talking about it. The net debt is slightly higher, 2836 crores is the amount if you're talking about. And if you understand the net debt to equity ratio is stable, it's around 1.6. But we'll try to understand what's the debt reduction problem, looking like. Slight jump coming in cost of debt also, and that happens, finance cost goes up, P&L gets hit. Bengaluru and Mumbai Pune market, this is where the majority of the work is happening. 59% of that just comes from one single city. Then of course followed by Mumbai, Pune, Chennai and other markets as well. That's also how the launch pipeline is also skewed much more towards the Bengaluru market. The launch pipeline is especially a GDV, which is nothing but gross, you could say gross development value, that comes in at 27,300 crore rupees. Also, there are important points to understand. The estimated future cash flow potential is almost 8,636 crore rupees. And interestingly, the redevelopment project, that's what mostly happens in Mumbai market. That is something they are having 5 projects of it. So that's a pretty interesting pipeline, to be honest. But what may work for the company? The valuations are very attractive. I'm going to get you those valuations also. You have to stick with me. The robust jump coming in the sales realization, it's actually holding up when it comes for Puravankara. The collections remain robust. Also, another important point is the balance sheet is improving, especially with the Purva Zentek sale which has happened to an AMC company. Strong launch pipeline is there, that augurs well, and the sales guidance is pretty strong. But what may not work for the company? There is hardly any analyst coverage, and that's why I picked up this company in KYC to show you the entire 360-degree picture of Puravankara. Lack of DI participation, this was very surprising for me for a company which is already having a long history. Why there is so less DI participation, and the rise in construction costs. This is of course an industry issue, so take things with a pinch of salt. So this is the entire picture for Puravankara on what may work for the company, what may not work for the company. But what definitely works is our analysis and research, and that we do at KYC with the ratings, which we already, most of the viewers who know and track this show know it. But for the new, income statement, balance sheet, cash flow comes in, and I've got in operational parameters here to talk with instead of return ratios. Shareholding street cred is of course there, especially from the last 4 to 5 years, how things have moved. The valuations, we'll try to see what's there in the history and why there is so much cheapness in this counter right now. And the last one but not the least is the outlook, the numbers we'll be looking at, what guidance the company is throwing, and is there a chance that the guidance might get upgraded? That's the one we'll have on the conversation. But the income statement is the first one. Largely we have seen a good move coming in the top line numbers, and they have made a stable income statement. The Q1 numbers I would like to point out, that is where the magic has happened. A good strong Q1 has come in, and the margin also has seen a big jump. But top line, you look at it, have a look, that's around 62% year-on-year basis growth coming in. So largely net the income statements looks really strong, and a minor jump up has happened in the margins as well. But to be honest, when you are tracking a real estate company more than margins and PAT, you should be looking at pre-sales and collections. I'll get you those numbers as well. As of now, it's a strong thumbs up for income statement. For balance sheet, largely the debt levels seem a bit stretched, but that's almost there. But the company is trying some deleveraging actions, especially by selling a couple of their commercial properties, and that is where the street feels like it's trying to balance. So I'm also going to balance in my rating, and I'm going to give this a neutral rating. So we did income statement, we did balance sheet, but let's try to understand cash flows. There's always a lumpiness element involved when you track a real estate company. So there is of course an improvement in the operating cash flows from FY25, but to even things out, it's not a very important rating parameter to track. Of course, the operating cash flows show lumpiness, so it's a neutral rating. This is important because these are the return ratios. What is the total collections coming in? The last 5 quarters I have taken the data, and look at that momentum, from 857 crore, despite of seasonality, festive season, we are seeing a good uptick coming in the collections, and this is good. This also aids the working capital ratios when you judge a company in a balance sheet, especially in the realty player. So it's a strong thumbs up. Shareholding, nothing has changed literally, last 3 to 4 years, the shareholding has remained the same. promoters at 75, FIs at 17, DIs only at 1%. That's where a little bit of concern comes in for me. Why DIs have not increased their stake? But nevertheless, there hasn't been any change. So if there's no change, of course, our ratings also won't change so much. So it's a neutral rating here. But street cred, has the stock made money for the investors, be it short term, medium term, long term, or extra long term? Because we have a 5-year analysis as well. Last 5 years, 125% returns has come in. So that's okay, decent returns coming in. But from 2024 highs, the stock is still down 56%. This year, the stock is down 25%. Also, if you are a trader or a short-term investor, congratulations. From March lows, the stock is up 33% as well. So sell both sides. It's kind of balancing it out. So I'm going to give this a neutral rating. Let's look at how the numbers have fared on the valuations front. I had explained you that from the 24 highs, the stock is still down more 50%. And look at that. The current 12-month forward P is just at 18 times. A lot of real estate companies are trading below their net asset value. Also, the peak numbers, you can avoid that, but the average numbers, it's still cheaper by more than 50%. That means the valuations are almost at its 5-year low levels. So that is why valuations look pretty good. And not only for Puravankara, a lot of real estate stocks as well, they have taken a beating over the last 2 years. Some recovery did happen over the last couple of months, but let's see how this space pans out. So it's a strong thumbs up here. Outlook is also good. Strong execution is expected. That's what the street is also believing. The company has stated 2,777 completed units are there for revenue recognition. That is where you see the stability coming in. Estimated surplus of 19,831 crore rupees over the next 3 to 5 years. This is the number you should be tracking, whether the company does the walk the talk or not. FY27 sales guidance is roughly 11,200 crores. So outlook is strong. So I have given this a thumbs up as well. But let's understand the entire KYC ratings for where Puravankara actually stands. Income statement has been done well. The Q1 numbers were also very strong. And that's why I had given this a thumbs up as well. Balance sheet cash flows, there is some neutral element to it. But operational parameters, interestingly, has done well. So we have given this a strong thumbs up. Shareholding street cred over a period of time, there is for, there is against, and that's why we have given this a neutral rating. But the valuations of the company as well as a lot of industry players has been also cheap, and outlook is also strong. So overall 6 out of 8 coming in as the KYC rating for Puravankara. Interesting take, right? But our interesting take has some more layers to it, and we'll be joined in by Malanna Sasalu. He's the CEO of South region of the company. An interesting take about him. He is important in scaling startups profitably across APAC, which is Asia Pacific region, as well as North Africa, and education coming in from Harvard Business School. It'll be a very interesting conversation with Malanna, especially on the growth prospects of the company as well. But before that, we'll take a quick break and we'll be back soon.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
Some of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
Man lo.
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters. A world of questions. Ideas that challenge the ordinary. Conversations that connect countries and cultures. Where different worlds find common ground. NDTV World brings Nepal's ideas.
Welcome back to Know Your Company, and now we are joined in by Mallana Sasalu. He is the CEO at South Puravankara. Good afternoon, Mallana. It's always a pleasure to have you with us at NDTV Profit, and of course, Puravankara is coming first time in KYC also. I just wanted to understand first of all, how are the demand trends looking like, especially in that area which you work at, between that less than 1 crore and between 1 to 2 crore. Is there any sentiment changing here, or the demand is robust?
Thank you, Sharad. Thank you for having me on the show. Just jumping into the question that you have, and I think the markets are quite robust in a way that it's the sales are quite steady, and I don't see any kind of sentiment changing. Considering the job generation that is happening in major cities like Bangalore, Hyderabad, and Chennai, and Pune, we see that the same thing is getting translated into home buying. And in fact, that the demand and the supply are going hand in hand, and almost like, if there are 10,000 units are absorbed, there are 10,000 units are being launched. And so that's the scenario in each of the cities. And it's a really great market to be in. It is not the frenzy that what we saw, neither it is any down. So it is just the market is very stable and very good market to be in right now.
So the market is stable, but how's the launch pipeline looking like? If you could help us out with some numbers, especially in the southern regions.
The launch pipeline is quite robust for us. So we got around 25 projects to be launched, around 14.77 million square feet. And the top line of this one, of the GDV of those launches that we have planned, is around 24,000 crores. In Bangalore, we have around 14 projects to be launched, and in 3 in Cochin, 2 in Chennai, and 1 in Coimbatore. And there are 5 projects in the west, that is Mumbai. So that's around 2.2 million square feet in Mumbai. That is what we are looking at. And depending on how the approvals, usually approvals are not in total control with us. Depending on those approvals, and we should be launching most of these projects in this year.
Well, if the demand is strong and your guidance also looks pretty strong, so how are the pre-collection trends and realizations looking? And is there a chance of an upgrade of your FY27 sales guidance here?
So I'll be very optimistic about what is happening, and we're quite comfortable, I can say, with the guidance that what we've given, rather than saying that I want to, of course, as business, that we want to beat the guidance that what we have given. But nevertheless, at this point of time, I'll hold it steady and see that, as we go forward, what happens. And with regards to collections have been fantastic. As you can see over the last 4 years, that there is always an uptrend in our collections. And the same thing is going to continue, considering the previous year's launched projects and the launches that are coming up. And also, we are consistently hitting the milestone that are required for collection. So overall, I think that we're in great shape.
So the company is in great shape, the operational parameters we discussed, and apparently the guidance, you're not upgrading it, but at least you're saying it's going to be steady as of now, right? But the plotted development business, my travels across the tier 2 places, tier 3 places, lot of announcements are coming in, especially in this non-tier 1 places. How does it look for your business, and where do you think more ideas will come in this space, plotted developments?
Yeah, so we are a full stack developer, right? So we start from 60 lakhs rupees to 12 crore rupee units also we sell. In between that, there are plotted developments as well. So that's an important part of our business. And so we are pursuing, unless that you have large land parcels, plotted developments do not work. You can't do plotted developments with 10 acres, 12 acres. So aggregating the lands or finding those opportunities where the land parcels are larger than 30, 40 acres is a challenge for anybody. And the challenge is there for us also. Having said that, we are coming up with some developments like that in Chennai, and also that we are pursuing a couple of projects in Bangalore as well.
Okay, so plotted projects is also something which is everybody's talking about. But the construction costs, it seems like this year a lot of things have turned expensive, hard commodities, soft commodities, everything around us. How are you coping with it? Is there any mitigation at play here? How does this work?
Yeah, so this is again, influenced by many factors that are there. The West Asia conflict, and the labor inflation that is happening, and some of the things that happened in West Bengal, where the laborers went back for the festivities and also elections, and only 70 to 80% of the people came back to different cities. So we continue to have those challenges, and the labor inflation is going to take the cost up. Materials, okay, they are pretty much under control, where there is a little bit more gas dependent products like ceramic tiles and the CP fittings and so on and so forth have gone up a little bit. But that is part of the business, I guess. And 5 to 8% going up on the construction cost is something that we couldn't avoid. Coping up with that is usually on a thumb rule on the revenue side. If you're selling at 12,000 rupees, your construction cost is somewhere around 4,000 rupees. So it's around 33% is what it is. On 33%, 5 or 8%, and I think the businesses should be able to absorb that kind of hit.
Okay, so absorption would be business as usual, but your debt numbers, slightly elevated. Or do you think it's comfortable? And also, if you could just give us the debt reduction plans going ahead.
See, the debt, we need to understand that the debt, either to run the business, that is, operationally, are we borrowing the debt, or is there any kind of distress and stress so that we are taking the debt? This is all mostly about the growth. In this year alone, that is in the first quarter of the year, that we have done deals and paid, and putting the land parcels to work. That's around 5,300 crores GDV. So our debt has gone up by around 500 crore rupees or so. And all of that has gone into the development. All of them have gone into growth. And also that whatever the collections that we are doing and whatever the accruals that we have, that are also being pumped back into the business. So we are very comfortable. In fact, more comfortable than we ever were in the last 3-4 years. And I should say that it is backed by a 58,000 crore rupees of portfolio that we have built over the last 3-4 years.
I was just seeing these areas, there's a lot of growth and expansion happening, but it's largely Mumbai, Pune, Chennai and Bengaluru. Are you trying to attempt to make any inroads into, say, northern markets, or maybe eastern markets, or central India?
Yeah, so there are some, we're exploring the possibilities, and these are all large capital investments, right? So we are carefully exploring the possibilities in northern India, and I couldn't say more than this one, and because when it happens, then we will definitely be very happy to talk about it. For now, I will say that we are in an exploratory mode.
That's a good hint you have given to us at KYC, and that's why this show is known for, where you get good forward-looking ideas from the management. I want to understand a little bit, Malana sir, on the growth outlook for the commercial projects. That is a very decent annuity kind of a business, and it does well, especially in markets like Bengaluru. I wanted to take your view on that.
See, in Bangalore North, we have a project by name Purva Aero City, where we have built around 1.2 million square feet already built. And we have received the occupancy certificate also, and we are responding to many number of requests for proposals from different occupiers. And we are quite confident that in this year we are going to crack through, and we're going to do a large lease deal there. Apart from that, in Hebbal, where there is a land parcel which we were working on it for some time. There were some revenue matters to be resolved, and now they are more or less resolved. That would be another 1 million square feet that's going to come up. And yes, commercial team is working really hard and looking at new proposals in Pune and in Bangalore, and we are quite committed to this platform for the commercial. As you know, that it is capital intensive. It is not a cash flow business, but like residential. So we have to tread little carefully, and so that we're committed to this platform.
Right. And one more question, Malana sir, is on the senior living. Everybody is talking about it. And I think earlier conversations I had with the management, there were some hints on that. Are you working towards these projects?
Well, I'll give you a little bit about the senior living, and the senior living comes with three separate components. So the three separate components is, one is the real estate, the other one is the kind of hospitality, and the third one is the healthcare. And we are not in that hospitality, healthcare kind of a business, because that requires a larger commitment. What we will be doing is that in our larger developments, and then we are going to be reserving some of our towers for senior living, and we'll work with a few partners who are going to be providing the services to that. And so that's the methodology that we will go into.
JV, one last query, a quick one. What is the Gen Z buying right now? What are their buying trends looking like? I'm sure you will have a little bit of data on it. A lot of Gen Z viewers are there in KYC. So wanted to understand that.
They are no different from our generations, and they also want to live in a great house, and more than anything else, they're looking for experience. One of the things is that a 2-bedroom or a 3-bedroom or a 1-bedroom house is not going to be remarkably different from each other, from developer to developer or from geography to geography. What they're looking for is more experience. What do I do outside my apartment? Whether this place has where social activities are there. It's just a mere clubhouse. Is that good enough? Is there anything more than that? And we are very committed to providing that experience, and that's where we are going. And I'm pretty sure that the next generation of people are the ones who are going to take this Purvankara.
Very nicely put. Be it Gen Z, Millennial, Gen X, whoever, everybody needs a good experience, and that's what is there, and that's what we are giving our viewers at KYC also. Malana sir, it's always a pleasure to have you with us and do this conversation on the real estate and your company's growth prospect sides. Thank you.
Thank you, Sharath, and thank you very much for having me here, and all the very best for your KYC program. It's come out wonderfully well. Thank you very much.
Thank you very much, sir. And this is what it is. Interesting stories come out in KYC, interesting trends come out, and maybe you can make alpha in your portfolio. Interesting, right? So for all these stories, stay tuned to NDTV Profit, and yes, keep watching KYC all weekdays at 11:30 a.m.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
A world of questions. Ideas that challenge the ordinary. Conversations that connect countries and cultures. Where different worlds find common ground. NDTV World brings Nepal's ideas to the world. NDTV Anviksha, Ideas Across Borders. The Nepal Dialogue. 27th August, Kathmandu, Nepal.
Welcome to India's biggest grassroots innovation movement.
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
स्पंदन एक पोर्टेबल ECG मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out, and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रास रूट इनोवेटर दिखेंगे वंदे भारतम में. Coming soon on NDTV Profit.
3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV when it really matters.
Some of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
"Man lo."
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
Range-bound day of trade on the Lal Street today. Nifty hovers near 24,200 level. Sensex gains just shy of 100 points. Sectoral picture remains mixed with defense, metal leading the gains today and FMCG auto on the back foot. Oil prices have pulled back slightly but remain on track for around a 6% weekly gain, with Brent above $93 a barrel. The rally is being driven by the US economic pressure on Iran and fresh concerns over possible supply disruptions around the Strait of Hormuz. Gold financiers are in focus as rising gold prices and a positive JP Morgan initiation lifts the sentiment across this sector. IFL Finance led the gains, while Muthoot Finance and Manappuram Finance also moved higher. The rise in gold prices strengthens the value of collateral, potentially supporting gold loan growth and asset quality. Sugar stocks are under pressure today after the government allowed the duty-free imports of 1 million tons of raw sugar. The move aims to boost the domestic supplies and cool the record high prices ahead of the festive season. Welspun Corp a buzz after bagging its largest ever order, taking its global order book to a record $4.4 billion. Meanwhile, UBS has initiated coverage on Urban Company with a buy call, seeing India's online home services market entering a Blinkit moment with strong growth potential. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Poddar and let's take you through the market momentum today. Well, it's sluggish in trade and directionless when we talk about the Indian markets. A lot really has happened when we talk about volatility in the market for the entire week. So midday on Friday, it is flattish, but remember that Nifty 50 is at least holding on to comfortable levels of 24,200 and above. So that's where it needs to really end. So flattish when we talk about Nifty 50. In fact, if it were not for HDFC Bank, which is the top gainer today, which has literally lost a lot of ground year to date, but still has been really going through the vagaries of the volatility that the banking sector has seen. So HDFC Bank adding over 17 points to Nifty 50 is clearly one of the single largest turners of red into green when we talk about Nifty 50. Taking a look at what the bank is doing, well, well. Bank Nifty is also taking charge overall as a sector and outperforming the key indices by a large margin, and that's what is adding some weight to the benchmark indices. While when we talk about the broader market and the mid-cap and small-cap universe, well, it is also flattish in trade. So there is a fair bit of directionless market all across that is being seen. When we take a look at the sectoral play also, there it's half and half quite literally between the sectors. So therefore, that particular chart needs to be seen very clearly. Metals being high beta stocks, they are the top gainers today, along with defense, real estate, energy. Bank is also one of the good performers. But on the downside, the consumption stocks are on the back foot today, with FMCG, auto, pharma, consumption overall showing a little bit of slowness. We also had several economists talk about the El Nino and the inflation impact that is going to weigh on the consumption pattern, especially in the rural economy. So that needs to be weighed in and baked in into the market. That's a snapshot really. Let's talk more about the market and how to really strategize in a listless, uncertain and some largely volatile market environment. Arvind Kothari, who is the founder of Niveshaay Investment Advisors, joins in now. Arvind, good to have you on NDTV Profit. My first question, how are you strategically really positioned in a market like this, which are undergoing vagaries of several uncertain factors which are not particular to India and the Indian economy, while on the other side, it is also having a fair bit of impact going forward on the economy. So what is the sense and the outlook on the market that you're seeing in the near to medium term for this calendar year?
Hi, thank you so much for having me. And our take on the markets are generally not much because we don't play the markets overall. Our focus always has been to play long-term trends. And in that, if you look at geopolitics or any kind of externalities, they generally have some impact. But if you take a 5 to 7 years time horizon of business cycles, these sectors tend to really outperform significantly. If you look at what's happening in India also, the large cap universe is stagnating in terms of the profit pools that they are generating. And the profit pools are shifting towards a lot of newer sectors, which is clearly visible, for example, in the FMCG space, where D2C brands are completely taking away market share and profit pools from the legacy brands. Also, if we look at what is happening with the energy mix in the economy that we identified post-COVID, the whole transition towards solar took away the profit pool from a lot of existing power towards, the new power, which was solar, and also a lot of investments in the grid that happened because of that. Similarly, we see a trend happening towards battery energy storage in the coming 5-6 years. If you look at the storage market in the country right now, the scale is just going to, blow off a lot of charts, because currently India might be just on a base of 8-10 gigawatts, which is slated to go to 50 gigawatts. And the cell capacity to manufacture in the country is hardly 1.5 gigawatt, which needs to go to 100 gigawatts by 2030. And all the players who are in this ecosystem will benefit, because whether it is EV, it requires a lithium ion cell. Whether it is battery storage, it requires the LFP, which is becoming the dominant technology. So we are playing this market via sectors which are growing fast and not looking at the profit pools which are stagnating.
All right. So you talked about many themes at this particular time, Arvind, but also give us a sense on how you're deploying cash. Is it going to be on a sustained basis? And what percentage are you keeping for a future downward trend when you can do more stock picking at a lower valuation? What's the sense on that as well?
So we generally, don't believe in keeping cash, as on this point in time we are 100% deployed, and we just keep on deploying cash as and when the cash arrives in the funds. So our focus has been on sectors like Bess as was talking about, or data centers, where we've deployed almost 60% of our portfolios, and the balance 40 would be in electronics space and ecosystems that we're really betting our money on. Hardly 1% kind of cash would be there in our portfolios. But what we really look at is the quarterly numbers also reported. If you look at what is happening with, for example, a neo cloud ecosystem in the country, the profit has just gone up 5-6x, even though the whole profit pool of large sectors is growing at 10-15%. So that is where our focus has been, and frankly we are finding more opportunities than what we can basically deploy cash for.
Arvind, what about profit booking? Are you finding many opportunities at this particular time? And which are the sectors which you would say is could be a sell at this point, which has already baked in all its valuations?
So, of course, the small and mid cap end of the market has moved very fast in the past 3 months. We did not expect this kind of a movement, but the quarterly numbers really were, something which we were surprised at what the commentary of the managements were. Though we would have liked to do a bit of profit booking at these valuations, but what is holding us back is what is the on ground situation in the sectors that we are holding. And there we find the commentary to be very encouraging. In fact, what we are seeing is, for example, one of the companies that we own in the portfolio, it is one of the largest weights. They are making electrolytes, salts and electrolytes for battery manufacturers. The scale up in the coming 18 months is close to 8 to 10x. And that kind of a scale up will require a lot of capital, right? Hence, we are in fact looking at incremental capital deployment over there rather than just booking the profits, even if the stock is up 50-60%, whatever.
You spoke, Arvind, a lot about many of the newer technology sectors of the future, especially with green energy trend and battery cell manufacturing as well, which is going through its own evolution still. But Arvind, what about the other technological aspects like the artificial intelligence? And we are also going to celebrate National Space Day soon. India has taken huge amount of strides in this particular sector, and that is also a very tech-heavy sector where we are going to indigenize or are indigenizing most of the parts that we really require and even the technology. Any views on any of these particular new emerging areas, and which of the allied services of the overall bouquet of infrastructure would you really focus on as a theme for investment?
So if you look at, we are very bullish, in fact, in the whole AI build out capex, which India, in fact, has a lot of advantages. If you look at the AI infrastructure requires a lot of data centers and a lot of power. And both the capex intensity in the country is almost half of what it is in the US. All the giants, if you look at the incremental, commentary that they are, saying in the US, is that the timeline of putting up a data center in US is now close to 4-5 years of wait time, whereas in India it's just 2 to 3 years. And the cost of building per megawatt in US is almost 2.5 to 3x of what it is there in India. So we are seeing a lot of investments that will go into our country. In fact, we are positioned very rightly so, whether it's optical fibers, whether it is cooling solutions, whether it is, people who are putting new cloud services by co-locating into data centers. So we, in fact, are very bullish on this theme. And space also, if you look at, we hardly launched 5 rockets last year versus US is planning to launch 1,000 in 2030, right? So the gap is huge. And that ecosystem, again, if you look at India, has a lot of advantages where there, just last month we had one of our private sector company launch a rocket, which was like third in the world to have that kind of ecosystem. We are seeing the cost of launching a rocket plummet to almost $1,500, which was like $65,000 or something just, 3-4 decades ago. So we have seen these cost curves play out in solar, play out in a lot of technologies.
as the cost goes down, the adoption goes through the roof. So a country like ours who could not afford a lot of rocket launching because of the cost now can actually afford it. And our PM is already pushing for 50 rockets a year. And we are seeing a lot of ecosystem getting developed in Hyderabad, Bangalore, all these cities where the talent is there. In fact, one of the companies that we are betting on, the founder was in Planet Labs and has now shifted to the country to build the satellite ecosystem in the country. So that again, in fact, there's in listed space companies which are making payloads like a Centum Electronics or into ground station like an Aventel, whose size of the opportunity in the coming 4-5 years can be substantial as well. So both in the listed and unlisted side, we are very constructive on both data centers and the space ecosystem that is developing in the country.
Arvind, your exuberance on these sectors and the energy and excitement in your voice is quite infectious. And thanks for sharing your investment strategy and insights on various sectors. Thank you so much for joining us on NDTV Profit. And one more emerging sector that we are really focusing on, which is a little offbeat still in India, is the cryptocurrency space. And Bitcoin has surged past $75,000. To a 3-month high powered by the treasury buybacks and strong ETF inflows. In fact, Sharad is right here to give us the details on the rally and what it really means for the cryptocurrency space. Sharad, take it away.
Well, there's a very strong news coming in the alternative asset class space, and I'm talking about Bitcoin. It has surged past the $75,000 mark. Remember, it's at its 3-month high levels, but still 36% down from its all-time high levels, which we had seen in the year 2024. But let's decode why there's so much riling happening. There's a rising yields and the asset is being treated as an inflation hedge. And that's why a good momentum is coming into the stock. There's a support coming in from Trump and Republicans to push important legislations. Also, CFTC, SEC, these are of course regulatory bodies in US. They are also pushing hard for the crypto rules, and the street it's quite bullish on the passage of the Clarity Act. Of course, that Senate vote will come on a later date. These are the key triggers why Bitcoin has been surging. And of course, there is ETF flows as well as massive short liquidations which have happened in the Bitcoin space. Apart from these triggers, the US Treasury's buyback announcement was the main trigger which actually triggered the rally for the last 3 days. Also, Trump calling in, pushing for the Clarity Act in White House meet on 15th August. Also incited the sentiments, and the US Senate Banking Committee has also passed that the Clarity Act should go ahead. So regulatory up move is coming in. If you look at last 7 days, Bitcoin is up 18%, Ethereum 25%, and Solana, the most heavy traded coins, are up more than 15%. So you can see the up move coming in the last 3 sessions. Also, apart from these performances, what does it mean for the Indian investors? The US Senate Banking Committee has passed the Clarity Act, but nevertheless, if you look at it, there is more regulatory help coming in. And the dates, if you want to watch or look for, the US midterm elections would be coming on November 3rd, and the FDIC stable coin rules will be also coming. But 15th would be the day where that impact comes in. And of course, these are the impact coming on the Indian investors. And going ahead, this is the entire picture.
All right, Sharad, thank you so much for getting us all those details on an exciting space like Bitcoin. With that, we'll move on to our special segment to celebrate National Space Day. All right, and when we talk about the National Space Day, what was considered a moonshot has really turned into a reality for India with the concerted effort of the government thinking policies as well as the India Inc. support, as well as the technological prowess that we really bring to the fore. So the space ambitions are increasingly being powered by businesses, from startups to really large corporates. Private participation is driving innovation, investment, as well as the commercial opportunities, helping build a vibrant space economy alongside ISRO's achievements. As we celebrate National Space Day, we will keep talking to the industry experts experts, private players, as well as the innovators over the weekend to really celebrate the sector as well as India's growth journey, which has put India clearly on the international and global map when we talk about this technological prowess. Let me welcome on the show for this particular discussion. We have with us Amit Mahajan, who's the Director of Paras Defense and Space Technology. Amit, always a pleasure to talk to you, and this one is a special conversation. You are equally a participant in giving India that lift off, if I can use that pun, in this particular space. So Amit, starting with first, Chandrayaan or Vikram, which was, you think, the high moment in the space sector for India personally for you?
Firstly, good afternoon, Nisha. It's always a pleasure talking to you. I do not want to compare into the mission successes that we've had, because every mission which is very, very strategic and first of its kind, and it is successful, it puts Indian space sector at a different level when it comes to global this thing. Both Chandrayaan and Vikram, both are amazing. Aditya, and every mission that has gone through a successful round is very, very important. I don't want to compare that.
Amit, that was just an icebreaker to start this conversation and also highlight two of our biggest achievements that we have seen only recently, and both have been very important milestones, Amit. Now, while talking about the Indian technological prowess and, of course, the commercialization and privatization of this sector is the high point, especially coming in for the business sector as well, because it adds the added, motivation for the sector as well. Now, Amit, when we talk about the potential that this particular opening up of the sector, and also while speaking to Skyroot, we did gather that it was 100% indigenously made. With that kind of a technological prowess, what is the potential for the sector that you're really gunning for?
See, if you look at the Indian space sector, it's come a very, very long way. From 1960s, where we launched the first rocket, to today, we are considered amongst the most dependable, one of the most significant space powers in the whole world. And that is not a small achievement to have. And I'm very, very proud to mention as an Indian that our space sector is primarily fueled by indigenous developments, technological capabilities, and our engineering capabilities. So looking at all of this, the thing that was missing maybe was an industry participation, which over the last 10 years, I believe that it has only evolved and increased to a level that is now in momentum. Now, when we're looking at something like this, there are huge amount of opportunities. If you look at the global space readiness and the areas that deep space research, you look at space situational awareness, these are areas where opportunities lie. And India is gearing up for it, which opens up huge opportunities for not just the big players in this business, but at the same time, it percolates down to startups, percolates down to mid-level companies like us. And, it further solidifies our belief that this sector is the sector that we should invest in.
Right. So when we talk, Amit, about your company in particular, when we talk about the optical and imaging system for space applications in particular, how competitive are you on a global sphere at this particular point? And how do you see the growth journey in terms of contributing to the sector from your own personal company's perspective?
I first want to take this as an opportunity and thank ISRO for having developed an industry in Paras that today we are very proud that if any company in India who does optics and optical systems for space, other than ISRO, it is Paras. So we really thank ISRO for developing us. Now, when we are doing these critical technologies in optical space, what our start point was to do optical elements. And then we were handheld by ISRO to build complete optical systems. Now, this is a very, very critical point because a lot of situational awareness, a lot of strategic satellites and missions that we want to do will involve optics and optical systems. Now, not just what is there in the public media, but at the same time, the future is all about situational awareness. And when that comes, optical systems garner a lot of importance. We want to progress from what we are doing to more and more value-added systems. We want to get into right now complete optical payloads and then subsequently get into optical missions. So this is the trajectory we are looking at, and we are very, very bullish on the opportunities that lie in front of us.
Right, and also Paras, being in the listed space gives you that added fuel for also really going ahead with the growth journey. When we look at this particular ecosystem from 2 points of views, which is first the government support, the policy changes that are really required to support the industry to grow, and the second one being the investors' patience in technological development and R&D. How do you view the sector?
I always felt that government is extremely supportive when it comes to our space programs. Said that, I think import substitution is yet to be a little taken seriously. We need our industry to step up, and we need to make sure that we work towards import substitution in the space sector for the country. And at the same time, there has to be a little more push from the government on the Atmanirbhar side. It is there, but it is not as good or as stringent as it is in Ministry of Defense. So if you have to compare the two ministries, I think the space sector can do with a little more emphasis on Atmanirbhar Bharat. And at the same time, the industry has to be prepared. Industry has to look at getting inspired from global technologies and be ready to deliver what Indian space sector requires.
So Amit, you mentioned this, and as one of the key players in really furthering the cause of the Indian space sector, what are the few bottlenecks that you will mention in the challenges that you mentioned, and any suggested measures which would quickly convert some of these challenges into a much better ecosystem for the sector to grow?
First, I will talk about the application opportunities. So there are a lot of application opportunities, like I mentioned, deep space research, situational awareness, advanced propulsion systems, maybe reusable launch technologies. These are areas where we have opportunities lined up. Now, when it comes to our industry preparedness, I think there are big companies who are involved. There are mid-level companies that are involved. There are huge startup ecosystem which is brewing, and the space sector looks very, very promising. But at the same time, I would rather request the industry to focus on core technologies and not just look at valuation, because sometimes space can distract you by giving you high valued investments, and we should not get swayed away by just the valuation part. Let's focus on core technology development and make sure that we are building a lot of value in our products than just our company.
Right. So important piece of advice there that has come from you, Amit. But, my personal high point for the space mission for India was when I watched Shah Rukh Khan's Swades. You also must be having a similar story which really gave you that motivation and inspiration in this sector you'd like to share?
I think Chandrayaan 3 landing at an area where nobody else has gone. It was the high point. When I'm talking, I get goosebumps, because when you do something when nobody else has done it, I think this is where India has arrived, and a long way to go. And we are on the right track, and we will be one nation to look up to when it comes to space technologies.
All right, Amit Mahajan, I'm sure your words are a big support and inspiration to many who are aspiring to really contribute to this sector and the growth of this sector. Thank you so much, Amit Mahajan, for joining us right here on NDTV Profit on this very special discussion as we start the celebrations on National Space Day. So that was our special offering. Lots more to watch on NDTV Profit. It's time to wrap up markets at 12. Keep it with NDTV Profit, and thank you so much.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
Welcome to India's biggest grassroots innovation movement.
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
स्पंदन एक पोर्टेबल ECG मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रास रूट इनोवेटर दिखेंगे वंदे भारतम में। कमिंग सून ऑन NDTV Profit।
Some of my friends and many of my critics called me arrogant. My philosophy is very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
"Man lo."
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
A new Nepal, new possibilities, a new opportunity for regional cooperation. NDTV World brings together the voices defining the next chapter of India-Nepal relations. Nepal's Foreign Minister, Shishir Khanal, Finance Minister, Dr. Swarnim Wagle, Dr. Sashi Tharoor, actor Manisha Koirala, and Dr. Ram Madhav. Diplomacy, commerce, security, infrastructure, tourism, soft power, NDTV Anviksha, ideas across borders. The Nepal Dialogue, 27th August, Kathmandu, Nepal. New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
Most of the earlier waves on technology, whether it was cloud or whether it was SaaS, much of those waves actually scaled transactions. AI is going to scale decisions. I see the AI revolution not to be one of a software revolution. It's an infrastructure revolution. And what I mean by that also is that AI cannot sit on top of legacy infrastructure of enterprises.
Hello and welcome to NDTV Profit. You're watching trending stocks from the NDTV Profit Suzlon studio with me, Hiral Dadya, and Sharad Dubey, who's standing at the Profit Market Bid. Sharad, good afternoon.
Yesterday was absolutely interesting with the way markets performed. There is that fresh buying that's coming in a couple of sectors, though some sectors are under pressure as well. And if you see Nifty 50, pretty much around that 24,250 mark.
Well, that's right. Good afternoon, Hiral. And we see largely it's a very, very thin, narrow range of trade which is happening, and we are nearly flat at the day's trade right now. Nifty Bank, let's pull up and see what's happening there. Yesterday, both these indices were holding up their gains. Globally, of course, the yield impact was there, and now we are seeing a slightly better technical setup for Nifty Bank, but not so much jump also. It's just a 150-point jump. Volumes are a bit slightly less in the markets right now. Maybe the sectoral churn is happening, and let's look at the key factors right now. What should you be actually looking for? Largely, it's a sideways moves happening for both Nifty and Nifty Bank. Yesterday's important levels, especially in the support, are still maintained for both of them. Nothing much has changed. Also, let's look at the other sectors. A lot of sector-specific moves are happening. Small and mid caps are showing a strong momentum. If you compare mid cap and small cap 250 index, good buying happening. So that's a good news for the markets. Also, power industrial goods stocks are seeing a rebound. There was a sell-off in the capital goods a couple of sessions ago. Now that rebound is coming in. Also, if you look at it, there is a certain interest coming in the gold financing stocks. We already pointed out earlier in India Market Open, and after that you see a good momentum in both of these counters. Also, FMCG, a lot of inflation risks are happening, be it sugar prices going up, palm oil prices going up, and that stress is coming. It's the worst sectoral performer in the day's trade as well. Sugar stocks, of course, are seeing profit booking, and we had already given you this trend 2 weeks ago. Also, apart from this, there's a range bound move happening in most of the sectors. No clear trend. A little bit of sectoral churn is happening here and there, and volumes are dismal, at least in the index level. So this is how the markets are looking like. Nothing much there, but sector specific moves are happening today. But the good news is small caps and mid caps are doing well.
Okay, so that's where the action is. Thank you, Sharad, so much for that. But another stock that is in focus today, and we're talking about a company from the chemical space as well. Indo Borax and Chemicals, that's the stock to focus on. Let's pull up that one on the screen. 3.5% up move coming in there. And the reason why this company is in focus is because Indo Borax is making a strategic push into specialty chemicals with the acquisition of a 64% stake in Cronox Lab Sciences for a 246 odd crore consideration. To get us the details in terms of this acquisition, Suresh Kalra, MD and CEO at Indo Borax and Chemicals, joins in. Mr. Kalra, welcome to the show, and always a pleasure to speak to you. Interesting to see a move forward in the specialty chemical space, and this is a space which has been pretty much in focus as well since quite some time. Help us understand what is the rationale over here, and what makes Cronox Lab Sciences itself attractive to acquire a 64% controlling stake?
Yeah. Thank you, Hiral. Pleasure speaking to you, first of all. So nice to be here. So I'll tell a little bit about Indo Borax because that's important. That's the company which is acquired. So Indo Borax is also a company which has been doing boric acid and its derivatives for like decades, more than 45 years now, and established itself as a market position, as a market leadership position for many years. So we were trying to find out how we expand our business furthermore. Being a specialty chemical company, we always were looking for an adjacent opportunities. So we got Cronox Lab Sciences, which is established in 2008, a Baroda headquartered company, very highly specialized fine chemicals into inorganic and purification purposes, and it goes into various market segments. So we saw a very clear synergy between the two companies where we can diversify our business other than boric acid and its derivatives, which goes into the steel industry, pharma industry. And we see now Cronox Lab Sciences, which is catering to the pharma industry, agricultural industry, personal care industry, and it also goes into nutraceuticals, which is one of the finest products to be in. And that was a very natural adjacent acquisition which we wanted to make. So that was the rationale behind it. We are looking forward to grow the platform together with these two and create value for, and I would say long-term sustainable value for our stakeholders. So that was the rationale why we gone for this acquisition.
Okay. Is this going to be purely a financial investment, or do you intend to integrate operations, distribution, product development as well over time?
No, absolutely. A great question. It's not a financial acquisition loan. Um, I've been in chemical industry, I think, more than 30 years now, and being into various different sectors of chemical industry. And I've always seen integrating the companies with synergies on either side, on the input side or on the output side, either the purchase side or on the customer and the market side, it creates much larger value for stakeholders. And that's what also our rationale was here. So while there are two independent listed companies as of now, but we look forward to grow the companies together, create synergies which are very logical to us already. For example, I'll give one or two examples. I mean, I can have many, but so let's say Chronox Lab Sciences has absolutely great global markets. Okay, they have very meaningful exports today. While boric acid today we have completely India-centric market, right? So we are going to explore the geographical expansion of both the companies together, a clear synergy for us. And same is a lot of raw material input costs. So, and leadership team, of course. So we see a lot of synergy. So definitely we are going to integrate the companies together and create a lot of value for our stakeholders for that.
Suresh, hi, this is Sharad here. I just wanted to understand and get clarity. So there is both forward integration and backward integration synergies playing out, or is there something else?
Yeah. Thank you, Sharadji. So I would rather, instead of saying backward or forward integration synergies, there are adjacent synergies here. So we have common consumer markets, for example. So very large pharmaceutical and consumer product companies use products also, which is boric acid, and they also use products which are being made at Chronox Lab Sciences. So it's a very clear opportunities at the customer end and the market's end. Same type of opportunities are there in the geographical expansion of our markets together in these companies. So, and some raw materials are common. I would not go that much into detail on that, but I think it is a possibility of increasing the portfolio and diversification being done while we grow both the businesses together. So instead of backward or forward integration, it is more widening of our product portfolio, widening of the geographies, and widening of the customer markets which we serve today.
Okay. Mr. Kalra, the other question I have is, let's look at Chronox. How much incremental growth can Chronox achieve with Indo-Borax backing it, if you have to look at it for the next, say, 2 to 3 years?
Yeah, it's a great question. That was, again, one of the reasons why. So the markets which Chronox Lab Sciences today cater to, these markets are actually looking forward for very serious large players. Okay, basically the global markets are today served by very large companies, and Indian market is just developing because it is not only serving the standard cationic and anionic markets. Those products also goes into the nutraceutical industry, which is a very, very fast growing market today globally and now also in India. So definitely Chronox need more support in terms of strong leadership, in terms of large possibilities of expanding their business through capital allocation. And that's what we are going to provide. So just briefly, if I can explain to you, we already have 3 plants for Chronox Lab Sciences in Baroda, and more or less they are fully utilized. So now we're looking forward to expand our capacity with already acquired land in Dahej, and we're going to start initiating the capex plan there. That will serve the market to a much larger extent than we are doing today. So intent is to make best use of a fast-growing market without losing much time in between.
Is this a start of a chemical upcycle if you have a China angle to it? And of course, we know that the yuan has actually come down also. Is there a rationale behind it as well?
Listen, we all know that competing with China is very difficult in general when you are into commodity markets, right? Now, that's one of the reasons that we are not entering into the commodity market. We are entering into a very specialized market. Okay, specialized markets need smaller volumes comparatively, but higher margins. So just give you already a number which is public. So last financial year, Chronox Lab Sciences did almost 28 crores of net profit at about 101 crore of revenue. So it's a very highly specialized market, and that's where we want to get into. So I don't see we have to compete a lot with China here. I would rather see there'll be a lot of competition with the Western world here, the companies from Europe and US, but that's also an open market for us. So if we compete with them in India, I think we also have an equal opportunity to grow our business in those markets.
Okay. The other question is this acquisition EPS accretive? And by when does it become EPS accretive? Or should investors expect an investment phase just before benefits start becoming visible? And two, how is this transaction going to be funded, and what is the impact it will have on Indoborax's balance sheet and the return ratios as well?
Okay, so two parts of this question. Yeah, thank you, Hiroji. So first is EPS accretive. I would right now, and I'm being very honest in this. Right now, we are completely focusing on how we grow a long-term sustainable value for all the stakeholders. And there are a lot of stakeholders for us here, of course. Zenrock Chemicals is one who's infusing capital. There are promoter group. There are a lot of retail and HMI investors, etc. Intent is not immediately looking at how accretive EPS is. Intent is to develop the markets, the business in a way it provide a long-term sustainability to them. So, of course, in the medium term, it will be visible to you. But I would rather comment on the short-term things once we complete the acquisition, and then we'll have much more visibility to it. But one thing is for sure, for the long term and for the medium term, there'll be a lot of value creation there. And also the second part of your question, sorry, I missed that. So the funding basically, as you can see that as we already mentioned, most of the funding is coming through our internal accruals at Indoborax. Of course, we'll be needing some level of debt financing for which the process is already happening. And then if required, we also have our parent company, Zenrock, which is ready to support us if there is anything required to make the process complete. So, but one thing is sure, we at Indoborax and as a group are very confident that capital allocation as a discipline is going to be our top priority. So that is something which we definitely not going to compromise on. I hope I answered that.
All right, Suresh, thank you very much for giving the views on this important corporate development for your company. It's always a pleasure to have you with us. Now, on to the rapid fire segment. We are joined in by Sachin Janardhan, and the first stock is Welspun Corp. Look at that order size, 17,200 crore rupees. Good up move also coming initially in the stock. Sachin, wanted to get your views on it. More momentum is there in the stock?
Yes, definitely. On a daily, weekly and monthly time frame, the stock is in an excellent trend. Momentum, structure, all thing is good. Only thing is right now the entry will be very, very tricky. So the risk reward may not be favorable, but on dips of like suppose 5 to 10% correction, it will be a very good stock to enter.
Sachin, the next stock is JBM Auto. Of course, buzz is of a fundraise for their EV business. How does it look on the charts? Stock is up 7% now.
So even for JBM Auto, overall the trend is good on a daily and weekly and monthly charts. Only thing is compared to the previous stock, the risk reward is more better in this. The stop loss will be 644 and we can expect at least 10 to 15% upside from current levels as well.
Right. Next stock, NCC, good momentum coming in this counter as well. Any important levels to track here, and do you think good time to do a little bit of profit booking, or there is some more strength?
Yes, definitely one should book a profit as the stock is in a downtrend on a daily and weekly charts. On a long term, still we have some kind of a support of around 130 levels. But if 130 levels is not holding, then we might slip in a long term downtrend as well. And currently 154 is a huge resistance of 200-day SMA. So one should book profits.
Right, so a little bit of adverse news flow coming in Niva Bupa also. Your take on it, is there any trade to be made? Or do you think so it's a consolidation candidate and avoid it?
The stock has actually changed the trend on a daily and weekly basis. Only thing is long-term trend is still intact. So if it is holding 78 levels till then it is okay. But if it is not holding 78 levels, then one should exit from the stock as well.
Okay, 78 is a very important level to track. Two stocks from the auto space, Hyundai as well as Maruti Suzuki, they have increased their prices. Let's get both of these stocks on the screen. And Sachin, any trade to be made here, or it seems like a non-event?
Comparatively, Maruti, I like Hyundai because it has already in a process to change the trend from down to up. Only thing is 2000 and 1950 are a very good support levels. Below 1950, Hyundai will again slip into a downtrend. But when I am checking Maruti, so Maruti is in a downtrend in a daily and weekly charts. Only thing is long-term trend is okay, but a structure on a monthly chart, it is making a inverse flag, which is a bearish flag. So I am very scared of that. If it is breaking on a downside, the target levels on a downside will be very huge.
All right, thanks a lot for that, Sachin. That's the end of the rapid fire round. But another counter everybody's talking about is Colgate. Entire FMCG pack is, plagued with so much negative news flow. This is the worst sectoral performer also. But what's the story with Colgate? We have Mahima with us.
Right. So, yet another management change in the FMCG sector is what we're seeing. So, for Colgate, Prabha Narasimhan has kind of gone ahead and resigned as the MD and CEO 1 year ahead of her term being ended, and she's now going to join the South Asia. She's now going to be the president of marketing at Asia Pacific division of Colgate Palmolive, and instead of her, they've appointed Manish Anandani, who is going to take charge from 28th September onwards. Now, who is Manish, just to give viewers a perspective, he's the global business executive with 20 plus years of experience. He's worked as MD India and South Asia of Kenvue currently for the past 3 odd years. Before that, he was with Johnson & Johnson and was the MD as well. And prior to that, he's also worked with Colgate between 2005 to 2010. So he knows the company per se in various sales and marketing roles that he's done. In terms of just giving viewers a perspective of how things have fared for Colgate under Prabha's reign. 4-year sales CAGR has been just around 4.3%. Profit CAGR has just been around 5.3 odd %. Dividend payout though has been on a very strong footing. 90% to almost 120% is the range of dividend payout that we've seen. And the stock also in the last 4 years has not done much, just given a return of about 17%. So we've seen a couple of management changes in the last 1.5, 2 odd years for FMCG, and we've seen change in companies as well. Case in point, you've seen Priya Nair bringing transformation in HUL. You've also seen Manish Tiwari bringing in changes in Nestle as well. So we'll see whether this also is towards that direction or not.
Thanks a lot, Mahima, for that. This sector will keep you busy a lot. But we are joined in by Anuj Jain also. Good afternoon, Anuj. Always a pleasure to have you. We're talking about FMCG. There's overhang after overhang coming in this sector, be it rising inflation costs, you name any commodity, that price is hiked. There is management churn happening. How do you see this place, and do you find any value here in this correction, or do you like to stay away from it?
Hi, good afternoon. I think right now I would like to stay away from the sector. Reason being, over the last few years, we have seen that the growth has been really tepid. For example, you were just talking about Colgate, and if you see Colgate over a decade is a very long period where all the abnormality or all the headwinds should normalize. Over a decade, the top line growth has been only 5%. So similar is the case with most of the very big brands. So somehow, Indian economy is growing, the agriculture is growing, disposable income with the people is growing, but that is somehow not reflected in the sector's growth. So I think I would like to wait, and maybe I will be digging deeper and looking at some companies on a small cap and mid cap level where the growth and agility is much higher than very big names.
So that's the interesting view coming in the FMCG space. Now we're joined in by Jasmeet also. An interesting analyst meet was there with Crompton. And what are the key details coming in, Jasmeet?
Well, Sharad, thank you for that. It was quite interesting meet with regards to the Crompton. The reason why it was interesting was on the back of the highlights that they have given for the next 4 to 5 years. So they have given their guidance for the coming year. They expect the overall revenue to grow in the range of 14 to 15% CAGR over the next 4 years, while they also target similar growth in terms of the overall EBITDA as well. While the company is targeting roughly a double-digit growth, and also they're targeting 2x the revenue from the current levels by FY31, and they want to exit the FY31 by a EBIT range of over 12%. Now, if you look at the reasons how they'll be able to do it, is they are expecting the overall addressable market to increase, and they also expect the overall fan and the premiumization side of the business to lead the overall growth. While if you look at the interesting aspect in terms of the overall trajectory of the growth, they are also planning the solar rooftop segment of the business to grow in double digit and also double by FY29. That's the interesting aspect. Alongside that, they're also investing 350 odd crores into the new plant. It's a greenfield project for the fans, and they expect this investment would lead to margin expansion eventually in the future as well. And they'll start investing by second quarter of this particular year. And lastly, if we look at the brokerage, they remain bullish on this particular counter. We have Jefferies maintaining the rating on this counter as buy and also the target price. So as of now, it's a wait and watch of how does this goes. The company had a slow growth all these years, but from here on, they expect the growth to increase.
All right. Thanks a lot, Jasmeet, for that detailed analysis. But Anuj, your views on this counter? Fundamentally, they have come out with a good vision statement also, but do you agree with it?
Yeah, I agree. Partially agree with it, subject to some riders. It's a renowned brand. Okay, so penetration is really there. Network is really there. However, I think in this sector, the competition has grown a lot over last few years since the government push on manufacturing in this sector, including PLI and all the efforts that the government has put in. So, it's a very good company fundamentally, if you see by brand also. So, my opinion is if somebody has a medium-term view, yes, definitely it's a very good company to invest in, keeping an eye on the competition and new success of the new product that they are going to launch, and they have launched in last 1 or 2 years.
That's with regards to where Crompton goes. How are you looking at an urban company as well? And before I take that question with you, UBS has actually had a buy rating. They have a target price of 180, and what they're saying is India's largest online home service platform is what they're looking at. And online home services market is entering its Blinkit moment, which is very interesting. They believe that urban company is at the forefront of this evolution, and they're seeing the right product market fit also over here. The balance sheet is very strong, and the execution track record is also looking pretty strong. Their clear focus is on unit economics, and the market has not fully appreciated home services growth push yet. So there is entire higher scope over there, and 7.5% up move is what we are seeing on the counter. What is your view on that one?
Hi. Urban company, look, it's a brilliant startup. I am a user of Urban company for its services, and they are very professional in the services. So as far as me being a user concerned, I think I will definitely recommend Urban company. But now we are talking in terms of investing money in the company. So here I have a bias that I would like to disclaim. So my bias is that I don't like companies which do not stand on its own financials, balance sheet, and cash flow. Currently, if you see the numbers, even though the top line has grown phenomenally well, it's really spectacular growth that they have seen given in the numbers in Q1. But you have to keep in mind that despite this sudden rise in top line, the OPM level is still high 18, 19 kind of a percent EBITDA off. So that is something that is to be watched out for. So I'm pretty sure they are not generating any free cash flow as of now. So I wonder at what level they would be a beta positive and how much time we will take.
So we will have to watch out for. We will have to watch that one out. But thank you so much for joining in. Always a pleasure to speak to you. But completely out of time, ladies and gentlemen, on this edition of Trending Stocks from Sharad, the team that put the show together, and myself. Lots more lined up on the other side. We'll take a quick break, and on the other side, a special broadcast on cash trading and everything that a retail investor would want to know. Any doubts that you have as well, please feel free to call us on the number which is flashing on your screens, or send in your messages as well on WhatsApp on the number that is flashing in, and your queries also with regards to cash will be answered. Please stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल बनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
A new Nepal, new possibilities, a new opportunity for regional cooperation. NDTV World brings together the voices defining the next chapter of India-Nepal relations. Nepal's Foreign Minister, Shishir Khanna, Finance Minister, Dr. Swarnim Wagle, Dr. Shashi Tharoor, actor Manisha Koirala, and Dr. Ram Madhav. Diplomacy, commerce, security, infrastructure, tourism, soft power. NDTV Anviksha, ideas across borders. The Nepal Dialogue, 27th August, Kathmandu, Nepal. 3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV when it really matters.
Welcome to India's biggest grassroots innovation movement. हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
स्पंदन एक पोर्टेबल ECG मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रासरूट इनोवेटर दिखेंगे वंदे भारतम में। कमिंग सून ऑन NDTV Profit।
Some of my friends and many of my critics called me arrogant. My philosophy is very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
"Man lo."
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
A major change has actually quietly arrived in the Indian stock market, but its impact could be felt by every trader, investor, mutual fund holder and F&O participant. The closing auction session, or CAS, that has actually changed the way the official closing price is discovered for the F&O stocks. Now, instead of relying on the volume-weighted average price in the final 30 minutes of trade, exchanges now use a dedicated auction mechanism to determine the closing price based on actual end-of-day demand and supply. Now, the question is that the change may actually sound very technical, but it actually affects something extremely important: Yes, I'm talking about the closing price. That closing price is used for portfolio valuation, mutual fund NAV calculations, your ETF valuations, your index computation, and the settlement of derivative positions. For active traders, it could alter the end-of-day trading strategies. For investors, probably it could improve the price discovery and reduce the risk of last-minute price distortions. But the question is, will this really make markets fairer? Will retail traders benefit, or will institutions continue to dominate the closing auction? Could volatility actually increase around the market close? And how should retail participants adapt to this new regime? That's the question. Joining us on the show for a detailed discussion around this and what retailers should focus on, Feroz Aziz, Joint CEO at Anand Rathi Wealth, Venkatachalam Shanmugam, partner at MC Cube, Kamlesh Shroff, National President at ANMI, and Shai Coelho, founder at VTrender, will be joining in as well. Welcome to the show, gentlemen. Always a pleasure to speak to all of you, as you know, to answer all these questions. And we have an exceptional panel that we're talking about. But before we do all of this, we should be actually going across to my colleague, Nimit, who will be standing by to tell us everything that we need to know so far and all the action that the SEBI has taken as well. Nimit, over to you.
So, absolutely. So what we're going to discuss right now first is the new SEBI order that's come out. Now, 2 weeks since CAS has been implemented, there's been a lot of talk about manipulation, about volatility, whether SEBI will be able to track it. 2 days ago, the SEBI chairman in an address said that they are now in better position than ever to track CAS manipulation. And the same evening, they came out with the first ex parte interim order. Now, what the CAS order says is that it flags sex manipulation during the August 13th closing, the expiry day. It was closed. The two stocks in particular that we'll come to see. Copthall Mauritius Investment is the first company. Mansi Share Stock Broking is the other. Mansi Share Broking is, of course, an Indian broker, and Copthall Mauritius is linked to JP Morgan. And the SEBI has impounded 3.68 crore and barred both entities from the equity CAS for this time period. Now we need to understand how we got here. Now, SEBI noticed that there were three particular spikes and then a gradual drawdown on the August 13th price examination. Now, if we look at spike number 1 here, you can look at spike number 1 here. Spike number 1 shows that the price rose about 362 points in a matter of 2 seconds. Then we move to spike number 2. Spike number 2 shows that the price jump was about 132 points in a span of 12 seconds. Then we move to spike number 3. Spike number 3 was 405 point movement in a 28-second window. Then we move to the gradual drawdown here. If you look at this gradual drawdown, now these are independent. If you see the spikes, the price moves up, the drawdown, the price comes down. Now these were the actions of the two different set of traders that we mentioned earlier. Now let's understand what Copthall Mauritius did to boost this spike up. Now, okay, first we're going to Mansi. So Mansi placed sell orders below 1.5 to 3% below the reference price. Now, this is where the drawdown came in. They placed these orders below the reference price, and contrary to, and there was a manipulation intent that was shown because they sold those orders. Now, Mansi placed the sell orders for about 12.65 lakh shares. After placing those, those were spread across 8 Sensex constituents, and the total sell order value was 143.43 crores. Then the important bit, how we show that this was not simply a good move to make money in the market versus manipulation or an attempt to aggressively change the price here. Because Mansi cancelled those orders, 99.06% of those orders, and those cancellations occurred in a small short period between 326.02 and 326.05 in a matter of 3 seconds. Now, for Sensex manipulation, what needs to be seen? Now, Copthall here held synthetic long positions in index derivatives. This means that they specifically held those positions. So if they could boost those prices up, then they could make a lot of money, and at the same time, they would not have to pay out the sellers eventually. That's the economic motive that SEBI looked at here. It's not only motive to manipulate, but economic motive that is key here. The other thing we have to look at is the higher Sensex price. It boosted their chances of making more money. Now, Copthall Koptal also put options on payout obligations. Now, what this means is that the rising index for Koptal would mean a larger payout. Now, we need to understand lastly that the Sensex should have closed at 77,840 but closed at 78,080,
Sure.
and that was the big number where SEBI found the gap here.
Got it. So I think lots brewing in terms of the gap and everything that's happened so far. But let's get it to our expert panel as well to actually understand what is happening and how should a retail investor look at it. Feroz, let me come to you first. My question to you is, you're talking about the impact of CAS, where we've seen everything that's happened. This is the third week where CAS has become effective as well. Do you think from a retail investor's perspective, what is that most important thing they should be watching out for now?
I think several things they can be watching out for. See, a retail guy could be doing three things. He could be investing directly in stocks, doing derivatives, or buying mutual funds. I think in all of them, he gets impacted positively. See, basically, CAS is nothing but a manipulation protection, and it is nothing new. IPO prices are determined using the same mechanism, if not identical mechanism. When an IPO is expected to be listed, what happens between 9:15 and 10 o'clock? 10 o'clock is when people ring the bell and say this is listed and there is a listing price arrived at. That's exactly the auction mechanism on which the listing, like when we got listed way back in December 21, there was a listing price of 584, if I'm remembering right. That was arrived at by actual auction. So why are people so surprised that why we have to learn something new? When it comes to IPO, India has been participating in IPOs for so long. That's point one. Point two, if you are a mutual fund investor, there couldn't be a better news. What used to happen is in the VWAP method, which is volume weighted method, mutual fund guys would run an algorithm to get their buying. They want to buy 100 shares. They would put an algorithm to buy it exactly in the same volume weighted so that they get the same closing price. There was an error there always. So now they don't have to worry at all. So long-term investors ka window alag ho gaya. Trader ka window, traders can enjoy the market from 9:15 to 3:15. For derivative stocks, if I'm an investor, I would not be worried at all from 9:15 to 3:15. You've relieved the pressure of an investor who is a long-term investor and saying, 15 minutes mein mera kaam ho jayega. Whatever shares I have to buy, I will buy it at the auction. I will sell it at the auction. No timing is needed. Is everybody what they say. Every fund manager says timing is not important. So that relieves the fund manager's dealer by 6 hours practically. So that's point two. Point three, I think medicines don't taste good ever. And this is absolute medicine, right? In naked eye, you could have seen two types of manipulation. One was passive index rejig manipulation. I've said this on a couple of articles. You can see it through naked eye. You don't even need microscope to see what kind of manipulation is to happen in 4 month ends. Feb, May, August, and November, when MSCI rejigged, on the last half an hour, you will easily see dealers are doing some manipulation. Second thing which used to happen was an expiry. So SEBI has done 7 things to cater losses, and that's how they've succeeded. Finally, after a 41% rise in option losses for retail, now it has come down by about 17-18%.
Right, Feroz, an interesting point that you make as well over here when you're comparing it to the IPO, and two, when you're talking about the impact that could happen in terms of mutual funds as well. Let's understand from a retail trader's perspective, where a lot of times you see retail traders who want to really execute in the last 15 to 20 minutes, and this is basis the entire day's momentum that you've seen in terms of stock prices. Now the question is, on the back of introduction of CAS, does that actually change that retail trader's strategy, number one? And could investors see situations where the last traded price, which comes in at 315, is significantly different from the final closing price that is discovered through this auction? And what should they understand in such cases? I would want to actually take this question with Shai Coelho as well, who's the founder of VTrender, who understands this space pretty closely. Shai, over to you.
So I would like to say over here, Hiral, when we are looking at it from a retail point of view, the retail trader who's invested in the equity side of the market, for him, nothing has changed in the month of August. The bigger impact has been for the trader who trades the derivative side of the market. Now, what has happened is effectively his 15-minute window between 3:15 to 3:30, and this is very, very important when it comes to the settlement day. This is completely changed right now. And what has happened is that close on which his expiry positions, etc., was decided, the settlement was decided, that has effectively changed. So this involves a change of strategy for him as a derivatives trader. Now, what has actually happened is, beyond all this talk which has happened about Copthall and Mamsi and the manipulation, etc. And I would not use that word manipulation over here. But what we are talking about is a derivatives book, which is roughly about 30,000 CR, 30,000 crores of trades, the premium which is being traded every single day. When it comes to the Nifty settlement, that premium rises to about 70,000 odd crores. Now, this trading book, this derivatives book, is actually being signaled to a close by an auction book, which is what the CAS is, which is a very, very small number of the market. In fact, just want to supply some data points to you. And if you look at, we've done about 15 sessions since CAS began on August 3rd. And we got 15 days of data with us right now. And those 15 days of data point to CAS on the NSE, the stock exchange, being about 1,200 to about 1,400 crores in CAS turnover. Now, this is very, very different from what we have from 9:15 to 3:15 p.m., which is roughly about 60,000 to about 80,000 crores of cash traded. Now, what you're seeing if you look at it from a point of view of a percentage, this 1,400 CR, which is last settlement of Tuesday of Nifty, was about 1,600 CR. This 1,600 CR is what, 1% of the total cash traded volume, but its impact is a lot more. So this 1% now impacts a derivative book of traders, of retail traders, institutions also, the prop funds also, which is traditionally been about 50% of the index. So if you talk about cash turnover being about 80,000 to about 100,000 CR, the derivative side of the market was always, in terms of premium traded, about 50,000 CR. And most of this traded volume was dependent on a closing price to arrive at a decision whether it was going to be a hold or a close. So most of the prop desks and all, they used to wait till 3:30 p.m. to arrive at a fair closing price. Now, what has changed from August 3 is that these traders are now forced into an auction on which they don't have much role to say. And if you looked at what happened at Sensex yesterday, Sensex cash volume was about 46 CR. The volume which got traded between 3:15 and 3:30 p.m., 3:20 and 3:30, that was about 46 CR. So we've reached a point in the market where we are saying 46 CR is going to decide what happened between 9:15 and 3:15 p.m., which is when traders open their derivative trading position. But the question to you and for all of us is to understand, is this a fair mechanism to arrive at something on which strategies are built, derivative trading strategies are built over a 5-day trading cycle, or even a cycle which starts at 9:15 on the settlement day right up to about 3:15 p.m. So if I were to say what is the impact for a retail trader, the retail trader is tremendously impacted because his closing price mechanism is suddenly being decided by an auction which is no bigger than 1,500 CR at the most, based on data which has come to us from 3rd of August. That is also offset the trading which has happened between 9:15 and 3:15 p.m., which is 6 hours of trading volume and about 1 lakh crore approximately in trading size.
Sure. That's an interesting point you make, and let me go across to Mr. Shanmugam as well, because you're categorically saying that yes, a retail investor does get impacted to some extent. Now, when I'm looking at the headwinds, one, your execution cost on the retail side too gets impacted. Two, you're talking about the STT hike, which adds directly to the per trade retail cost. And to add to this, if you have to look at your active F&O traders on a year-on-year basis, when we look at that data, that's down around 18%, yet 87% of individual traders are still posting losses. So the aggregate retail losses that you've seen for FY26 is what, around 92,000 crores. And a direct impact on option buyers versus sellers is what you're looking at. Mr. Shanmugam, let me come to you. How are you looking at the impact to a retail trader who's trading in the derivative market? And if there is any impact, what should they take care of?
I think retail trader is basically an investor in the market, and that investor in the market looks at what happens between 9:30 and 3:15, and he does his buying or selling during that particular point in time, and he doesn't bother about when he's managing a portfolio about what happens during the CAS actually. So what happens here is like, you might get affected when you have an options position, and options, obviously, as you rightly mentioned, the cost of execution of options has increased, and hence when it comes to losing in the market, cost adds to, when it comes to losing in the market actually. So typically, yes, now the time has come now to ensure that if the retail has to be there in the F&O market, how do we rethink our F&O closing and settlement strategy? So if I go back and see that, like, is there any other mechanism? So this is a mechanism which has been operational across the world. So that's the only lesson that we can learn, whether we can do it or we should stop it or whatever it is actually. I mean, having said that, the regulators have said that it's going to continue. That's a good news actually. That if you look at it, I mean, it's been existent for the last 3 or 4 decades across developing markets and developed markets actually. So I mean, right from your New York to London to Hong Kong and Singapore, closing is the session which decides most of the F&O sessions. Actually, now comes how do they ensure that these sessions are more stable, cannot be vulnerable to any malpractices or whatever it is. That is the thing that we need to look at actually. And then, like, if I actually were to look at, like, how do UK settle it? UK has in the middle of the market, they have a expiry day settlement price auction mechanism.
Correct.
Right? So that's one model that we can look at it, Ali, if we really want to have that actually.
Sure.
I think all of this will be clear when we have, let's say, for example, the SLBM thing settled out actually. And when we have funds coming in and participating in a larger way actually. So that's
So
where
I think basically what you're saying is that it'll be a wait and watch kind of a process till things settle down. In fact, best time to get an ANMI as well. Kamlesh Shroff joining in. Kamlesh, my question to you is, I know you have been, as a industry body, you're looking at conversations with SEBI as well. The latest we're hearing is where SEBI is not really looking at making any major changes, but they're trying to look at how everything can align to make sense. And with the first manipulation case that has come to light as well, what are the conversations with SEBI actually indicating to you, and what are those red flags that you've pointed out?
Hi. So basically, number one, I think as we just mentioned, that the first order that came out in 6 days' time is like a clear signal in terms of what SEBI is looking to give a signal to all the broking intermediaries and participants. Having said that, the second part is that even brokers need to start queuing up orders, which is between 315 to 320, is something that will give the breadth the book, because as my previous people all mentioned, and we all know that markets only strive on liquidity. So if there is no liquidity, there are chances of any kind of manipulations. Manipulation is a very strong word, but people may want to try to take an opportunity by the +3 -3 band, and because of that there could be volatility, because if there are only a couple of handful of players in that session, you will end up having a distorted price versus a real price. But the signal which SEBI has sent is very, very encouraging, and we could see that in yesterday's expiry, which was also mentioned at the Sensex, which was broadly about 50 points of variation or deviation, as you may call it, and just about 46 crores of volume. So at this moment, the volume is not such a thing, but expiry which went only 50 points up and down and an 80,000 stock value. So that's a good thing. Yeah.
So expiry is what we look at. We have a couple of minutes left. Firoz, quick one on this. Do you think mutual fund NAVs, which are usually influenced by closing prices, can CAS reduce the distortions in NAV calculations, especially for large equity funds? And could this particularly benefit SIP investors because the fund valuation becomes all the more accurate?
I think currently the accuracy of the mutual fund NAV has got compromised momentarily.
Okay.
In my judgment, it's not been a positive so far because the volumes have not come. See, we followed VWAP for 3 decades. Now we followed this method, cash method, for 3 weeks. Of course, the volumes in Sensex are going to be or BSE are going to be low, but arbitrages will converge it reasonably well, in my judgment. Point one. Point two, that NAVs will become far more robuster over periods of time. But the key is, out of the 7 actions SEBI has taken, that's why in the after COVID, this is the first time we have had a 24 lakh net reduction in the number of traders. It was in 2020, it was 13.8, 26.6, 51 lakhs, 67 lakhs, 95 lakhs, 1 crore 6 lakhs last year. Now it has come to 87.5 lakhs. These 7 actions which they took: weekly expiry reduction, contract size increase, expiry day margin increase, calendar spread margin benefit going away, upfront option premiums to be put, higher STT, intraday risk monitoring, and closing auction system. This is one of the last nails in the coffin, because derivative traders don't even understand what is a differential equation. Forget my derivative traders can solve a differential equation mentally. But if they have to Google what's the differential equation. If you don't know delta, gamma, vega, theta, rho, you're not qualified to trade derivatives. Is why 87% of the monies are 87% of the people are losing money. They're trying to tell you straight, you please do a 2-year course on synthesizing options and then come back to do it. Most people just want to speculate.
Okay, so that's with regards to NAVs. What about, the impact on ETF investors, especially the ones who are investing in, say, index ETFs who are tracking Nifty and Sensex? What happens there, Shai? Any comments on that front?
That itself, even with the cash market close, what is happening is the keyword over here is to understand the liquidity which is there in the cash equation. So that liquidity is not enough. Now, how would a NAV fund which gets a markup of 200 points from which happened on day 1, day 2 of the cash series, how would that closing price be justifiable for even a mutual fund? So what we are talking about here right now is not just the calculation. We are talking about the price discovery which is involved in the process. Both for the mutual fund, also for the NAV for which cash was created, for those MSCI rebalance flows which will come in at the end of the month, as also for the derivatives trader. See, the derivatives trader, rightly said, is not a small part of the equation. He's about 55-60% of the entire market scope today. So if you're talking about 1 lakh crores coming in through cash turnover, it's about 55-60,000 crores coming in from derivatives turnover. So don't neglect this side of the market. Don't make it feel undone because of these changes which are coming into effect. Work on the liquidity. It's not something which is very, very bad for markets. Cash is a very, very positive thing. But if that liquidity improves and gives us the kind of closing which we require, it would be something very, very helpful for all of us in the market.
Yeah, my last question to Mr. Shanmugam is on the option buyers. Do you think that the volatility will actually benefit the option buyers, because the sellers will also be impacted because they're exposed to unlimited risk? But if you're talking about option buyers, any last minute spike that happens, your options move very violently, right? So in this cash situation right now, beneficial for option buyers, but a major risk for option sellers. Would you agree?
I do not think so, because cash is all about stability, actually, because, the entire session is brought in to bring in stability into the closing price.
I agree. It's come in for getting stability, but in the current situation where we are, is that the kind of reaction that you will see?
Yeah, as Shai said, it's basically because of the lower liquidity, actually.
Correct.
So this is where I'm sure the regulators are looking at. I'm sure they are working on to bring in more participation, to bring in more volume into the market. Actually, once it is done, then probably I think this is the mechanism which even the option participants would love to see there in the market.
Okay, so I think lots we have to watch out for. Again, it still becomes a wait and watch mode even after 3 weeks of execution of cash in the system right now. But I think all queries so far answered that a retail investor would have. Thank you, gentlemen, for joining in. It's always a pleasure to speak to you, but completely out of time on this session. A goodbye from myself on NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
Welcome to India's biggest grassroots innovation movement. हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
स्पंदन एक पोर्टेबल ईसीजी मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रास रूट इनोवेटर दिखेंगे वंदे भारतम में। कमिंग सून ऑन NDTV Profit.
Some of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
"Man lo."
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100%.
A world of questions. Ideas that challenge the ordinary. Conversations that connect countries and cultures. Where different worlds find common ground. NDTV World brings Nepal's ideas to the world. NDTV Anviksha, Ideas Across Borders. The Nepal Dialogue, 27th August, Kathmandu, Nepal. 3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV when it really matters. New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform. Digital first. Virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be rich.
Yes, so we are having the management of Lumino Industries. Devendra Goyal is the managing director of the company, and the company is the new company in the IPO block. Sir, good morning. It's always a pleasure to have you with us. But first, we want to understand what are the key details about the company. What does your company do? What's the journey been like?
So my company Lumino Industries Limited, it's based out of Calcutta, and we have 2 verticals. One is the manufacturing and the other is the EPC. Both the verticals are majorly related to the power sector or the power segment of India. So on the product side, we manufacture power cables. Right now we are manufacturing power cables, which is low voltage power cables up to 1.1 kV grade. Apart from that, we manufacture all kind of aluminium overhead transmission conductors, which is like the conventional ones. We are also manufacturing the new gen conductor, which is the HTLS one. And the other segment is the EPC, wherein we take turnkey jobs from government to electrify villages, set up substations, distribution line. And this is a unique integration where we have a product and we have an EPC, so that gives us a lot of advantage in terms of supply chain management, creating efficiency, and ensuring timely completion of the project.
Right, so that's the important thing. But what's the rationale for IPO right now, and how will the proceeds be applied from the capital you raise?
Okay, so rationale behind IPO is, yes, trying to unlock the value of the company, the proceeds that we'll raise, out of which most of the proceeds would be used in repaying debt, and also there'll be a general corporate purpose. So this is how we plan to use the funds that we'll be raising.
And how are the demand trends looking like for conductors, power cables, and electrical wires?
See, the demand trend is pretty strong. Right now, the total addressable market for cable, conductors, wires together would be approximately around 2 lakh crore rupees is what I would talk about on an annual basis. And this market is growing almost at a CAGR of 30 to 14% year on year. So the demand is pretty strong. Then we're talking about adding almost like 500 to 600 gigawatts of renewable power along with thermal power. So yes, India power sector looks good for another 10 years at least.
Okay, so there is a big long runway coming in this sector. Of course, this looks like a sunrise sector as well, but there is a volatility in the pricing. How does that hedging mechanism work for your company or your industry?
Perfect. You have asked the right question. I wanted to answer that. So most of the contracts that we get is either backed by a price variation clause, which protect us from price volatility. And if there is no price variation clause and it's a fixed contract, then we are registered with London Metal Exchange. And as a company policy, we ensure that whatever fixed contract orders that we get, we hedge ourselves immediately. So there is no speculation in business.
All right, but the industry trends, let's talk about the power transmission and distribution. It looks like there's a big shortage in the ecosystem wherever, your company is also a part of. What's the potential here?
Potential, I said that, the total addressable market right now is almost like 2 lakh crores is what I'm talking about. So, and we see that, we will be able to grow at the pace that we have been growing in last 5-10 years. So that's a good opportunity for our company.
Devendra ji, if you want to understand, the next 2 to 3 years, how does your company's growth and guidance looks like? If you could explain us in detail in describing this growth strategy going ahead for the next 2 to 3 years.
Okay. So if you see, our company has been growing at a CAGR of almost like 20 or 30% in the last 5-7 years. Our EBITDA margins have been within that range of 10-11%. So I see that going forward also we should be able to maintain similar run rates.
Right.
Obviously, as a management, I'll always try my best, my team, to push it hard and improve on the numbers. But
well, I have a couple of more questions. I wanted to understand the large capex announcements will also start coming in for the company going ahead.
Yeah, those announcements will be there. So as and when whatever capex or whatever new things are happening in the company, we'll make sure that we make the announcement through the regulatories.
All right. And the last question is, it's a interesting question on West Bengal, the way the industrial sentiment has actually picked up, and you are one of the core folks in this state. Yeah. How has that sentiment been, in West Bengal? Because a lot of new companies are getting listed from West Bengal after a long time, and decent big companies are coming. So your views on that revival of sentiment?
Correct. Yes, the sentiment has revived. There's a lot of positivity when it comes to West Bengal, and people are looking forward to it. I would not say that the rest of the India, which is west or other places, are saturated, but yes, there's a lot of opportunity in east. West Bengal acts as a gateway to the northeast, and a lot of positive things are happening. Whatever hurdles, roadblocks that were created earlier is now being taken care of. So we are pretty optimistic that in next couple of years or few years, we'll see West Bengal doing very good as a state.
Well, that was the management of Lumino. Moving on from a company that is about to list on the exchanges to the company which is already listed. Let's welcome in Joseph Sudhir Reddy, Global CEO, Chairman and MD of Magellanic Cloud. Well, sir, firstly to start off with, the AI, drones and surveillance are the key focus areas for the company. Which business can become the largest revenue contributor for the company, say over the next 3 to 5 years?
Right now, the IT and AI has been the revenue contributor so far for the last few years. And the future, the next trend and the focus that we have put in is the surveillance, e-surveillance area is what is going to be the next biggest revenues that we are going to have. And a lot of this is contributing with the AI, with the surveillance that we can do with computer vision algorithms and ability to identify any conducts that is happening or any other areas of concerns with FRS, with trying to identify suspicious activities in multiple areas of it, in the public area spaces, in the confined area spaces, in the banking sector, gold, vaults, and retail, and railways. Anywhere that you have a camera, you can contribute with our e-surveillance mechanism ability. So that is the area that is going to. And as you have seen, the drone industry and the government spending to protect and to adhere to the nowadays norms of warfare, the drone is going to be the crucial aspect of it for us. That I expect in next year to couple of years, that is going to be the areas of focus for us, or the revenue growth of us.
If you could just give us some idea on like what is the revenue potential that you're seeing here, what is the kind of total addressable market, anything on that front?
Yes, e-surveillance has been and will be crucial areas of it. The CAGR or the potential addressable market is in lakhs of crores, not just in India, I would say. Just in the public sector units, everywhere we have to transform, do the digital transformation and security surveillance parameters. I cannot just give this as code, but at least about 20,000 of crores is expected in the regular public sector, and there are others that are spending. So that is what I can say without naming any particular areas of this thing.
Okay, and how is generative AI capabilities being monetized across clients today? If you could give us some color on that.
Absolutely. Gen AI has been a key area where you can predict or do very much in how do you transform, how do you make your assumptions and calculatively predict what can be done. So in all of our application platform with our clients, we are doing all of those in multiple industry and segments of generative AI, be it in the industries of security surveillances, plus your industries of travel industries that we are creating applications for them, and in the drug industries that we are predicting and what has been documented. Generative AI has been used to give exact results, closer by results, without spending too much of time with local LLMs and public LLMs that are cloud-based LLMs. So those are also being very much utilized with OpenAI, Claude, and other Groks and Gemini. So all of these can be used to do all of this generative AI predictions and giving the faster results. And the AI has been pretty much utilized in and out in our core areas of generating the content and predicting the content.
company recently won an order of close to around 111 crore rupees. What is the current executable order book? What is the kind of order inflow that you're looking at for the rest of this financial year? And anything on the revenue visibility side, if you could give us for FY27?
Absolutely. So the order book in the recent past has been about 110, 111 to be precise. That is what it is. These are predominantly from e-surveillance, and there is an order book from the AI predictions and doing for a big customers, international customer. So the ability to get the revenues right now, the order book is almost about 400 to 500 crores that we have published in the last about 6 to 8 months, plus or minus. And we are seeing that prediction in the future as well. Meaning I cannot count on a particular specific number, but it will be pretty much closer to the doubles or triples of this, because this kind of strategical move that we have done in the e-surveillance, coming down to getting this kind of order book, has been started off a year back, trying to put our seed and trying to implement all of the areas where we are. Even though we have been in the e-surveillance, we have been in the banking sector, and we had to go away out of that and try to come into a different sector, has been the game changer plan over the past 1 year. So that is what we are seeing the result right now. And expectations for the next future quarters has been in the same trend or more than double to triple in the future. So that is how we are trying to see. Overall, on a year-on-year basis, we have steadily growing at least about 10 to 20% ranges, and probably this year it could be a lot more because of the strategical move that we have done with capex investment and ability to transform the way that we wanted to get our the e-surveillance sector have that big jump. Overall, from the e-surveillance, we have been doing about 150 plus or minus here and there, but with the current order book itself is about 250 to 300 crores. So that will give a add-on jump, like from 100, 150 plus 300. So that becomes itself a 450 with the current order book that we have. So that is the jump from one area. So we always try to take up that strategical move.
Right. Thank you, sir. Thank you for joining us and giving us the way forward for the company. Let's also welcome in our fundamental guest, Sharad Awasthi, Head of Research, Private Client Group with SMI IFS. Sharad, you heard the management. At the current valuations, does it seem like a good buy? Would you recommend this stock to your clients?
But yeah, I think what are you trading at? Somewhere around 15-16x, though it's a small company, not that I have very detailed understanding of how it is panning out. But if you look at the broader product imprint, I think it seems that these are products that would require a lot of, would have a lot of demand going forward, whether it's surveillance in the BFSI space or in the railway infrastructure and integration with drones, etc. So I think they are in an interesting space, and you're buying it at 15-16 times. So I don't think it's very expensive. They have done a lot of expansion over the last 3-4 years. I think over the next 2 to 3 years, you would continue to see. So yeah, high risk investors, I think, who want to take a bet, I think they should look at these ideas. They could turn out to be multi-baggers if things pan out as expected.
Right. Let's slip into a short break and we'll be back with more news on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
Some of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
"Man lo."
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV, when it really matters.
Welcome to India's biggest grassroots innovation movement. हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
स्पंदन एक पोर्टेबल ईसीजी मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out and I'm more than happy to get your product to all of them.
हर हफ्ते आईडी
Welcome back. You're watching Small Cap Buzzers on NDTV Profit. Well, the first stock that we'll be discussing today is Cronox Lab. If you look at the stock, that stock is up nearly 10% in trade. There's some deal that is brewing. Let's get in Varsha to understand the granular details of this deal that has happened here.
Well, you know, this is the second day that we are seeing the stock is buzzing. This is on the back of Indo Borax and Chemicals, which will acquire, 64% stake in company and will also become new promoter and gain control of the company. Promoter stake deal value stand at around 246 odd crore and the purchase price under SPA is around 103.22 per share. Now, Indo has also made an open offer. So, Indo Borax has launched an open offer for 95.7 lakh shares, which has been fixed at 157.27 per share. But now, why the stock is reacting, or why we are seeing the huge run up that is 10% in Cronox Lab? One is the offer price, if you see, stand at around 157 rupees, which is significantly higher than 102, which is the transaction price. Change in ownership and management control has triggered that investor interest in the company, and market is factoring actually the premium which is being implied in the open offer. Indo Borax has clearly said that it will not delist Cronox Lab, and public shareholder continue to participate in the listed company in near future also. So we all know that the Cronox has a higher margin products which Indo will bet on, and has a good set of, or a premium set of products you take in reagents and are also used in pharma and chemical industries. So we all know the product profile, which is very good when it comes to Cronox, and hence market is actually betting on that, and hence we are seeing the stock is up 10% and it is moving on the second day itself.
Right. Sharad, this deal which has happened with Indo Borax, do you think that Indo Borax has got a better part out of this deal? How are you looking at this transaction here?
Yeah, I think the valuations are not particularly stretched at what they have acquired the company. If you look at the capex that they have already done, as it plays out over the next 2-3 years, I think Cronox could be in a decent space. Even now, if you look at the return ratios, they're pretty decent at 35-36%. So I think, yeah, specialty chemicals is something that you should be bullish long term. Nutraceuticals, etc. are there, all the brands. So I think all that should help. And with that capex playing out, I think there is high probability, if they continue to keep it listed, there is a probability that the Indo Borax merger by Indo Borax takeover also gives them some synergy benefits. So all that combined, you could be looking at a stock which could, trade around 300 plus.
Right. The next stock in focus is Shanti Gears. Again, a transaction that has come into this space. A larger listed company has acquired some stake in Shanti Gears. Let's get in Parth with more details on the same.
Well, the stock has reversed the loss of the last 33 sessions in a single day because Shanti Gears has logged in a 20% upper circuit. This is the best intraday performance the stock has seen since August 2020, and it's also the biggest single day volume the stock has experienced since August 2022. So the largest intraday gain in 6 years and the largest volumes in almost 4 years as well. Volumes today are 15 times the 20-day average as well. So that's the kind of action that we are seeing at the counter right now. And the reason behind this move is very interesting as well, because Tube Investments has bought a 2.69% stake in the company via a block deal. Tube Investments already held around 70.46% stake as of June 2026, and with now this stake buying as well, the stake of them in the company will move to 73.15%. If we talk about Shanti Gears a little bit, then they are a subsidiary of Tube Investments and a leading player in the industrial gearboxes space in India. The Indian gearbox industry is valued at around $1.4 billion, growing at a CAGR of 7%. About the Q1 performance of the company, revenue was at 115 crores versus 135 crores year on year. EBITDA was down 50% at 15 crores. EBITDA margins also came down by 900 basis points at 13%, and PAT also saw a significant fall and came in at around 10 crores. So the Q1 performance was subdued, but because of the stake buying by the promoter of the company, the shareholders are excited about the counter, and that's why we have seen that 20% jump today.
Right. Sharad, this Shanti Gears deal where Tube Investment has bought in stake, how are you looking at Shanti Gears at this moment? Should any investor, even today obviously they can't buy given the fact that it's a locked in an upper circuit, but whenever the circuit opens, should investors buy into this counter given the fact that a big listed player has also checked in?
No, I think here the valuations are not that attractive. It's already trading at 35, 40 times. So I don't think that even Tube Investment stake going up is going to substantially change the fortunes of the company. And valuation-wise, I don't think there's much left, though the capex cycle is strong. So maybe gear and gearboxes, the requirement would continue to be robust for them. But I think maybe TI India is a better bet than Shanti Gear at these valuations, the company that has acquired further stake into this. Shanti Gears, I would not be very bullish at these prices. I think more or less fairly to fully priced at current prices.
Right. Well, thank you, Sharad. Thank you for joining us and giving us your perspectives on the stocks that we discussed on the show today. Before the last link that we'll be talking about is Kilburn Energy. Let's get in Shivam to understand what's been buzzing around when it comes to Kilburn Engineering and what's the news here.
Okay. Yeah, so the stock Kilburn Engineering, the company is mainly involved in providing the critical equipments to multiple sectors in steel, oil and gas and chemical sector. In terms of stock performance, the stock has gained over 15% in this week, and also the volumes have been up around 17 times the average. Now, if we take a look at the market activity, there has been some open market purchases by the promoter group entity such as Ekta Credit Private Limited. They have purchased around 25,000 equity shares, and Vivaya Enterprises has also purchased around 20,000 equity shares. So this might be one of the reasons that we are seeing an uptake in this stock. Also, if you look at the results for the quarter one, the company has posted a weak quarter one results where the revenue were mainly impacted by the slower customer deliveries and also the slower order conversion. In terms of order book, that has grown strongly around 485 crores at the quarter end, and in terms of pipeline, that has also active inquiry pipeline, that has also remained around 4,000 crore. In terms of EBITDA margin, that has moderated due to weaker execution, and all the effects of these we have seen in the profit after tax, which has seen a degrowth of around 38%. In terms of capacity expansion, the company sees a increasing opportunity in the data center demand, and that's why the Monga Strayfield expansion has been conducted, and this will cater the demand for data centers. In terms of capex, also aimed at supporting the 1,000 crore annual revenue capability going forward. For the guidance, the management has said that the revenue guidance at around 700 crores, and management expects the execution pace to recover from H2. Also, these were the few points which are aiming for the better.
Right. Well, thank you, Shivam. Thank you for joining us and giving us all those information. Well, with that, it's a wrap on this edition of Small Cap Bazaar. Stay tuned and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters. A new Nepal, new possibilities. A new opportunity for regional cooperation. NDTV World brings together the voices defining the next chapter of India-Nepal relations. Nepal's Foreign Minister, Shishir Khanna, Finance Minister, Dr. Swarnim Wagle, Dr. Sashi Tharoor, actor Manisha Koirala, and Dr. Ram Madhav. Diplomacy, commerce, security, infrastructure, tourism, soft power. NDTV Anviksha, ideas across borders. The Nepal Dialogue, 27th August, Kathmandu, Nepal. 3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV, when it really matters.
Welcome to India's biggest grassroots innovation movement. हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
स्पंदन एक पोर्टेबल ECG मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रासरूट इनोवेटर दिखेंगे वंदे भारतम में। Coming soon on NDTV Profit.
Some of my friends and many of my critics called me arrogant. My philosophy is very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
"Man lo."
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
Most of the earlier waves on technology, whether it was cloud or whether it was SaaS, much of those waves actually scaled transactions. AI is going to scale decisions. I see the AI revolution not to be one of a software revolution. It's an infrastructure revolution. And what I mean by that also is that AI cannot sit on top of legacy infrastructure of enterprises.
Hello and welcome to NDTV Profit. I'm Sharad Dubey and you are watching Ask Profit afternoon edition with me, a show where you get all your stock related queries answered from our fundamental and technical guests as well. But before we move on, of course, you need to understand which queries we are getting in, and we have guests also with us, and Sameer Dalal joins in with us. But before that, I'll just give you a market check also, how things are going ahead. Nifty is still flattish right now. Not major move. Yesterday we saw good important technical levels, and that 24,200 levels is being defended. Nifty Bank is slightly better. You could say that overall technical setup is that it's still in the green, so we'll try to track that as well. Let's pull in the sectors also, what's happening there. And remember, FMCG is the top drag here because of inflation risks and concerns which are coming in. On the one side, we have the metal and the PSC realty. That's where a little bit of buying is happening. But FMCG is the place where the sell-off is there. Healthcare stocks also seeing a little bit of profit booking. But nevertheless, a range-bound trade when it comes to the overall sectors. Let's pull in the Nifty 50 stocks also to show you how things are moving ahead. Let's pull in the constituents, please, and we'll get to know the top gainers in Nifty. Of course, they include Power Grid, expectations of a large order in life insurance, and certain BFSI stocks. What's not working is, of course, the crude impact, the consumption names. We have Cipla, that's where the sell-off is happening. So this is how the markets are looking right now. But moving in and understanding the customer queries or consumer queries which are coming in, we need to first figure it out. But we have our guests also. First, we have Ruchit Jain, the VP at Technical Research, Motilal Oswal Financial Services, and Sameer Dalal, the EVP and Head of Research Prop Desk at Nat Alliance Securities. Good afternoon, gentlemen, to both of you. And the markets right now, of course, looking very range-bound, but the action is stock-specific. And we'll start our round of discussions. First one, of course, is going to be from Subramaniam from Tamil Nadu. He is asking, can he enter Polycab at current levels? His time horizon is 3 years. Sameer, your view on it? 3-year view coming in for Polycab?
Yeah, so, we believe the prospects of the industry is very good, but the problem with Polycab is the valuations have moved up far too high. We also know of the fact that competition in this space is going to increase. So it's going to be, a little bit where pricing may not be in the hands of Polycab. Of course, they are one of the largest players and the leader. But we still think that given where valuations stand and increasing competition, the risk reward is not in our favor. So for me, it's an avoid. I would not buy it. If it comes closer to 6,000, I'm talking of a 30% correction, then it becomes a buy for us. At this point, no, I would not touch it.
Okay, so no buy coming in for Polycab. But Ruchit, interesting query coming in from Zakir from Dubai. He's holding 50 shares of Colgate Palmolive and the average price is roughly 21.25. That's what he's talking about. Let's just get that on the screen as well. So it's on the lower side. He's at a loss here. Should he hold, sell or average? Ruchit?
Firstly, if you look at the entire sector as a whole, we have not seen any kind of positive momentum, in the old age FMCG names, I would say. Well, the momentum has now been shifted towards this more of a new age, names where we are witnessing good moves, be it stocks like Nykaa, Honasa. So I think, one should look to exit from Colgate at current levels and rather look to make a shift towards either Nykaa or Honasa, where from a bit midterm perspective, we could expect some good returns compared to this name.
That's the view coming in. Gaurav from Bhayandar also has a query. He wants to invest in the diamond jewelry segment. It's preferably for the long term. Two companies he has spoken about. One is House of Shringar. Another is Sky Gold. Samir, your views on it if you are tracking these counters, House of Shringar, the Mangal Sutra one and the Sky Gold. Both of them seem to be a B2B players in the jewelry segment.
So unfortunately, I don't track either of these two, but if one wants to make a play, there are three companies I will recommend in the jewelry space. The first two are direct retailers. One is Titan Industries. Yes, valuations are rich. If the stock corrects closer to 4,500 odd levels, that is something that we suggest adding because it's not only jewelry, but they also get diversification in different retails, which is watches, which is eyewear, saris, perfumes. They have a very good basket with a lot of growth. The second is Kalyan Jewelers. They are expanding very aggressively, 100 stock count per year. Their Candia brand is also doing very well. They're gaining traction there. So if you look at it on the growth basis, yes, valuations are on 40 times earnings. But if I assume a particular growth rate of about 30% for 35% for the current year and another 30% for the next year, PEG of 1.3, not bad. So that is another one. And the last one we suggest is a guy, if you are looking for specifically diamond based, there's a company called IGIL, which is International Gemological Institute Limited. They do diamond certifications, jewelry certification, both natural and lab grown, debt-free, cash-rich company, growing at about 25-30%. The stock is correct quite a bit, and that's something that could be interesting.
All right, that's the view coming in. But moving on, we have a caller also. We have Gautam from Andhra Pradesh. Hi, Gautam. Good afternoon.
Yeah, good afternoon, sir. Hello.
Yes, sir, your pick.
Actually, I want to...
Yeah.
Hello?
Yeah, go ahead, Gautam.
Yeah, actually, I want to buy alkaline labs and Torrent. Which one is for long-term perspective?
Okay, long-term perspective, Alchem Labs or Torrent Pharma. I want to get Samir on this. Samir, two stocks coming in from Gautam, Alchem Labs or Torrent Pharma. Which would be a better bet for long-term investment?
So I personally prefer Torrent Pharma. Only thing is that they made the acquisition of JB Chemicals, which is going to dent their cash flows, not cash flows, but their balance sheet a little bit. But the growth that could come from that acquisition also is accretive. So we think longer term, in the short term, the stock will probably be sideways, but longer term, Torrent will be something that will do better given the scale and the kind of molecule base and all of that they have.
Right. We have one more caller, and from Andhra Pradesh to Mysuru now. We have Mohan with us. Good afternoon, Mohan. Which is your stock and what do you want to do?
I just bought Neogen Chemical 5 shares at 1105. Just want to know whether can I add these shares for long-term perspective?
Well, if you have bought only 5 shares, it looks like a tracking quantity acquisition, but you are still at a double technically. So, of course, very interesting take coming in, and I think it's a technical bet, right, Mohan?
Yeah, technical.
Okay, so I just wanted to understand, our guest is here with us, Ruchit. Ruchit, if you could just explain us, what's the technical uptake for the Neogen Chemicals here? It's already sitting at a double gains.
Yes, the overall trend for the stock is still positive. We have seen a series of high top, high bottom structure whenever there have been intermittent declines. Near its 50-day EMA, we are witnessing a good buying interest over there. So that 50-day EMA is now placed around 2050. So 2050 is a major support if you look from a bit short to medium term perspective. So I would recommend to hold your existing positions, and if you get any kind of dip towards the 2050, 2100 range, in the near term, then you can use that dip as a buying opportunity, as the risk reward ratio would become favorable then.
All right, we have Sarath from Kerala as well. He has bought few stocks of Ajanta Pharma at 46 rupees and Torrent Pharma at 320. He's a long-term passive investor. I just wanted to understand, Samir, two stocks are there, Ajanta Pharma and Torrent Pharma. Out of these two stocks, which have a better, fundamental prospect? That's the query coming in from Sarath from Kerala.
So I just answered Torrent Pharma. I was unfortunately Ajanta. I don't have active coverage and I don't have much information on it, so I don't want to speak on that.
Okay, so that pick remains Torrent Pharma, which earlier Samir had mentioned as well. But moving on, there is an interesting take coming in from Sudhakar from Palamaner, which is in Andhra Pradesh. He has 340 shares of IREDA at 210 rupees per share. Let's just get the chart on the screen. And from a perspective of long-term investment, IREDA, interesting, the stock hasn't done much. And just wanted to get in, Samir, on this. Your views on IREDA, is there any risk-reward ratio good turning here after a big correction from the top highs, or do you think it's still a no?
For me, it's still a no. IREDA is a no. It's still trading at a much higher valuation than other companies that are lending to the power sector. IREDA got into fame and focus because of the fact that they were doing the renewable energy, renewable source of energy funding. But all of them, PFC, now of course REC will merge REC, other banks, NBFCs are all doing this funding. So it's not a unique story anymore. It's not something, it's going to have competition. It's not like they have the cheapest cost of funds. So for me, it's an avoid.
Right, but now we are moving on. We have another new caller from Bengaluru. We have Malika Arjun with us. Hey, good afternoon, Malika Arjun. What's your query?
Yeah, hi team, very good afternoon. I'm holding Radico Ketan 15 shares at an average price of 2977. So I want to know the short term and the long term. Is it good to still hold the stock or to exit, or what can be the highest profit we can see in this stock?
Technically, you are at a good, you could say, profit, almost 50% profit coming in as well. Ruchit, good time to take some profits off the table or accumulate more. What are the charts suggesting?
The trend, no doubt, has been very strong over last few months. The stock has consistently given good returns, but the momentum readings have now reached quite overbought zone. So generally, whenever we see such overbought setups, either there is a price-wise corrective phase or a time-wise corrective phase, which can be expected in Radico in the near term. So I would suggest to book profits and take money off the table and look to invest some other stock where the momentum has just started.
Right. Thomas is here from Kerala, and he has bought Shriram Properties, almost 1225 shares. Prices was at 87 rupees. Let's pull out the Shriram Properties segment, and what's the near-term target? That's what the request has come in, and it's largely slightly dip coming in around 10 to 15% loss he's sitting at. Good time to average or exit? This is query for Ruchit.
I would recommend to exit. The near-term trend does not look positive. It was into a consolidation phase since the month of May, where 82 was a major support which has already been breached. So because the stock has breached its support, it would be advisable to book losses and exit.
All right. Now we have another new caller from Gurugram. We have Nishant with us. Good afternoon, Nishant. What's your query?
Hi, everyone. My question is to Samir, sir. I want to know about Indian hotel stock. So I bought around 257 shares at 643, and then right now I'm in profits, but I see like competitors are doing better from last a month or so. So if I should park my money here or somewhere else, like Xiaomi or somewhere else.
Right. So Nishant's query is, of course, he's on profit, but is there some more competition coming in? And query is directed to Samir, sir. Sir, you could just explain us, Indian hotels a good bet to continue and add more, or is there some more options also where the capital can go?
Look, options will always be available, right? So Nishant, let me answer your question in a way So I would continue to hold on to my Indian hotels. I wouldn't bother about converting it to something else. Sometimes on the screen, you feel something else is moving up and, your stock is staying still. It's not got as much traction as some of the others. But you got to also realize that you've taken and made an investment in a company which is the largest of its size in the industry, right? So from a risk reward, you are reducing your risk a little bit by doing that. Now, the hotel industry as a overall, there's a still massive shortage of hotels in the country. Even good quality hotels. And the way the Indian hotels is expanding across the value chain from the high end to the lower end of ginger through asset management rather than ownership is going to mean the ROEs are going to keep moving up. For me, this is a great opportunity for the next 10 years to be in Indian hotels. I would strongly suggest stay put. If you get more funds, you want to try to dabble in some other stocks in the hotel industry, you can. But for me, Indian hotels remains the top pick, followed by ITC hotels actually. And then I would look at the others. And if you look at ITC hotels, it's been one of the most underperforming stocks. But if you look at the assets and the growth opportunity, that is something that can do really well. So that would be a play I would make from a 2 year, from an investment point of view, not from a trader. Trading point of view, it could be a lot of different things, but I'm talking of a pure investment 2 to 3 year horizon.
Okay, 2 to 3 year investment horizon you should keep. And of course, the pecking order has been discussed already. We have, of course, IHCL and ITC hotels. But moving on to our next caller, from Gurugram to New Delhi, we have Pushkar with us. Good afternoon, Pushkar. What's your stock and what's your query?
Yeah, I want to buy TBO Tech for 18 to 24 months. Looking at travel sector revival, maybe the fuel prices coming down and seasons coming up. Is it a good bet to buy now?
Okay, so for 18 to 24 months, TBO Tech is in focus. 18 to 24 months is the horizon. Samir, I want to get you on this. If there is a revival which happens in the tourism and travel industry, does this benefit the stock? And would it be nice to enter the stock for the next 18 to 24 months?
So I don't have a view on TBO Tech, but the tourism industry has not struggled in any which way. They're doing extremely well. It's just that, what happened is, I think from up to 2004, all of these tourism stocks, hotels, everything ran up so much that the valuations needed corrected. So we are going through that phase. Tourism in India, domestic tourism is continually growing, especially to the branded. And if we get some sort of benefits of international tourism, I think that the sector will explode overall. So I'm very bullish on it, and I don't have TBO Tech under cover. So maybe a technical view will help.
Okay, so that's the important view coming in. But now let's start our rapid fire round, and a lot of queries are coming in from our guests. First one is going to be FIAM Industries, 100 quantity shares. Good to buy or sell? This is for Ruchit.
Avoid.
Okay, there's an avoid coming in. Also, another query is coming in from NCC. Good time to average out going ahead, and this is for a long-term basis. So I want to get in Samir on this.
Yeah, I'm also holding it and I'm positive. So hold on to it. Don't add more.
Okay, hold on to it. It's a positive view coming in. Motherson Sumi Wiring, technical levels to watch out for. Is there a trade to be made? Ruchit.
So range bound move, 36 to 42 is the range where it can consolidate.
All right, another query coming from Ram from Hyderabad. He's holding GE Shipping at around 1560 rupees per share and wants to know the key technical exit or entry going ahead. A good time to actually add more or not, and this is for Ruchit.
Just hold existing positions with a stop loss below 1250. Review on any pullback towards 1420.
And Urban Company also, the stock is doing well as well, and this is coming in from Raj. What kind of profit booking strategy can happen here, or somebody should stay put? Ruchit.
Yes, continue to hold. There is a sign of a breakout. Keep stop loss for below 145 on your position.
The concerns on FMCG is there, and especially spokespersons holding stocks such as Colgate and even HUL asking good time to exit the stock, or there will be a period of consolidation. And this is slightly, you could say, 6 to 12 month basis, and that's why this query is for Samir.
So which is the stock?
These are the FMCG stocks, Colgate and HUL. The investor is already holding it, but a little bit of concerns coming in.
So from 6 month perspective, nothing great. If you have a 2 year, 2.5 year view, maybe hold on to it. But otherwise, I'd say book out of it. 6 months, nothing.
Okay, and this 12-month perspective for Suzlon, good time to hold these companies or add some more in this current situation? Let's pull in Suzlon Energy as well. Samir, your view on this?
Oh, it's an absolute buy for me. I'm very positive. I think this is corrected a lot. Please go ahead, add on to it.
All right, HDFC Bank, the concerns coming for a long-term investor. And of course, they have stated that should they wait or exit? They have been holding for last 3 to 4 years. Nothing much happening in the stock. I just wanted to get some technical view in. Ruchit?
Hold at current levels, trading around its long-term support. So these are not the levels to exit.
Okay, so you hold HDFC Bank from the current levels as well. Adani Green Energy, around 150 shares is there. Price is at 2300, 400. There is a loss happening. But good time to stay put in this counter, Ruchit. That's the query coming in.
Yes, already it is corrected. 200 EMA is around 1240. So downside could be limited around 1240. If there is a reversal, you can look to average.
All right, so that's the end of the rapid fire round today we had, and we have answered a total of more than, you could say, 50 queries. 102 queries. That's the double number looking at. So of course, this has been a record day for Ask Profit, both the morning and the afternoon edition as well. But time for a short break now, and goodbye, gentlemen, for both of you, for giving you both technical and fundamental views, and best of luck for the future. So time for a short break. Up next is India Market Close.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
Some of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
Man lo.
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
Welcome to India's biggest grassroots innovation movement. हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
स्पंदन एक पोर्टेबल ईसीजी मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रास रूट इनोवेटर दिखेंगे वंदे भारतम में। Coming soon on NDTV Profit. The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
Most of the earlier waves on technology, whether it was cloud or whether it was SaaS, much of those waves actually scaled transactions. AI is going to scale decisions. I see the AI revolution not to be one of a software revolution. It's an infrastructure revolution. And what I mean by that also is that AI cannot sit on top of legacy infrastructure of enterprises.
Buy now, sell immediately. Hold it, boss. Buy.
A flat market, and that's exactly what we are going to talk about on India Market Close on NDTV Profit from the Suzlon studio with Mahima and myself, Hiral Dadia. And it's interesting. There you go. That's exactly what we were talking about. 24,235 right now. No moves coming in there. But Mahima, what I like about the market is we're not breaking those support levels.
Yeah, the 24,200 levels is what Hira is talking about, and we've not broken that. That's true, but it's a very range-bound trade, and nothing much happening with regards to where the Nifty 50 heat map also goes. The Bank Nifty, however, is doing better, up by about 0.3%. But let's pull up
again,
the
it's Nifty. Not that strong.
It's not that
before
strong,
we go ahead, I just want to look at a 5-day chart of Nifty 50 to actually see where we started off the week and where we are in terms of the last day of the week. There you go. I mean, look at the range.
Yeah.
24,396 on a 24,000. It's been a 400-point range in the last 5 trading sessions. And if you have to talk about 5 trading sessions, it is a very narrow range.
Yeah, absolutely. And this was expected also. And it's the only silver lining is that we've not breached the 24,000 level. We've managed to stay above that.
Yeah, and this is in spite of Brent actually going to 91, 92, $93 per barrel as well. So in spite of that, this is a pretty decent picture as well. Let's pull up the heat map in terms of Nifty 50 and then we look at the broader markets. I mean, it's pretty much even Stevens to some extent. Yes, more of reds though. But what's powering is a power grid. I think that's on the buzz of an order win that could be coming in there. HDFC Life is doing pretty okay. HDFC Bank today seeing gains of around 0.8%, and an interesting data point that Mahima bought for us as well today. Kotak Mahindra Bank. So it's your private banks which are coming to the rescue today in terms of markets. BEL, again, look at an ICICI Bank as well. What's losing on Mahima? A trend. You know what is interesting is yesterday you had an Eternal, which was the top gainer, and now you have another consumption counter, which is the top loser today in the name of a trend.
Yeah, and a lot of those names, right? From consumption pack as a whole, including autos, right? You have Maruti, which is taking a knock of around 1.4%. In fact, autos is now seeing profit taking coming in. So you have Tata Motors also in that list. But from the consumption names, you have ITC, which continues to be under pressure. Just yesterday, it saw some relief, but today back in the red. You also have something like a Tata Consumer, which has seen a significant downtick in the last 1 week of 5 trading sessions, as we say. But like I said, autos also are seeing profit taking coming in. You also have something like a Cipla, which is down by about 1%. But I think the breadth of the market is also not very
we should look at the advanced decline ratio, because I mean, there you go. It has absolutely narrowed. I mean, not too much of a difference between your advances and declines, and that's the reason why I call it an even Stevens market in today's session. Let's just look at the mid cap and the small cap index as well and see what's happening there. There you go. I mean, absolutely flat in terms of mid cap 150, small cap as well, though seeing some bit of a respite, 0.5% up move coming in terms of small cap. And this is a lot of stock specific action, a lot of order wins that have come in for these smaller companies which are buzzing in trade today as we speak. One counter I want to actually look at, I mean, there you go, Welspun Corp order win, and because of a Welspun Corp you have all your other steel pipe companies which are buzzing in trade, so tailwinds coming in there. NCC, JBM Auto is interesting as well. IFL Finance. Now you talk about all your gold financing companies because gold is up in trade. Your IFL Finance, your Muthoot, Manappuram, CSB banks, all of them are buzzing. Apart from that, on the losing side, look at this pack.
The sugar pack.
Rampur Chini, Sri Renuka, Praj. All of the sugar ones are under pressure. Britannia again under pressure. LIC Housing. Let's also pull up a Hexaware Technologies, because they do have their investor day or the analyst day today. And if you just pull up an intraday chart of Hexaware, see that sharp correction which has come in there. Now we're just waiting for commentary to come in as to what's really happened. The comment that has come in from the management of Hexaware as well at their investor day, because a sharp correction over here is very interesting, and that stock is at the day's lowest levels.
Yeah, exactly. And we'll try to decode as to what the commentary looks like. But let's also welcome in our guests for the day. We're joined by Kunal Shah and Dilip Bhatt. Both of you gentlemen, a very good afternoon to you. Kunal, I'll start with you first. What do you make of the indices right now? Because it's a range-bound trade is what we're seeing. It's not moved much of a needle today, but do you think the next week is going to be on an exciting front?
Good afternoon. Good afternoon to everyone. See, I think post the rally, what we have seen from 23,600 to the 24,700, and cash coming into picture, market has been very sideways. So I think market is also trying to adapt a lot of things. What we feel is that on the technical charts, Nifty has taken support at the 61.8% retracement of the entire rally, which is at 24,050. So that becomes now a make or break level for the indices. So any longs which are there into the indices, 24,050 should be a strict stop loss on the downside. On the upside, the immediate hurdle is at 24,400, and once that is taken out, you will see the short covering continuing towards the previous swing high of 24,750, 800 on the upside. So at the current levels, the view continues to remain on the buy side. Bias is bullish. 24,050 should be a stop loss. Coming to the Bank Nifty here, I think Bank Nifty is where you need the outperformance to come in. Because if Nifty has to move higher, Bank Nifty has to participate. Bank Nifty has been consolidating and has taken support at the 20 weekly moving average on the technical, and that is placed at around the 57,000 mark. So again, even for Bank Nifty, 57,000 becomes the make or break level as well. So if you are holding long, 57,000 should be a strict stop loss on a closing basis, because if that is triggered on the downside, the correction could get deeper. Overall, for Bank Nifty to move higher, 58,000, which is the hurdle zone, that needs to be taken out decisively. Then probably you will see a short covering move and Bank Nifty heading towards 60,000 on the upside.
Okay, so 60,000 on Bank Nifty. Kunal, your top picks at this hour then. It is a Friday. Would you advise to build positions in the market that we are in?
See, I think we'll focus on the broader market. I think that is where the real strength is. Even if the market has been consolidating in the last two trading sessions, broader market is where the advance decline ratio has been favor the advances. So I think that is where I'll keep my focus on. First is the two buy ideas, again, recommendation from my end. First counter would be BEPL, Pansari Engineering Polymers. We had already seen a breakout over here in the stock around the 8th or 20th July. And again, today we have seen a volume-based buying coming back. So there is a symmetrical triangle pattern on the technical charts. I'm expecting it again, the breakout on the upside to continue. 125, 126 is where it is currently trading. One can buy at the current levels. Keep a stop loss of 118. Look for targets of 135, 140 on the upside. Second call, where I think again there could be some short covering move in the later half. The stock that has come on my radar over here is NTPC. On the technical front, there is an ending diagonal pattern which has been formed, which is generally a reversal pattern, and I'm expecting this to break out on the upside. So it's a pre-M 339. It is where it is trading. One can keep a stop loss of 333 and look for targets of 348 to 350 on the upside.
Okay, so that's NTPC. In fact, let's put up a Welspun Corp on the screens as well and see what that counter is doing in trade, because the surge that we've seen on the back of an order win for a Welspun Corp, a lot of your other pipe companies have seen that rally also come through. In fact, let me take that question with Dilip Bhai. Dilip Bhai, good afternoon. A strong surge, 15% moves is what you're seeing in terms of where Welspun Corp goes, and that's on the back of a 17,500 crore order win. Now, along with that, you look at the other pipe companies like a Ma Seamless or any of the other names like a Man Industries as well, all of them buzzing in trade, and there is a rub-off effect coming in there. Do you think there is a shift that's happening over there, which is getting indicated with this size of an order coming in?
Good afternoon, Hiran. I think let's understand this way, that demand for this particular pipes continues to be pretty good. And not to forget that Welspun is clearly a leader in this particular space. So naturally, they will definitely get a big share, which was expected even otherwise, as far as my analysis goes. Maybe the size of the order is much bigger than what we all thought, but still, I think the big size orders, and as what you very rightly said, the contagion impact has been seen on the other companies. maybe the others are not really poised for that kind of order receipt. But still, I would say that it's better to stick to Welspun, which has clear visibility. And that's a company which has really given which has a very good track record. I think as far as Jindal Saw is concerned, is more to do with the pipes for the water. So I think there also there is some action because the government has released a big fund out over there, which they had been holding it back for quite some time. So maybe that's why we have seen Jindal Saw also going up in the last 1.5 2 months, and today partially also because of this news on Welspun. But all in all, this industry has been, it's a mixed bag, not really that everybody is doing pretty well. But Welspun is more focused in what they are doing. So I think that rightly deserves a much higher valuation.
Okay, and point well made, Mr. Bhatt, because there's water infra, there's also oil and gas rebuild infra work that may come in and could, lead to big order wins for all of these companies. But while we're on this subject and talking about Welspun Corp, like we mentioned, it's landed largest ever order win, which is worth 17,200 odd crore, and this takes its order book to a record of 42,100 odd crore. Parth is joining us to give more details about this order win as well as other highlights for this particular stock that we've chosen as stock of the day. Parth?
Well, an absolutely incredible move is what we have seen in Welspun Corporation today. The stock has gained almost 15% in intraday trade and has hit a new all-time high as well. If we talk about the recent months as well, then since April 2026, the stock has gained over 185%. And in August this month so far, that's just 21 days, the stock has gained over 40% as well. So that's the kind of move is what we are seeing in this counter. Now coming to its peers as well, this rally has actually triggered a move in the peer companies as well. Jindal Saw gaining almost 10% today. Maharashtra Seamless is also up 6%. Man Industries is also up 7% as well. So it's kind of flowing into the sector as well. Now let's understand and decode this entire move behind Welspun Corporation. It has won its largest ever single order in company's history, and that is an international order from the US clients. The order was valued at 17,200 crores, and that's actually almost 1/3 of their market capitalization. That's how huge this single order was. It will be executed between in the years of FY28 and FY29. So that's the kind of visibility that this order has given them, and the order book also stands at the highest level of over 42,000 crores. So that's the kind of momentum the company is seeing in terms of order wins. If we look at the Q1 performance of them as well, they saw their highest ever EBITDA of 756 crores. In terms of PAT as well, it saw a growth of 42% year on year because of the strong operating leverage that the company enjoyed during the quarter. And also guidance was held steady by the management. They had pointed that the momentum was increasing, but they still chose to remain conservative, and that we'll see further in this analysis as well as why they do that. Now coming to the US story, which is the main trigger behind Welspun, it remains a key profit engine for them. It is booked till FY28. That's the visibility which they have. Demand is shifting from LNG to data center. That is the key trigger behind the order wins that the company is winning in US. In fact, their normalized EBITDA that used to sit at around $300 per ton is actually growing even more because of the higher demand. Management is currently avoiding any US capacity additions intentionally at this point of time, is what they've stated. Also the geography mix, if we move ahead from the US, the Saudi Arabia is also getting a huge tailwind from the Aramco led investments is what we are seeing. But coming back to the India, management has said that the Indian demand remains muted, and that's what they are expecting to be muted in the coming time because of the funding constraints in the Jal Jeevan mission. Exports is what the Welspun will be focusing on in terms of Indian markets, and also they will
shift from the domestic focus in India towards export. Lastly, at the guidance, FY27 is guided at around 20,000 crores in terms of revenue. In terms of EBITDA, it is guided at 2,850 crores. Also, now coming back to the guidance point, the company has surpassed their EBITDA guidance every time in the last 3 years, and that's why the management remains to stay conservative. They've also set some guardrails. ROCE will be at 20%, and net debt to EBITDA is also guardrailed at less than 1. So that's the kind of order momentum is Welspun Corporation is seeing, and the geography mix that is shifting in their favor, and that's why the stock is outperforming its peers today.
All right, okay, Pa, thank you so much for putting that entire piece into perspective and telling us and giving us the entire perspective on Welspun Corp. Kunal, if you take a look at the charts, right, since April, it's been trading, higher and higher, right? We've seen an upward trajectory since then. The stock is also trading above its key moving averages, has given a gap up also today. Do you think this momentum could continue from here on as well?
Yeah, I think overall, it is in a no-fly zone. So I think overall we have seen the momentum very strong. So I think if anybody is holding from the lower levels, my suggestion would be to at least book some profits here. Technically, what I feel is dips would be a better opportunity to go on the long side where the risk to reward ratio will be favorable. Overall, I can expect the stock still has a little bit of upside left, could probably go towards the mark of 2400 on the upside.
Right. So that's the view coming in on Welspun Corp. The other one, that we were discussing at the start of the show was also about gold finances, because, we've been talking about how because of gold prices, these companies keep getting impacted. But there was also a JP Morgan note today that did, initiate overweight on a lot of these names. There was IIFL Finance, Manappuram Finance, as well as Muthoot Finance. All of these three did see overweight rating from JP Morgan. Dilip, I'll come to you on all of these three names put together. Any of these names where you think that despite of the volatility that we've seen with regards to gold price and how their movement have fared, there's still valuation which is looking attractive, and there's still growth in terms of fundamental perspective looking attractive?
So, well, I think the trend and the trajectory that we are seeing with all these gold financing companies has been pretty good, pretty strong in terms of their credit offtake, and largely because of this gold financing. I would say that Muthoot Finance still looks pretty good, pretty interesting from the current levels. I would still say that this is the company which can still give you at least around 15 to 20% return over next 8 to 12 months is what my broad guess is, because overall the parameters are good and the tailwind also is very solid for them. And the way the trend has emerged, like how generally how people are monetizing their gold in a very nice way instead of just storing it, I think this particular thing should provide a good tailwind to all these gold financing companies. But in terms of valuation, I would still prefer Muthoot Finance.
But Dilip, I have a follow-up on that one. Muthoot Finance, I was just looking at the 1 year forward. It is at around 2 to 3.6 times price to book versus Manappuram and IIFL. Both of them are in that range of 1.5 to 1.7 times. So you have Muthoot Finance, which is still on the expensive side. Even in terms of 5-year average, it's been on the expensive side. Do you think it's worth getting into a stock which is the most expensive of that cohort? And yes, the return potential is what, 13-14%, versus the risks associated being your geopolitical uncertainty and your volatility in gold prices?
So, I look at it this way, that the entire sector is has got a very solid tailwind without any doubt. Now, what happens is typically a leader always leads the way, and Muthoot is seen as a clear leader with, good experience in this particular line of business, and they continue to have the momentum. Yes, price to book, I think they look, certainly they look expensive without any doubt. But I don't think that equation or parameters are going to change. In my opinion, the other two also possibly will do well in this sector. But clearly, I think Muthoot Finance, being the leader, should continue to command a good premium and the leader.
Okay, all right. So that's the view coming in on all of these gold financing companies. But the other pack of stocks that has remained in focus for the entire week is sugar stocks. And, this is as the government takes another step to curb soaring sugar prices after tightening stock holding limits. Sharad is here who tracks this very closely to give us more perspective on what's happened now. Sharad?
Well, we already know about the discussion about the rising, surging prices in sugar, and of course, this impact is going to be there. Remember, soft commodities take 2-3 quarters to actually get normalized. But the first action on August 28 comes. India has allowed 10 lakh tons of raw sugar import. This is coming after a decade. India, remember, is world's second largest producer of sugar. So imagine that raw sugar import will be continued till October 31st. This is of course taken here to control the rising sugar prices and ensure that there is a security especially coming in. Also there is this move coming in for the domestic availability of sugar. But the earlier action is also important. August 19 they had tightened the sugar stock holding limits as the prices had hit their record high levels. Looking at the key reasons, the dealers have signed 10 million tons for sugar which they can hold for 15 days as an inventory. So two measures have been already taken by the government, and it seems like more measures might be coming in. But how have the prices moved? Let's first talk about the wholesale rates. That's up more than 20% in August, and a big move since July. It's up almost all 50%. Now these wholesale rates are above 5,300 rupees per quintal and currently at 5,500 to 5,600 in some markets in Kolhapur. Sugar prices are near the 16-year high levels. This is for the domestic segment. Also the retail segment, if you look at it, it's up 40% just ahead of the festive season. So it's going to pinch the common man as well now because the retail prices have gone up. The price hike is roughly 40 to 45 in July and currently it's at 65 to 70 as per the channel checks. Also, what lies ahead? Three important things. Volume based buying was there this week, but now the profit booking has started in this counter. So be very careful in the sugar stocks and more government interventions likely. So this is the entire picture of what has happened for the sugar stocks, and look at the momentum. So profit booking might be there technically speaking as well. This is the entire story of what happened this week in the sugar space.
Very interesting here. In fact, before I go to our guests who are going to talk to us about the sugar space very quickly, a question with Kunal. On the charts, Kunal, what would you advise investors to do? Anything that you like where you're seeing further momentum, or do you think these rallies should be used as an opportunity to book profits?
See, I think for the sugar stocks, we have already seen some good momentum. So I think you have to have a very stock specific approach. I think definitely if you're holding from the lower levels, at least book some partial profit, you will get re-entries at the lower levels. My preferred pick in this space would be Balrampur Chini. I think this is a good breakout what we have got in the stock with volumes, and I think dips towards that support of 683, 663, 665 would be a good opportunity to enter again on the long side. Positionally, I can expect at least Balrampur Chini to go towards the mark of 800, 850 on the upside.
View coming in on Balrampur Chini, but let's also try to understand this from industry experts. We're now joined by Deepak Barani, who's the Director General at ISMA, and Kapil Neema, Deputy Executive Director at Dalmia Bharat and Sugar, joining us now. Thank you so much, gentlemen, for taking out the time and speaking with us. I'll start with you, Deepak, quickly first, because the government's decision to kind of allow this, 10 lakh tons of raw sugar being imported, do you think that this is enough to kind of cool off the prices, or can you expect further, moves coming in from government for the import? And overall, what's your outlook when it comes to sugar prices as of now?
Yeah, thank you for having me in your show. First of all, I want to make it very clear that there was no physical need to import the sugar. However, we have taken a note that government has allowed the import of 10 lakh tons of raw sugar because we feel the country already has the sufficient sugar to meet domestic demand. And we have also announced that we'll be starting our mills earlier, which will bring fresh sugar to the country faster. However, I believe the announcement of 10 lakh tons of raw sugar at nil duty will at least give a very clear signal to the market that any speculative and unwarranted price increase will not be allowed to persist. We feel that this will definitely cool off the sentiments, unnecessary panic buying, because there was a lot of market forces who were trying to give a perception that there are very tightened stocks, but the market fundamentals the real physical stock, absolutely no issues. We will be closing the season with almost 35 to 40 million lakh tons of sugar, which is comfortable. However, I believe this step, along with other steps like stock holding limit on the bulk consumer, stock holding limit on the traders, plus there was another circular which was issued by the government that any mill which has sold the sugar should be dispatched within 7 days of the sale, will bring more sugar in the domestic market, because at the moment what was happening because of the festival demand, normally the bulk consumers who normally stock 10 to 15 days of stock, the sugar, because of the panic buying, they were trying to stock almost 1.5 to 2 months of stock, which was leading to perhaps getting sugar at one place of the godowns. With this, at least what will happen is that you will have more sugar for the domestic user, and somewhere it will cool off the domestic prices, the retail prices for the domestic consumer. Definitely, all these steps are very good steps, and it will help the sugar prices to stabilize.
Okay, so the steps are in the right direction, but an import was not needed. Kapil, let me come to you as well. What is the situation according to you on ground? Because, you are one of the parties who will be supplying even on the retail side, even on the bulk side, industrial side. How are you looking at the situation right now?
Hi, good afternoon, and thank you for having me on your show. Like Deepak ji mentioned, there was enough sugar which is there to take care of the next 2 months of festivities. And we also see sugar to be continuously available from the domestic sugar mills in the market. The imports decision from the government is more of a precautionary measure where they want a continuous availability, and we respect that. Also, to avoid if there are any speculative activities which happen around, the stock positions, which people are perceiving as very tight, to make sure that the availability remains in the market, and the crushing, before the crushing starts mid-October to end October and the new sugar starts coming in, there is enough and more sugar in the market. And we see this more as a support to the prices, where there will be continuous availability of sugar, and it will bring more stability, because the volatility do bring concern and do bring knee-jerk reactions, which is not required and that is not good for the industry as well.
So that's from the just a quick question, Kapil, was with regards to you mentioned festive demand coming in. Do you think that this price surge is actually on account of domestic supply shortage, or are you just seeing this because of supply demand pumping up, and because of that there is hoarding happening?
Actually, to understand that, we'll have to go a little back and see what happened because of the Gulf War. There was limited sugar which was getting into the pipeline during specifically May and June, where because of LPG shortage, we saw a lot of the unorganized sector, the local mithai walas, the local chai shops, they all had specifically in the tier 2, tier 3 cities, they had to shut down because there was no fuel to run. Also, there were a couple of industries, specifically the bakeries and the confectioneries, which were dependent on LPGs. They were shut. So the pipeline actually was completely empty. And as the market opened, as the availability of LPG increased, and as these consumption points opened up, the demand increased, which eventually resulted in the increase of prices. But as the sugar starts coming in, as the sugar flow gets normalized into the domestic market, the prices should stabilize now.
Understood. Okay, Kapil and Deepak, thank you so much for putting that into perspective and helping us understand as to what's happening exactly with the space. But with that, time to slip into a very, very short break, but don't go anywhere. We'll be right back with more action on the other side.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
A world of questions, Ideas that challenge the ordinary. Conversations that connect countries and cultures. Where different worlds find common ground. NDTV World brings Nepal's ideas to the world. NDTV Anviksha, Ideas Across Borders. The Nepal Dialogue. 27th August, Kathmandu, Nepal.
Welcome to India's biggest grassroots innovation movement.
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
स्पंदन एक पोर्टेबल ईसीजी मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रास रूट इनोवेटर दिखेंगे वंदे भारतम में। कमिंग सून ऑन NDTV Profit.
Some of my friends and many of my
Hello and welcome to NDTV Profit. You are tuned into Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Bitcoin crosses the $75,000 mark, currently near that $79,000 segment. Now it's continuing a strong momentum. CFTC Chairman Michael Selig says to explore new crypto market rules. Franklin Templeton gets SEC nod for tokenized funds. And crypto is witnessing its 7th largest liquidation event in the history. Well, the crypto regulation is clearly moving into high gear with SEC, CFTC and the Trump administration all pushing for a more defined framework. Now this of course includes the Clarity Act. So what does this growing regulatory push mean for the broader ecosystem? Listen into what Jaideep Reddy, the partner at Tride Legal, had to say about it.
Sure, thanks Sharad. Pleasure to be here. I think this is part of a global shift towards regulation of this asset class. As we know, the EU has already passed the MiCA, the Markets in Crypto Assets Act. And the US had proposed the Clarity Act. And as the name suggests, what it really does is it creates definitional classifications for crypto assets, because everybody always wonders, what is crypto? Is it a security? Is it a commodity? Is it currency? And the Clarity Act, combined with another act in the US called the Genius Act, it separates crypto into basically securities, commodities, and currency depending on the nature of the asset. So that will clear up all this confusion about which regulator will really supervise it. And following from that, we can expect that regulators around the world, and hopefully India as well, can draw clear jurisdictional boundaries between which regulator can supervise what type of activity. And another interesting aspect is it also provides for regulatory coordination between regulators so that there is no conflicting view taken on the same or similar aspects.
And Jaideep, what does this mean not just for the crypto global system but for India's crypto community?
So Sharad, I think as large markets like the US bring out these steps, essentially organically what will happen is the large institutions will put processes in place to adhere to those frameworks. And as they say, the proof is in the pudding. So as those frameworks play out and become successful, perhaps the Indian regulators will also take note and adopt similar frameworks. And then, of course, that will boost the ability of Indian entrepreneurs and Indian users to transact more freely and also with greater consumer protection and investor protection. I think in India, the regulators are concerned by some of the hacks and other incidents that had happened in the industry. But the answer to that cannot be regulatory ambiguity or silence. In fact, it calls for more regulatory action and legislation. And hopefully this can set the tone in the Indian context as well.
Thanks a lot, Jaideep, for that. And now as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved. Whether it's about crypto, regulations, taxation, or the broader industry, the team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
Welcome back. You're watching India Market Close here at NDTV Profit, and it's time to get in Somit Sarkar, who joins us with all the chatter that he has been hearing from the reading room to give us a perspective of what he's found out today. Somit, what is it that you're hearing today?
Well, a host of stocks that dealers have highlighted. Firstly, it's Piramal Finance. Now, dealers are expecting a fundraise announcement to come in very soon here. In fact, they are also expecting this as soon as next week. And the demand that brokers are now garnering is nearly 6 times the amount that Piramal Finance actually wants to raise. For Viyash Scientific, which was earlier known as Sequent Scientific, a block deal is expected on this counter very soon. Promoter Carlyle is looking to exit. The block deal size could be as big as around 1,000 odd crore rupees. For Bajaj Housing Finance and Morpen Labs, there are buy flows on the PMS desk at lower levels. Dealers are expecting some positive reports that could come in both the counters going forward. For Genius Power and Cabra Extrusion, dealers indicate that a large prominent HNI has been accumulating shares in trade in both these counters today. For Happiest Mind, there's a buzz of a potential M&A that is in works. Dealers are expecting that the existing promoters' full exit might be announced anytime soon, and hence the stock is also up nearly 6% in trade. And lastly, when it comes to Amagi Media, a big block deal took place in trade today, and dealers are indicating that SBI Mutual Fund was among the top buyers in trade in this block deal. So the bulk and block deal data would be important to track today.
Okay, thank you so much for that, Somit. Interesting names that we are watching out for as well. In fact, Vijay Chopra, MTNC here at Enoch Ventures, also joins in. Vijay, welcome to the show. Always a pleasure to speak to you. This is Hiral on this side. I want to get a quick view from you with regards to where the entire sugar pack was. We've been talking to a couple of guests as well, where pricing on the upside, but there is a cap coming in. You have imports that the government has opened up as well. And this sector is something which does not really sustain a rally on either sides for very long, right? What's your view? Vijay, this question is for you. Are you able to hear me?
Absolutely. I'm absolutely sorry. There was some bad connection, so I couldn't hear the question. Can you repeat?
Sure. So, Vijay, my question to you was your analysis in terms of what's happening with the sugar pack, because a rally in this sector on either sides is not sustainable usually, right? Reverses very quickly. What would you advise investors to do?
So I would take the viewers few years back when sugar was a news-based sector. It was primarily dependent upon the kind of government intervention, and if at all there was some kind of a SOP which the government announced, only then the sugar sector moved. There were a lot of dues for the sugar farmers, and most of the sugar mills were not doing great. Now, post, I think 6-7 years back, when actually ethanol came into the picture, most of the companies added their capacities with ethanol, number one. Their balance sheets became good, and from a place where they were making actual losses, most of the sugar companies, good sugar companies, top run sugar companies, started making money. Now there is a shortage of sugar. Now we are in decades for the first time we are importing sugar from a sugar surplus country to a time when we are actually importing sugar. So this is the first time I'm listening to anything like that we are actually importing sugar. So as of now, due to this news of the import which is happening, the sugar companies are showing some kind of a downside. But I believe that this is short-lived and it will start coming up. The retail sugar prices have shot up from maybe almost 40 rupees to 65-70 rupees a kg. You look at this growth, it is a stupendous growth in the retail prices. And the festive season is around the corner. So the offtake is not going to, stop anytime soon. So I believe sugar companies would do well, and this is a seasonal play as well. Most of the sugar offtake happens during these 3-4 months, which are the festive months in our country. So I believe that this is a short-lived downside in the sugar stocks. They will surely come back again, and I would say that be with the top rank companies, Balrampur Chini, EID Parry. These are the companies to be in. So. And there is money to be made in sugar sector because they are selling ethanol at a reasonable price. They're making money there. Sugar retail prices have shot up. So when there is money on the balance sheet, there is profit on the balance sheet. For sure, companies would do well in the longer
So
term.
basically, yes, from here on, it seems that the season is going to be strong. Stay with us, Vijay. One other counter that we're talking about is Niva Bupa. Earnings were pretty okay if you have to look at the first quarter, but the question over here is as to the IRDAI action that has come in, and does that become a negative, and hence we're picking this up for a bull versus a bear case scenario. My colleague Shivam, who's standing by. Shivam, a good recovery from the day's lows in terms of today's session, but the IRDAI action that has come in, that does become an overhang risk. What is the bull and the bear case scenario telling you with regards to Niva Bupa?
Yes, so Insurance Regulatory and Development Authority has warned the company regarding the expenses of management in the FY25. So company has stated that they have complied with the expense of management limits post FY25. So that's a bull case for the company. Whereas the Insurance Regulatory and Development Authority has taken an action regarding barring the new branch openings for next 6 months for the company. In terms of gross premium in the quarter one, we have seen a growth of around 32% and it stands at 2,150 crores. Also, the company has seen a strong operating performance, while on the beer side, the competitive pricing still remains in the industry, and the competitive intensity in the group health industry has also been there. In terms of the revenue, growth, the company is aiming around 8 to 10% of growth alpha in the retail health industry if we compare it to the industry basis, while the operating expenses overhang is expected to remain in quarter two going forward. Also, if you look at the analyst views, 91% of the analysts have given a buy rating to the company with a 12-month target price of around 99 rupees, while if we look at the growth in the stock performance that the stock has given from the IPO launch, that has been only around 10% since November 2024. So that's been a bear case for the company. In terms of valuations also, the price to equity stands at 32.9%. So valuations are currently at the lowest levels since listing, but IRDAI is likely to come up with a consultation paper which is more favorable towards the customers. So that has been a bear case for the company.
Okay, all right. Shivam, thank you so much for getting us those details. Let's try to pull up the chart and see as to what it's doing. Like Hiral said, that there has been a significant recovery in this counter from the day's low point. By the way, we're also joined by Vinay Rajani, who's a CMT Senior Technical and Derivative Analyst at HDFC Securities, also joining us on this side. Vinay, very good afternoon to you. What do you make of Niva Bupa on the charts?
Will you please repeat the name of the stock?
Niva Bupa.
Niva Bupa, 1 minute.
The stock has recovered significantly from the day's low point and trading cuts about 0.6%. Yeah, go ahead.
The stock has corrected from the higher level of 91 and today it touched its 200 days EMA and bounced back. So 200 days EMA is placed at 81. So it is giving respect to that level. But still the trend is down. Today's recovery is not enough to call it as a reversal. So we need to wait whether it is giving some follow-up buying tomorrow or not. So we will have a wait and watch approach for this stock. I think 84 is a level one should track. If it is managing to hold above that level, then we can say it is a reversal. So 82 is a strong resistance above which the trend could reverse on the upside.
Okay, and Vinay, what about the indices right now? Because it's been a range-bound trade, but do you think that this range could widen further in the next week? And what could your BTST trades look like?
Yeah, so 200 points bounce from the lower level. It has given respect to the level of 24,000, which happens to be the upward sloping trendline support. And still, it is not enough. I think for bullish confirmation, Nifty has to surpass the crucial resistances of 20 days EMA, which is placed at 24,300. And 200 days EMA is placed at 24,380 odd level. So we are giving a view of neutral right now. Neutral view is being given by us. And once Nifty crosses 24,400, then we can say that we are out of this range bound and the choppy phase. So 24,400 on the upside and 24,000 on the downside. Once we see a breakout on the either side, then we will come out with some momentum period in the indices. But till then, we can say it is a range bound choppy market, and one should avoid trading momentum in the indices right now. But yes, stock specific opportunities are there. I think Prestige Estate, which is a real estate stock, is looking good after a healthy correction. It has resumed its uptrend today. So around 1620 can go long, 1590 should be the trading stop loss, and 1660 should be the immediate target and can be done for BTST also. The second stock I like is the IDFC First Bank. So mid-cap private sector banking stocks are looking good to us. So IDFC, which also gave us a very good result and which is trading at 86.50, the one can go along with a 1 or 2 days horizon. So 85 should be the stop loss in that, and 88.50 is the immediate target that we are aiming right now in the IDFC First Bank.
Okay, so that's with regards to where the banking space goes. But a couple of lines that are coming in from the Reserve Bank of India, and this is from the Central Board of the Reserve Bank of India, where the meeting was held in Chennai today. The board has actually reviewed the current economic situation, global and domestic challenges is what they are saying, including the risks to the economic outlook as well. They also reviewed various areas of operations of the Reserve Bank, including the functioning of its committees. And you have the attendees that are given in there. So basically, no details that are coming in with regards to what was the outcome, but just in terms of the agenda was the economic situation, the global and domestic challenges, including the risks associated to the economic outlook. That is what the RBI has actually looked at. But moving ahead from here on, you know, I mean, the way secondary markets are absolutely silent, I would say, a lot of buzz, a lot of action that's happening in the primary markets as well. And that is what is keeping investors absolutely busy. Hence, on a Friday, we've decided to actually pull up a section which is on IPOs, which will tell you which are the IPOs that are slated to open or even list next week and what should one do with them. And my colleague Varsha is standing by to get us a whole host of IPOs that are lined up for next week. Varsha, what's that list telling you? Because this is going to be something which is very interesting for the investors.
Yes, absolutely. You know, I would say a lot of action which is happening in primary market. You have, I'll be talking about 5 upcoming IPOs this week. You have Lumino Industries, wherein the IPO dates are 27 to 31st August. Issue size is 700 crore. This is an EPC company and also supply to conductors and power cables, payment of debt and capex. The usage of money, the money will be used for the payment of debt and of course for the capex. Onto the financials, I would say a steady set of numbers we have seen, but a good growth in PAT from 87 crore to 160 crore. Then you have Skyways Air Services. Again, IPO will open on 24th and will end on 27th. The issue size for this IPO is 583 crore. This is a logistic company and freight forwarding company. Debt repayment and funding working capital are some of the usage of funds. Onto the financials, a steady set of numbers is what we have seen when it comes to, you know, EBITDA margin and PAT. While next on the list is Symbiotic Pharma Lab, again a pharma company which is coming up with its IPO. IPO will open on 24th August and will end on 27th August. It's an 1,757 crore IPO, but the negative point over here is majority of this is OFS. So 1,600 crore is an OFS issue. Well, this company makes pharmaceutical APIs. Onto the usage of funds, funds will be used for debt repayment and for general corporate purpose. Onto the financials, a kind of bumpy road, I would say, when it comes to margin and PAT. Lastly, you have 2 IPOs which are smaller in size. You have Anu Projects, 175 crore IPO. It's an EPC company. And High Tech Engineers, again 136 crore IPO, which will open on 24th and end on 27th. The procurement of machines and debt repayment are some of the 2 things where money will be utilized.
Okay, all right. A lot of interesting names also opening next week. We've seen a slew of IPOs this week as well. You know, Vijay, I'll come to you with regards to how the primary market has been buzzing in the last 2 odd weeks. It will continue to be buzzing in the next week as well. Any of these IPOs that you've looked at, you find attractive that our viewers can go ahead and subscribe for the next week, and as well something that's already listed and that you're already liking? I think you're in mute, Vijay.
So,
Yeah.
there is for sure some kind of effervescence in the IPO market. We are seeing it again, and we have seen it several times in the last few years. Look at the Nifty. It's not moving anywhere. Generally, the market where it opens, it closes there, or maybe a few points lower. So I think that the way primary markets are behaving, I would rather not go there. But there are good opportunities here in the listed space as well. So I would say I love metals, and I've been a long-term bull on the metals, and I think that companies like Hindustan Copper, like National Aluminium, like Hindalco, like Vedanta, these are great buys. So one can keep on accumulating metal stories like a SAIL or a Tata Steel. For sure, I think that metals are going to do in the longer term. I do not generally do short-term trading, so I think that metals and defense are my go-to sectors as of now. But yes, with the kind of IPOs coming in, I've not tracked many of them, the ones you mentioned also. So I would rather stay away and be with metals and be on a very conservative side as far as investing is concerned.
Yeah, all right. So that's the view coming in on a lot of these IPOs. But the cash market for F&O segment is now closed, and we have the levels for the Nifty 50 which stand at around 24,234, pretty much where they were throughout the day. So absolutely flat ending to the Nifty 50 as of now. Of course, in the next 15 minutes, we'll figure out as to how the day ends. But the Bank Nifty also at almost the same level as it was trading at the start of the show, around 57,647 is what we're seeing. The Sensex also ending absolutely flat at this moment. 77,522 are the levels that we're tracking on this one. Vinay, the markets are of course still open for non-F&O cash, right? In terms of those stocks, some mid-cap names or small-cap names which are not available for F&O, any specific name that you're liking that you could give a buy recommendation right now for the next week?
Yeah, so in the mid-cap space, there are many stocks which are looking good to us. One of the stock which we like is the LG equipment, which is looking good to us and completely into a bullish zone and trading above the key moving averages. So LG equipment is looking good for short-term alpha. The second stock which we like is the Acme Solar, which is a power generation company. That is looking good, and the gas trading company like Aegis Logistics, that is also looking good and seems to be breaking out from the consolidation. So these are some of the stocks which we like: LG Equipment, Acme Solar, and Aegis Logistics for a couple of weeks for getting 7 to 10% returns.
Okay, all right. So that's the two names, LG Equipments as well as Acme Solar, that Vinay has on his radar. But let's also take a look at what's happening with the Bitcoin space, because it's a very interesting space and not driven by news, not driven by a lot of things, but it's surged past the $75,000 to a 3-month high, and this is powered by treasury buybacks, strong ETF inflows that we've seen. And Sharad, who has been tracking this space very closely, joins us with more detail on this particular rally as to what's caused it and what's happening in the Bitcoin space.
Well, sometimes investment in alternative investments also fetches a lot of return. Equity markets might get a little bit boring, but a lot of action is coming in the Bitcoin space. Now it's past that $75,000 mark and near that 80,000 currently as I speak. Now the Bitcoin is at 3-month high levels, but still down almost 30% from the high levels which we saw in the year 2024. Rising yields actually makes these assets treat as an inflation hedge, and that is why it is in a limited inventory and that demand jumps up for Bitcoin. There is a support coming in from Trump, Republicans, and also a lot of agencies, CFTC, SEC, all of them are gunning hard so that the crypto rules come first and also they get passed in the Senate vote. Street is very bullish on this. This Clarity Act, remember, will be coming in the month of September, mid. I'll share the dates with you. Increased ETF flows, that's the impact coming in, and the massive short liquidations. In last 24 hours, almost $1 billion of liquidations has happened. US Treasury's buyback announcement was the tipping point, and then a couple of more events happened during the same time. Trump calling in for pushing the Clarity Act in the White House. There was a meeting, and US Senate also passing one of the important provisions for this Clarity Act. Look at the last 7 days moves which is there, and of course these numbers are on the much more higher side now. Bitcoin, Ethereum and Solana. Also looking at the sector, the impact on Indian investors, what does it mean? The US Senate Banking Committee has passed the Clarity Act. So there is a little bit of regulatory help coming in. And if you watch things, these are the important dates which you should be watching out for going ahead as well. And these are something which you'll be tracking. Of course, more regulatory traction comes in. But the concern is always the transactions, scrutiny, and also some folks say that equity traders might move from the F&O segment to crypto as well. It'll be pretty interesting to track on that.
Kesha, thank you so much for putting that into perspective. For somebody who is tracking this very closely, I'm sure is going to be happy about the moves that we've seen in Bitcoins for the last couple of days. But, Vinay, I'd like to come to you on Happiest Minds. It's almost at the day's high point. Almost an 8% uptick is what we're seeing. We heard Somit say that there could be a possible, M&A in this particular counter, and the existing promoters could sell their entire stake. Of course, this has been something that's going around and making rounds in the street for quite some time now. But even on a technical basis, if you look at the daily chart, there has been a cup and handle formation, has seen a breakout as well. What do you make of the charts? Do you think there could be a further upside despite of this 8% move?
Yes, so as you rightly said, there is a cup and handle pattern breakout, and it is sustaining above that level. The breakout was above 420, and right now the stock is at 447. And after a long time, this stock has surpassed its long-term moving average, 200 days simple and 200 days exponential moving averages, which were placed around 420 odd. So now it is looking strong. Definitely, it can extend its rise on weekly basis. It is closing on a very strong wicket. The next resistance I see for the stock is around 490. So followed by 525. So the way stock has underperformed, the kind of fall the stock has registered from its all-time high, it has been significant. So obviously, if even if it shows the meaningful pullback could be much sharper. So 490 to 525, this is the next resistance band for the stock. And looking at the technicals, we feel that the stock could extend this pullback rally up to those levels.
Okay, so that's with regards to Happiest Minds. The other one I want to look at is Hexaware Technologies. Likewise, a similar space. The stock actually saw a major downtick in intraday trade as we speak now. It's seeing cuts of 2%. What's interesting is the kind of volumes it's clocked in. Nearly 17 times, I think it's 20-day average, and this is the highest volume activity that has been seen in the kind of price decline. And after this sudden downtick, you did see volumes that normalized as well. Now, when you talk about IT as a space, Vijay, would you still say it's an avoid with the way fundamentals have been panning out, because valuations are absolutely mouth-watering? So everyone thinks of it that, okay, you know what, let's just nibble in, kabhi to paisa aa jayega.
That's the story with most of us. I would rather agree to it and, confess that, this happens. We find the valuations very tempting. ITC looks great, but, every time, even I think that should I nibble or even I buy stock in my own portfolio, but nothing happens. So we have to understand the fundamentals behind it as well. And I've been speaking quite vocally for the last 4-5 years that our IT companies were primarily service companies and they were not ready to build a product. And the product which was happening was around artificial intelligence, and they did not do the homework. So right now, globally, if we are positioned as a country, as a industry, we are still known as a service industry. We are not, any of the companies, so to say, have not come out with any product. Ola tried with a AI product called Kritrim and it failed drastically. It actually bombed and nothing happened there. So I think that, we are still on a journey to build a product around artificial intelligence. Coders are gone. Most of these companies, may it be Infosys or TCS or whatever, they were just doing body shopping. They were, sending cheap labor to various countries, and now most of them have packed their bags and have come back. So I think that this is a journey. Yes, the valuations are interesting for sure. And if somebody has to look at with a 5-year perspective, with a 3 to 5 year perspective, yes, you can look at TCS, you can look at Infosys or Wipro, which have, literally halved from their top. But again, the journey is a bit longish. You won't see a turnaround very fast. No fireworks expected in the IT space, according to me, until somebody comes up with a product and which is a global product and globally acceptable product, and we are able to change the landscape of the technology products which are happening nowadays with Anthropic and all. So, are we rubbing shoulders with the top companies of the world? No. Are we there as a AI competitor, AI product competitor? No. So yes, there would be, fireworks at times in the IT space, and then it would be languid and it would not do anything for some time. So I'm not sure how much time would it take. But yes, these companies are, IT bellwethers. They would definitely come up in a couple of years' time. Definitely, they would be, rubbing shoulders with the top companies in the world. But yes, the wait is longish. So if somebody has a 3 to 5 year perspective, yes, keep on nibbling.
All right. So that's the view, a comprehensive view, in fact, on the IT space coming in. But just to give viewers a perspective of where the indicative closing is kind of looking at, you have your Nifty just a tad bit higher than what it looked like at 315, around the 24 200 57 is what it's showing as of now. But we'll see as to how this ends. Bank Nifty, is also going to be an interesting one. Let's try to pull up the Bank Nifty as well.
Get that one. I think it's almost double actually. 75 points is what your futures is indicating. If you look at the cash, it's almost 150 points. Move 650 is what your NSE cash is indicating. Your indicative closing is almost 57,773. So more than 100 points for Bank Nifty is the kind of difference that you're seeing right now. Anything that you would want to add in terms of what the indicative is indicating for Bank Nifty versus the cash levels?
Yeah, so nothing significant. I think it is now getting normal and nothing major. There is no much movement. So 100 points Bank Nifty is just a fraction of percentage. So I don't think there is a issue from the cash because of the last settlement. So I would not take it anything. I would not read anything from it. So it is not a big difference. It's a normal. So I don't see anything big right now happening in the Bank Nifty and Nifty because of the cash.
What about All Cargo Logistics? Because there has been a significant amount of volume uptake and good levels coming in for this one. Do you think this is the end of the rally, or this will continue from here on?
Yeah, so from the lower level, it has gone up a lot. Like from 8 in the month of July, it was trading at around 8, and now it has come to 12.15. So significant rally is registered in a very short span of time, and I could see that the stock has reached to its 100-week exponential average, which usually acts as a strong resistance for many stocks. This only for this stock only. I saw that in the history it took resistance there. So around 12.60, 12.70, there is a strong resistance. So if somebody is holding a short-term trading position, one can look for partial profit booking because it is a strong resistance. But yes, once the stock sees the correction around 1080, 1070, one can again look for buying opportunity. But as of now, it looks quite overbought and near resistance.
Vijay, one more stock I want to talk to you about is IOL. The prices in terms of the key products it deals with have jumped 30 to 40%, and I'm talking about isobutyline, MTBE, 35% jump in China. What would you advise investors to do with this counter, because it's a very interesting one?
Yes, it is, and the stock has done stupendously well in the last 5-6 months. I think that there is still steam left. If you look at the longer term charts, if I'm looking at that, so this stock has almost touched its high of 175. But fundamentally speaking, the company can still do well. It can cross 200 also. So if somebody wants to buy with a medium term perspective, yes, it can definitely go up from here as well.
Vijay, what about Urban Company? There was a UBS initiating note today with a target price of 180 on this one, and it's rallied because of that. And what they're saying is that it's India's largest home services platform. It's saying that it's the Blinkit of services is what they're calling it, and they believe that it has the forefront of this evolution and see right product market fit, strong balance sheet, execution track record has also been very strong for this one, and believe market is not fully appreciating India's home services growth acceleration is what they believe, and that's why they've initiated coverage with an buy rating on this one. Do you agree with this view for Urban Company considering the valuations as well?
I'll take a couple of more minutes. Zomato was trading at 40 a few years back, and then my view was that there are changing lifestyles. People have changed the way they have been working, they have been thinking. Housewives prefer to work outside nowadays, and they are not able to cook at home. So companies like Zomato would change the landscape of eating or eating out. So eating out has become kind of redundant. People don't go out and they get the outside food home. Similar is the case with Urban Company. So I think that changing lifestyles, patterns, the way people think. So these companies overall, with their landscape of services which they are offering, they would do well in the longer term. In the short term, yes, there could be some amount of pain. But again, if I look at the longer term picture of next 5 years, people are clinging to online services. And, so there are, quick service restaurants now. There are, many kinds of things which people are doing online, Blinkit and Zepto. They have actually changed the lifestyles of people completely. And so is Urban Company. So people would rather, calling their AC repair wala or the sofa repair wala or something, some odd jobs which you need to do at home. So they look at a one-point contact, and Urban Company does that kind of business. I think if you look at the 4-5 year perspective, any downside in the stock should be lapped onto. People should buy with a longer term perspective. We have seen what has happened to internet companies starting from Paytm.
Yeah, but then now you have the likes of a Tukaram Munde who are looking at the Blinkits and the Zomatos of the world as well and making sure nothing goes wrong on that front, right? So I think another lifestyle change which is in the offing.
It's always good to set the house in order.
Absolutely.
So it is towards the betterment of the entire supply chain.
No, absolutely, 100%.
Because this sector has blasted, it has grown at such a scorching pace. So there are certain things which are unlooked. So
point taken.
Need to focus on the hygiene piece, because people are actually ordering things to eat.
No, absolutely, Vijay. This was just on a Friday lighter note as well. But thank you for joining in, Vinay and Vijay, on the show. Always a pleasure, and have a great weekend. And we just have those closing rates that are on the screens right now. Almost a 17 points uptick in terms of Nifty 5024 252. But I'm happy that we've not broken the support levels there. And Bank Nifty as well, 112 to 14 points is the kind of difference coming in there. 57,762 is what you're tracking in terms of closing rates on Bank Nifty as well. But quickly over to Sharad to take us through in terms of what the FNO data is also indicating at this time.
Well, right now we are indicating a very flattish kind of a close, and that was there. But Nifty Bank is having much better technical setup and a sustained buying on the last two trading sessions. Important levels have been maintained. If you look at the differences, not much, around 17 point gap coming in and 110 plus point gap coming in for Nifty Bank as well. Looking at the cash gainers, we are of course having Apollo Hospitals and Bajaj Finserv. That is where the action is on the higher side. Let's pull out the Nifty losers also. A little bit of sell-off coming, especially in the consumption names, and Interglobe Aviation also makes it to the list. But there are two important levels which I should show you. First is the 24,100 levels, both call and put. Let's have a look at that, where the action is open interest changes there. Especially the action is happening in this side. Also, let's get in the 24,200. That numbers are expected to be much more on the higher side, and look at that. This is where the action is coming as well. 24,300 if we can show, then we can show a bit better clarity also of what the action is. And yes, this is where the call action is being put as well. But nevertheless, a decent trade day coming in for Nifty, but Nifty Bank's technical setup is good.
All right, and we'll take a look at that, and we'll also see how the week has ended for all key indices. But let's quickly pull up how we've ended for the day at least. pretty much flat. Slight moves, upward moves is what we've seen on the Nifty 50 around the 24,250 levels is where we've closed at. For the Bank Nifty also around 57,760 levels is where we've closed, up by about 0.5%. So good move in the last 15 minutes is what we've seen for the Bank Nifty at least. Let's also see the mid cap 150 and the small cap 250, the broader end of spectrum, because the mid cap 50 did turn into green at least from the red. So that's a slight positive sign, but the small cap 250 has outperformed, up by about 0.4%. The Nifty 50 heat map as well, and then we'll take a look at the weekly setup as well as to how things have fared. Power Grid still topping that chart on account of an order win that could come in for this one. HDFC Life has done well. Kotak Mahindra, Nestle back in the green. BEL also done well. But on the flip side, you have something like a Trent, Maruti, Indigo, Infosys that continue to be under pressure. But let's take a look at how the week has also ended, because it's been a flat week for the benchmarks per se. The Nifty 50 hardly, a downtick of around 0.4% versus where it was. And it's been a topsy-turvy week, though we did see almost touching the 24,000 levels and now come back to the 24,200 levels and above. The Bank Nifty has seen just mere gain of about 0.6% for the week. The mid cap 150 and the small cap 250 as well, quickly if we can. The mid cap 150 again flat, just gains about 0.1%, and the small cap 250 is where there has been slight positive momentum, up by about 0.8%. So that's how the week has ended for the markets. Hopefully a better week awaits for us the next week. Definitely the primary action is going to remain very strong, but with that we're completely out of time on this edition of India Market Close. From everybody who puts the show together, of course from the Suzlon studio, thank you so much for watching and stay tuned.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters. A world of questions. Ideas that challenge the ordinary, conversations that connect countries and cultures, where different worlds find common ground. NDTV World brings Nepal's ideas to the world. NDTV Anviksha, Ideas Across Borders. The Nepal Dialogue, 27th August, Kathmandu, Nepal.
Welcome to India's biggest grassroots innovation movement.
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
स्पंदन एक पोर्टेबल ईसीजी मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रास रूट इनोवेटर दिखेंगे वंदे भारतम में, कमिंग सून ऑन NDTV Profit.
Some of my friends and many of my critics called me arrogant. My philosophy is very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
Man lo.
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
Most of the earlier waves on technology, whether it was cloud or whether it was SaaS, much of those waves actually scaled transactions. AI is going to scale decisions. I see the AI revolution not to be one of a software revolution. It's an infrastructure revolution. And what I mean by that also is that AI cannot sit on top of legacy infrastructure of enterprises.
Buy now.
Sell immediately.
Hold it, boss. Buy now. Sell. Hold. Buy. Sell immediately.
A major change has actually quietly arrived in the Indian stock market, but its impact could be felt by every trader, investor, mutual fund holder and F&O participant. The closing auction session, or CAS, that has actually changed the way the official closing price is discovered for the F&O stocks. Now, instead of relying on the volume weighted average price in the final 30 minutes of trade, exchanges now use a dedicated auction mechanism to determine the closing price based on actual end of day demand and supply. Now the question is that the change may actually sound very technical, but it actually affects something extremely important. Yes, I'm talking about the closing price. That closing price is used for portfolio valuation, mutual fund NAV calculations, your ETF valuations, your index computation, and the settlement of derivative positions. For active traders, it could alter the end-of-day trading strategies. For investors, probably it could improve the price discovery and reduce the risk of last-minute price distortions. But the question is, will this really make markets fairer? Will retail traders benefit, or will institutions continue to dominate the closing auction? Could volatility actually increase around the market close? And how should retail participants adapt to this new regime? That's the question. Joining us on the show for a detailed discussion around this and what retailers should focus on, Feroz Aziz, Joint CEO at Anand Rathi Wealth, Venkatachalam Shanmugam, partner at MC Cube, Kamlesh Shroff, National President at ANMI, and Shai Coelho, founder at VTrender, will be joining in as well. Welcome to the show, gentlemen. Always a pleasure to speak to all of you, as to answer all these questions. And we have an exceptional panel that we're talking about. But before we do all of this, we should be actually going across to my colleague, Nimit, who will be standing by to tell us everything that we need to know so far and all the action that the SEBI has taken as well. Nimit, over to you.
The closing bell is supposed to mark the end of your trading day. Instead, this new one has started a state of panic and confusion. Now, just 2 weeks after India launched its new closing auction session, SEBI has passed an interim order which has found people guilty of manipulating the system. JP Morgan-backed Copthall Mauritius, as well as India's Mansi Shares and Stock, an Indian broker, have been found guilty of using aggressive auction orders to influence the Sensex closing price on expiry day. Now, for regulators, this has cemented a belief that there are those out there looking to manipulate the system. But this has also concretized their own belief that they have the ability to identify, track, and find and punish these people. For the market, it raises a much larger question. Is CAS here to solve a problem, or is it creating a larger one? SEBI announced one of the biggest changes to India's market structure in years. Instead of calculating closing prices using the VWAP of trades in the final 30 minutes, eligible F&O stocks would discover their closing price through a dedicated auction. The goal role, stronger price discovery, better execution for large investors, and making it harder for traders to influence settlement prices with last-minute trades. On day one, Nifty's closing prices jumped nearly 200 points from where regular trading ended. Traders complained of confusion, institutions couldn't execute, and cash and derivative prices in their markets seem to be completely disconnected. Some market participants even called for the rollout to be paused, but SEBI wasn't backing down.
Some of the concerns that people have also that their own systems have not updated yet. Many of their historical systems have been built on the VWAP system, the algos and the guidance which the people are using, the traders. So certainly they would not really have that sort of benefit, but the market players would tune it. The cash is here to stay for sure. Only we will see if there are certain constraints or certain issues that we can improve. Certainly we will look into it.
SEBI continuously met market participants and their message was clear. Improve participation, improve awareness, deepen liquidity and make the auction more representative. At the same time, exchanges were asked to share trading data as SEBI reviewed first week activity for signs of manipulation. But finding manipulation was hard. How to show that the intent was not simply to make profit but to game the market? The SEBI chair addressed these concerns.
एक बात हम स्पष्ट करना चाहते हैं कि कैश जो है उसमें यदि लोग मैनिपुलेशन करते हैं तो हम उसमें कड़ी कार्रवाई करेंगे और तुरंत करेंगे और कैश सिस्टम में मैनिपुलेशन पकड़ने के आसान मतलब जो हमारा वो है वो ज़्यादा अधिक है हमारी कैपेबिलिटी पुराने वीवैप सिस्टम से की अपेक्षा जो कैश सिस्टम में हम relatively easily manipulation को पकड़ सकते हैं.
The closing auction session was designed to make India's closing prices more reliable, more transparent and harder to manipulate. But the first 2 weeks have shown that with new price discovery actually come new risks, more volatility and new levels of regulatory scrutiny. Now the ultimate success of cash depends really on two things. One, the buy-in from the market, whether participation can grow and grow fast. And two, how fast SEBI can identify, track and punish those trying to game and manipulate the system.
I think lots brewing in terms of the gap and everything that's happened so far, but let's get it to our expert panel as well to actually understand what is happening and how should a retail investor look at it. Feroz, let me come to you first. My question to you is, you're talking about the impact of cash where we've seen everything that's happened. This is the third week where cash has become effective as well. Do you think from a retail investor's perspective, what is that most important thing they should be watching out for now?
I think several things they can be watching out for. See, a retail guy could be doing three things. He could be investing directly in stocks, doing derivatives or buying mutual funds. I think in all of them, he gets impacted positively. See, basically, cash is nothing but a manipulation protection and it is nothing new. IPO prices are determined using the same mechanism, if not identical mechanism. When an IPO is expected to be listed, what happens between 9:15 and 10 o'clock? 10 o'clock is when people ring the bell and say this is listed and there is a listing price arrived at. That's exactly the auction mechanism on which the listing, like when we got listed way back in December 21, there was a listing price of 584, if I'm remembering right. That was arrived at by actual auction. So why are people so surprised that why we have to learn something new? When it comes to IPO, India has been participating in IPOs for so long. That's point one. Point two, if you are a mutual fund investor, there couldn't be a better news. What used to happen is in the VWAP method, which is volume weighted method, mutual fund guys would run an algorithm to get their buying. They want to buy 100 shares. They would put an algorithm to buy it exactly in the same volume weighted so that they get the same closing price. There was an error there always. So now they don't have to worry at all. So long-term investors ka window alag ho gaya. Trader ka window. Traders can enjoy the market from 9:15 to 3:15. For derivative stocks, if I'm an investor, I would not be worried at all from 9:15 to 3:15. You've relieved the pressure of an investor who's a long-term investor and saying 15 minutes mein mera kaam ho jayega, whatever shares I have to buy, I will buy it at the auction, I will sell it at the auction, no timing is needed, is everybody what they say. Every fund manager says timing is not important. So that relieves the fund manager's dealer by 6 hours practically. So that's point 2. Point 3, I think medicines don't taste good ever. And this is absolute medicine, right? In naked eye, you could have seen 2 types of manipulation. One was passive index rejig manipulation. I've said this on a couple of articles. You can see it through naked eye. You don't even need microscope to see what kind of manipulation used to happen in 4 month ends. Feb, May, August, and November, when MSCI rejigged, on the last half an hour, you will easily see dealers are doing some manipulation. Second thing which used to happen was an expiry. So SEBI has done 7 things to cater losses, and that's how they've succeeded. Finally, after a 41% rise in option losses for retail, now it has come down by about 17-18%.
Right, Feroz, an interesting point that you make as well over here when you're comparing it to the IPO, and 2, when you're talking about the impact that could happen in terms of mutual funds as well. Let's understand from a retail trader's perspective, where a lot of times you see retail traders who want to really execute in the last 15 to 20 minutes, and this is basis the entire day's momentum that you've seen in terms of stock prices. Now the question is, on the back of introduction of CAS, does that actually change that retail trader's strategy, number 1? And could investors see situations where the last traded price, which comes in at 315, is significantly different from the final closing price that is discovered through this auction? And what should they understand in such cases? I would want to actually take this question with Shai Coelho as well, who's the founder of VTrender, who understands this space pretty closely. Shai, over to you.
So I would like to say over here, Hiral, when we are looking at it from a retail point of view, the retail trader who's invested in the equity side of the market, for him, nothing has changed in the month of August. The bigger impact has been for the trader who trades the derivative side of the market. Now, what has happened is effectively his 15-minute window between 3:15 to 3:30, and this is very, very important when it comes to the settlement day. This is completely changed right now. And what has happened is that close on which his expiry positions, etc., was decided, the settlement was decided, that has effectively changed. So this involves a change of strategy for him as a derivatives trader. Now, what has actually happened is, beyond all this talk which has happened about Copthall and Mansi and the manipulation, etc., and I would not use that word manipulation over here, but what we are talking about is a derivatives book, which is roughly about 30,000 CR, 30,000 crores of trades, the premium which is being traded every single day. When it comes to the Nifty settlement, that premium rises to about 70,000 odd crores. Now, this trading book, this derivatives book, is actually being signaled to a close by an auction book, which is what the CAS is, which is a very, very small number of the market. In fact, I just want to supply some data points to you. And if you look at, we've done about 15 sessions since CAS began on August 3rd. And we got 15 days of data with us right now. And those 15 days of data point to CAS on the NSE, the stock exchange, being about 1,200 to about 1,400 crores in CAS turnover. Now, this is very, very different from what we have from 9:15 to 3:15 p.m., which is roughly about 60,000 to about 80,000 crores of cash traded. Now, what you're seeing if you look at it from a point of view of a percentage, this 1,400 CR, which is last settlement of Tuesday of Nifty, was about 1,600 CR. This 1,600 CR is what, 1% of the total cash traded volume, but its impact is a lot more. So this 1% now impacts a derivative book of traders, of retail traders, institutions also, the prop funds also, which is traditionally been about 50% of the index. So if you talk about cash turnover being about 80,000 to about 100,000 CR, the derivative side of the market was always, in terms of premium traded, about 50,000 CR. And most of this traded volume was dependent on a closing price to arrive at a decision whether it was going to be a hold or a close. So most of the prop desks and all, they used to wait till 3:30 p.m. to arrive at a fair closing price. Now, what has changed from August 3 is that these traders are now forced into an auction on which they don't have much role to say. And if you looked at what happened at Sensex yesterday, Sensex cash volume was about 46 CR the volume which got traded between 3:15 and 3:30 p.m., 3:20 and 3:30, that was about 46 CR. So we've reached a point in the market where we are saying 46 CR is going to decide what happened between 9:15 and 3:15 p.m., which is when traders open their derivative trading position.
Some of my friends and many of my critics called me arrogant. My philosophy is very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
Man lo.
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
A new Nepal, new possibilities, a new opportunity for regional cooperation. NDTV World brings together the voices defining the next chapter of India-Nepal relations. Nepal's Foreign Minister, Shishir Khanal, Finance Minister, Dr. Swarnim Wagle, Dr. Shashi Tharoor, actor Manisha Koirala, and Dr. Ram Madhav. Diplomacy, commerce, security, infrastructure, tourism, soft power. NDTV Anviksha, ideas across borders. The Nepal Dialogue, 27th August, Kathmandu, Nepal. 3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV when it really matters.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
Most of the earlier waves on technology, whether it was cloud or whether it was SaaS, much of those waves actually scaled transactions. AI is going to scale decisions. I see the AI revolution not to be one of a software revolution. It's an infrastructure revolution. And what I mean by that also is that AI cannot sit on top of legacy infrastructure of enterprises.
Buy now.
Sell immediately.
Hold it, boss. Buy now. Sell. Hold. Buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editors Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Your first move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up.
Market ends on a tepid note after trading in a range throughout the session. Nifty manages to stay above 24,200 levels as metal gains and IT auto stocks drag. Index ends 0.5% lower for the week. Oil prices have pulled back slightly but remain on track for around a 6% weekly gain, with Brent about $93 per barrel mark. The rally is being driven by US economic pressure on Iran and fresh concerns over possible supply disruptions around the Strait of Hormuz. Gold financiers gain as rising gold prices and a positive JP Morgan initiation lift the sentiment across the sector. IIFL Finance led the gains, while Muthoot Finance and Manappuram Finance also moved higher. Sugar stocks after the government allowed duty-free import 1 million tons of raw sugar. The move aims to boost domestic supplies and cool record high prices. Ahead of festive season, Centre asked states to enforce sugar stock limits from September 1st, capping bulk users at 15 days inventory with strict monitoring, physical checks. As India gears up for National Space Day, Paras Defence's Amit Mahajan says the sector's future rests on indigenous innovation. He urges to focus on core technology and aim for global scale capabilities. Hello and welcome. This is Profit 360 on NDTV Profit, and I'm Himakshi Bahugna. Along the next half an hour, we'll bring you the latest from the markets as well as national and international news. And let's see how the markets have fared today first. So viewers, markets have ended the week on a soft note, with Nifty slipping over 0.5%, though it managed to hold about 24,200 levels. Metals have offered support while IT and auto stocks weighed on the sentiment. Broader markets have outperformed the benchmarks, with small caps extending gains despite mixed sectoral trends. And for the complete market roundup, we have my colleague Jasmeet Singh. Hi.
Well, during the cash, the Nifty has gained about 17 odd points and gains and ends in the green trajectory. If you look at the Nifty 50 during the day, while it was a flat day for markets today, Nifty 50 ends flat and gains about 20 odd points. In terms of the top gainers in Nifty 50 in today's trade, we do note stocks like Power Grid and HDFC Life Insurance both gaining the most, where Power Grid led the gain and gained about 3 odd %. While when we look at the markets during the week, we again had a flattish move for Nifty 50 during the entire week. We do note that the overall Nifty 50 ends in red and loses about 0.5 odd % during the week. In terms of the top losers in Nifty 50, we have stocks like Tata Motors and Infosys both losing the most, where the entire IT pack also was in red, and that's why we see the impact coming in terms of the overall performance of the Infosys. In terms of Tata Motors, we do note that Tata Motors loses about 5 odd % for the week. Tata Motors PV side of the business. Now, if we look at the broader market, while the broader markets have outperformed the benchmark in this trade, while we see Nifty Midcap 150 ends flat, while Nifty Small Cap 250 ends in green for the week. Now, in terms of the top losers in Nifty Midcap 150, we have stocks like Voltas and Hexaware both losing about 6 odd % for the week. And in terms of the top gainers for Nifty Small Cap 150, Small Cap 250, we have stocks like Welspun Corp and Jyoti CNC both gaining the most, where Welspun Corp sets a record and gains about 23% for this week alone. While look at Jyoti CNC, that gains about 19.5 odd %. If you look at the key sectors, the sectors end on a mixed note. If you look at the top losing sector, we have Nifty Metal, which emerges as a top gaining sector, which gains about 1.7% in terms of top gainers in Nifty Metal. We have stocks like Welspun Corp and Hindustan Corp both gaining the most. Now, if you look at the other side of the coin, the top losing sector, we have Nifty IT in the picture, where Nifty IT loses over 2.7% for the week. And in terms of the top losers in Nifty IT, we have stocks among TCS, Infosys and LTM as well. Now, if you look at the key trends for the week, we did note that Nifty PSU Bank, Nifty FMCG, Nifty IT loses the most for the week. We're down about 1.5%, while Nifty Realty marks its second consecutive week for gains. When you look at Nifty Financial Services, that snaps its 2 weeks of losing streak and ends on the greener side of the market. Now, in terms of the other key trends, we do note Nifty Auto, Nifty Oil and Gas, Nifty Pharma, Nifty PSU Bank and Nifty IT were down for the second week in a row.
Thank you so much, Jasmeet, for that. And viewers, BSE is looking to expand its product line through a tie-up with MSCI, potentially paving the way for futures and options linked to globally tracked indices. We spoke to BSE MD and CEO, who sees strong potential for investor participation in MSCI indices and says that the move responds to growing demand from market participants for broad-based indices. Let's listen into his exact remarks.
To have a broad-based index in India, where so many foreign investors are investing in MSCI India stocks, if they were to hedge and if they have an index in India itself in rupee base, it will be helpful for them. And for such of those people in India who want to take a broad-based index exposure, it will be better if we use an index like MSCI India, where there could be good amount of activity because of the foreign participation, if we could think about.
We are switching gears now. The closing auction session, or the CAS, is now at the center of a wider debate around price discovery and market manipulation. SEBI is saying that new mechanism can really help make closing prices more transparent and reflective of the genuine market demand and supply, while also giving the regulator better tools to detect any sort of attempt at manipulation. But how exactly does the system work, and why has it sparked so much discussion? Let's go across to my colleague Nimit to understand the details of this curious case of CAS.
Now, 2 weeks since CAS has been implemented, there's been a lot of talk about manipulation, about volatility, whether SEBI will be able to track it. 2 days ago, the SEBI chairman in an address said that they are now in better position than ever to track CAS manipulation. And the same evening, they came out with the first ex parte interim order. Now, what the CAS order says is that it flags sex manipulation during the August 13th closing, the expiry day. It was the two stocks in particular that we'll come to see. Copthall Mauritius Investment is the first company. Mansi Share Stock Broking is the other. Mansi Share Broking is, of course, an Indian broker, and Copthall Mauritius is linked to JP Morgan. And the SEBI has impounded 3.68 crore and barred both entities from the equity CAS for this time period. Now we need to understand how we got here. Now, SEBI noticed that there were 3 particular spikes and then a gradual drawdown on the August 13th price examination. Now, if we look at spike number 1 here, you can look at spike number 1 here. Spike number 1 shows that the price rose about 362 points in a matter of 2 seconds. Then we move to spike number 2. Spike number 2 shows that the price jump was about 132 points in a span of 12 seconds. Then we move to spike number 3. Spike number 3 was 405 point movement in a 28-second window. Then we move to the gradual drawdown here. If you look at this gradual drawdown, now these are independent. If you see the spikes, the price moves up, the drawdown, the price comes down. Now these were the actions of the 2 different set of traders that we mentioned earlier. Now let's understand what Copthall Mauritius did to boost this spike up. Now, okay, first we're going to Mansi. So Mansi placed sell orders below 1.5 to 3% below the reference price. Now, this is where the drawdown came in. They placed these orders below the reference price, and contrary to, and there was a manipulation intent that was shown because they sold those orders. Now, Mansi placed the sell orders for about 12.65 lakh shares. After placing those, those were spread across 8 Sensex constituents, and the total sell order value was 143.43 crores. Then the important bit, how we show that this was not simply a good move to make money in the market versus manipulation or an attempt to aggressively change the price here. Because Mansi cancelled those orders, 99.06% of those orders, and those cancellations occurred in a small short period between 326.02 and 326.05 in a matter of 3 seconds. Now, for Sensex manipulation, what needs to be seen? Now, Copthall here held synthetic long positions in index derivatives. This means that they specifically held those positions. So if they could boost those prices up, then they could make a lot of money. And at the same time, they would not have to pay out the sellers eventually. That's the economic motive that SEBI looked at here. It's not only motive to manipulate, but economic motive that is key here. The other thing we have to look at is the higher Sensex price. It boosted their chances of making more money. Now, Copthall also put options on payout obligations. Now, what this means is that the rising index for Copthall would mean a larger payout. Now, we need to understand lastly that the Sensex should have closed at 77,840 but closed at 78,080, and that was the big number where SEBI found the gap here.
Thank you so much, Nimit. In fact, we also spoke to market experts on the new closing auction session and whether it can truly improve price discovery. ANMI President Kamlesh Rao flags the risk of volatility and manipulation if liquidity is low. Let's listen into his remarks.
Brokers need to, start queuing up orders, which is between 315 to 320, is something that will give the breadth the book, because as my previous people all mentioned, and we all know that markets only strive on liquidity. So if there is no liquidity, there are chances of any kind of manipulations. Manipulation is a very strong word, but people may want to try to take an opportunity by the +3, -3 band, and because of that there could be volatility.
Switching gears now, viewers, and shifting our focus to sugar stocks that, as the government takes another step to curb soaring sugar prices after tightening stock holding limits. My colleague Sharad is here with more details.
Well, the rising surge in the sugar prices has made government take important steps, especially the most recent one is that India is allowed 10 lakh tons of raw sugar import, and this is coming in after the decade. Of course, there is an issue coming on the rising prices and the stability of the stock for sugar, and this will continue till October 31 under the tariff rate quota. Also, the move is aimed to enhance the domestic availability. The government's first measure, which was there on August 19, was tightening the stock holding limits, now ordering the dealers who use more than 10 tons of sugar a month to not hold their inventories more than 15 days. Now, the domestic prices, they are also up. You could say almost more than 20% in the August month itself, touching that 5,300 to 5,500 rupees per quintal. And also from July onwards, the number is more than 50%. The retail prices, that's also up 40% just ahead of the festive season, with a price hike of 40 to 45 rupees in July and almost 65 to 70 rupees in the month of August. Going ahead, today we saw sugar stocks profit booking coming in, but of course there was a volume based buying earlier in the week as well, and more government interventions are likely. But from 2026 lows, you can see on the screen the important up moves of the sugar stocks rallying between 20 to 80%.
In fact, viewers, the government is also tightening its grip on sugar inventories as it looks to keep prices in check. The centre has asked states to strictly enforce stock holding limits on bulk sugar consumers from September 1st. Consumers using more than 10 tons of sugar a month will be allowed to hold only 15 days of inventory. States have also been asked to closely monitor compliance and carry out periodic physical verification of stocks. Any violation could invite action under the Essential Commodities Act as the government steps up efforts to curb hoarding and also ease pricing pressures. In fact, sugar prices that have surged 50% just as the festive season kicks in, pushing the sweet shops, bakeries and kirana stores also to raise prices. My colleague Ridhima has filed a ground report. Let's have a look.
Sugar prices have risen from 40 to 45 rupees in July to now 65 to 70 rupees per kg. This has mainly happened due to the divergence of sugarcane towards ethanol. Now we are here in Dadar to understand what has been the impact on the sweet shops, the bakery shops and the kirana walas as the festive season is coming and the sugar prices have risen over 50%.
ये लोग पैसा अलग से रखते हैं क्या
तो पहले 5 रखते थे, अब 7 रुपए रखेंगे। कोई किसी को फर्क नहीं पड़ेगा, सब चलता रहेगा।
शक्कर बहुत कष्ट हो गया, रेट पूछ के जा रहे, अभी सब रेट सेम हो गया है शॉप में, तो पूछ के जा, कोई ले रहा है कोई नहीं ले रहा है। जितना कस्टमर हम लोग को भी सुना रहे कि इतना भाव कैसे बढ़ गया। हम लोग को क्या मार्केट से जो भाव थे हम लोग वो भाव बेचते हैं। हम लोग अभी आज ये हम लोग को 30 to 50 में है, हम लोग 65 में बेच रहे। लेकिन ये जो ऑनलाइन का सिस्टम है वो ऑनलाइन में नहीं मिल रहा है। शक्कर भी ऑनलाइन पूरा स्टॉक ही नहीं मिल रहा, मालूम समझ में क्या हो गया, स्टॉक ही नहीं मिल रहा ऑनलाइन में।
हमने अभी 60 रुपये बढ़ाए 1 किलो पे। चीनी के भाव बढ़ते हैं तो हमने भी 60 रुपये 1 kg पे बढ़ा दिया।
हम लोग 10-20 रुपये बढ़ा दिए खाली, जो भी मटेरियल हम लोग है 10-20 रुपये। हाँ, केक्स वगैरह ना ये सब, नान खट्टा कारी ये सब में 10-20 रुपये बढ़ा दिए ये लोग। लेकिन 500, 1000, 2000 अभी कितना शक्कर का कितना कम था, अभी फिर वापस बढ़ गया। वो बोल रहा है 80 तक जाएगा।
शुगर का भाव बढ़ गया है, लेकिन शुगर लेने वाले चाय के लिए, कॉफ़ी के लिए, स्वीट्स के लिए शुगर तो ज़रूर है, तो लेंगे। जस्ट लाइक गोल्ड, वेडिंग सीजन, इसके लिए तो गोल्ड लेना पड़ता है, कितना भी महंगा, ज़्यादा नहीं तो कम से कम तो लेना पड़ता है।
Now for the festive demand, the traders have told us that there might not be much impact on the demand as people would still go ahead and buy certain items, the sweet items, especially during the festive season. Now we also have to keep a close eye on the commentary of the government on how they're able to curb this issue of sugar prices and manage the demand and the supply of sugar.
And viewers are shifting focus to commodities now. Oil extends strong gains this week, up 6% with Brent above $93 and WTI on a 5-session winning streak as US makes fresh threats of economic sanctions on Iran. Now gold is also shining and is eyeing a third straight weekly gain, an 11% monthly surge holding above $4,000. To understand this further, let me bring in my colleague Shreyansi, who has been tracking this sector very closely.
Well, absolutely. When you talk about oil prices, they've notched quite the gain on a weekly basis. So you're looking at 6% in terms of the weekly gain if the momentum really continues. And there's no signs telling that it might really be derailed at any given point in time, given that Brent right now is very close to $93, $94 a barrel, which is the kind of range that we've been seeing off late as well in the last few days. When you talk about the rally itself, this year it's crossed about 50%. So that should tell you about the momentum as well, extending a 5-session winning streak, even when you talk about WTI and not just Brent. So that's the picture that you're looking at. When you talk about factors to watch out for, of course, Hormuz makes it to the top of that list really. But other than that, US sanctions could really be disrupting some of the flows, and that's also something that you're keeping track of. Add to that the diplomatic resolution that will make things complicated for oil prices and, of course, simpler for consumers. But when you talk about gold prices, they're also keeping the momentum quite steady right now, despite gold being the safe haven asset. So you're looking at the third straight weekly gain coming in for gold prices, about a 4% weekly advance that you're looking at, and the monthly rally is also reaching close to 11%. So that's something that you have to keep in mind, holding above that $4,000 an ounce level as well. So that's the key level that's being maintained, despite that weekly gain as well that you have coming in. So other than that, in terms of the factors here, you do have the treasury buybacks that have been quite the factor, keeping the fiscal concerns elevated at this point in time. Add to that everything that you've been considering for oil prices, for gold as well, and so energy prices really reviving some of those inflation concerns, also something that you're watching out for closely in terms of factors for gold.
Thank you so much, Shreyansi, for that. And viewers, according to sources, 29 FDI proposals worth nearly 5,000 crore rupees have been reported since PN3 relaxations in May. My colleague Rishabh Bhatnagar explains how the eased norms are accelerating the investments across sectors.
Right, a very interesting development when it comes to the sort of FDI inflows that India has been seeing after the PN3 relaxations that were carried out in May by the Finance and the Commerce Ministry. Of course, what we had was that with companies that had investors